All righty, are we live? Wait for it. Wait for it. Where is it? Up, I think it's there. Oh, there it is. Good morning, ladies and gentlemen. I hope you're having a wonderful day. If you're watching this and it does not say live at the bottom of the screen, unfortunately, you're watching the recap. The good news is we are live Monday through Friday, 30 minutes before open. Drop your thumbs up on that video. Make sure you're subscribed. You're on mobile. Press hard chat. X out the chat. Hit the thumbs up button. Second link for the nightly watch list and main channel. And shout out everybody watching the watch list, baby. And first link for the Scream Alerts boot camp and real estate course. But ladies and gentlemen, you already got a little bit of data here to start the morning. This one was the ADP jobs print, and that one came in a lot stronger than expected at 235,000 jobs added versus 150. And although it's a new methodology, it still pretty much had a negative effect. And then on top of it, this little candle, that was the jobless claims, and that one also came in better than expected, a lower number, aka all of the jobs data came in stronger. Market took it negatively, especially after the minutes. And kind of keep in mind where we are following the minutes as of yesterday. So there was that. We're still going to have the PMIs. I actually went short on the jobless claims. On two MNQs, I kept it small since we are already down about 0.5%. I think sometime in the morning or pre-market last night, on the futures, we were up a little bit more, but overall, not the best print. It's leading us up into tomorrow. It's already Thursday, but tomorrow is going to be a big one with the non-farm payroll. So we still got the PMI data. 15 minutes after everything gets started. We're going to go from there, see how the market takes it, see how the bonds take it, and then we're going to see what happens. But yeah, there's a couple of other pieces of news. We'll get into it. Everything from both SI to Bed Bath & Beyond. You even had an Italy inflation data that came in lower than expected, but not as much as France and everything else. But overall, this might be our first red day of the year. I think we already had a red day. I don't know how to explain it, man. But Chatadonia, I hope you're ready. I hope you're in drive, and I hope you know you're blessed, baby. Okay, so pay yourself that 10%. Amen, amen. But good morning. How you living? What's up, Drew Ross? What's up, JJ? What's up, Maria? Oh, how you living, Chad? Stock trading. Wesley O'Neal. Last one. No step on neck. TTF co-rookie broski, baby. Good morning. Rise and thrive. Tell them Blue. What's up, Dinosaur? What's up, Carissa? Good morning. How you living, man? Jordan. Oh, JM. Riley Mack. The chat is alive and well. Come on. Are you in drive or not, Chatadonia? What's up, Ari? What's up, John Doe? Ryan Saminio. Saminio? Is it Saminio? I like that name, Saminio. I'm probably butchering it. Jazz Deep, good morning, baby. What's up, Sylvester? Grannyville. What's up, KC? CG Trades, baby. Leo, RB, Moses, good morning, baby. Ultimate Gaming, Gangus. What's up, Sinalam? NPL, good morning, Chatadonia. Good morning. What's up, Slade? Good morning, Nate McAllister. Armando, Arturo, Philip. Oh, Chatadonia. What's up, man? What's up, baby? Y'all feeling good? I hope you're feeling good, bro. I hope you are feeling good. Wander it. Jim it up. NBA 2. Let's go, baby. Let's go. Mr. Figgy. Doeg. Arco. Chatadonia. Toriano. What's up, baby? Are y'all ready? What's up, Danny? You ready? Sarah, you ready? Oh, it's feeling good. I know. Everything's good, man. Let's go. Let's make the most of it. We need that Biden inflation reduction. Well, good morning. How you say good? I want good morning. Don't tell me. What's up? Oh, Dr. Suede. Let's go. Let's stack the bread. Amen, baby. Let's stay focused. You got to pay yourself first. Oh, what's up, Chatadonia? Match Henry Morales, Kobe McGuire. Oh, yeah, calls on mindset. The data was stronger than your mindset. No, actually, no, your mindset was stronger. It was strong data, though. It was strong data. And that's kind of how I think, again, because I think good and bad was confusing some people. So I think to make it very simple, you could just go about stronger or weaker data. I think that's the best way to describe it. And then you could always look at the market reaction, but hopefully, there's good news, bad news, good news, at least pertaining to jobs that won't change for a while. And I hope, you guys always take the time to look it up yourselves at the same time. But really, it was just strong data, bad reaction, and we could go from there, We could go from there. But Chatadonia, good morning. I hope you're blessed. Let's have another good day. Oh, good evening from Japan. Good evening. Good evening, my friend, but let us get into the news. Ba-da-bap-bap-bap. Yallah. So futures and treasuries slumped after ADP data showed private U.S. companies added 235,000 jobs last month, far exceeding expectations and keeping pressure on the Fed. Piper Sandler's Michael Kantrovins, ranked number 3 in last year's institutional investor survey, said he sees more downside for the S&P, 16% this year, as policymakers fight inflation. The dollar climbed, oil rose after sinking around 9% in the last 2 sessions. Bed Bath & Beyond fell more than 25% pre-market after they said they may not be able to continue as growing concern bringing in another retail chain to the precip of bankruptcy. It's looking to improve their cash position, and it said in a filing, but recurring losses and negative cash flow leave substantial doubt that they could stay in business. Standard Chartered pared gains as much as 21% after First Abu Dhabi Bank said that it was no longer exploring a bid for the UK bank. Amazon rose before the bell after it said it will slash more than 18,000 jobs. It was previously 10,000 jobs. Johnson & Johnson filed to spin off their consumer health business, which will be known as Kenvue. Western Digital climbed pre-market after they said that they're going to revive merger talks with Kioxia. A push in 2021 failed to yield what could have been a $20 billion deal. The Fed should press ahead with more rate hikes as U.S. inflation hasn't turned the corner yet, says the IMF's Geeta Gopinath told the Financial Times. She backs the benchmark rate rising to about 5% and remaining there through 2023. Patrick Harker, Raphael Bostic, and James Bullard may offer fresh insights when they speak today. Kevin McCarthy failed another 3 times to garner enough votes to become the U.S. House Speaker. FTX pushed hard to attract everyday retail investors before they went bust, setting its sights on a vast pool of money held in IRAs, according to an email from a top executive seen by Bloomberg. It gives a glimpse into how the damage might have been even worse had the plans had longer to gestate. Negative yielding debt is no more as Japanese bonds finally join peers in offering zero or positive income. The global stock or bonds offering sub-zero yields peaked at $18.4 trillion in late 2020, with central banks keeping rates at or below zero and buying debt. Now Japan investors are betting its uber-dovish monetary policy authority is inching towards normalization. 6 borrowers are looking to sell fresh IG credit today. Underwriters said Bank of Montreal plans to raise up to $3 billion. Issuers priced 32 deals this week for more than $53 billion. That's the highest since early September 2021. Underwhelming liquidity in the oil market has left prices susceptible to sharp swings. This week, WTI briefly broke above its 50-day moving average before dropping back below, a move that sparked more technical selling, adding to pressure and buildup of supply as investors wait the return of Chinese demand. Black Gold, Gary Ross estimates there is a glut of at least 1 million barrels a day. 9:20, we're going to hear from Fed Bostic. It should be soon. 9:45, December, S&P Global Services and Composite PMIs. 10 a.m., Mexico Central Bank Monetary Policy Minutes. 11 a.m., EIA U.S. crude inventories. 11:30, $45 billion of 4-week bonds and $45 billion of 8-week bonds. 1:20, Fed Bullard is speaking. 2 p.m., Argentina November industrial production. And then the CES event in Las Vegas. And you are going to be hearing from NVIDIA, Micron, and a few others. We will have that schedule. Someone remind me too. We'll get the times. As Ron DeSantis moves towards a possible presidential bid, he's expanding his fight against corporate America, this time going after big asset manager and Wall Street banks, and he's doing it all by ignoring his biggest rival, Trump. More on McCarthy. He proposed several concessions to advance his bid as U.S. House Speaker, CNN reported. This will include allowing one member to call for a vote to House Speaker and adding hardline Freedom Caucus members to House Rules Committee. Biden urges student debt relief plan backing. California braces for widespread flooding, and Colombia CPI accelerates more than estimate. Italian inflation slowed, mirroring a trend across Europe's major economies. CPI eased to 12.3 in December from 12.6. In line with expectations, Polish inflation declined to 16.6 from 17.5. And again, remember, UK, France, and Germany, they all had bigger drops, but at least Italy dropped too. But this one time, very small. The UK government will announce legislation in the coming days to allow employers to fire striking workers in essential sectors and sue trade unions if they fail to provide a minimum level of service. People familiar said some of London's biggest railway stations are shut down today, while airports such as Gatwick are also deprived of train services, and strikes reach a critical peak. British business leaders see inflation and wage growth accelerating in the years ahead. A Bank of England survey found year-end inflation expectations climbed to 7.4 last month from 7.2 in November, and wage expectations rose 0.5% to 6.3. A separate report by the British Chamber of Commerce found just 1 in 3 of almost 6,000 companies expect profits to increase in the coming years, and 36% expect a decline. China will gradually reopen their border checkpoints with Hong Kong and Macau from January 8th. Beijing will also cancel flight capacity limits from 2 cities and resume transits to mainland. Hong Kong set a daily maximum limit of 60,000 people allowed to travel into the mainland, and those coming into the mainland will also need to show a 48-hour negative PCR test result. Thai inflation picked up to 5.89 in December. Philippine price gains accelerated to 8.1 in China. Caxton Services PMI came in at 48, a slower pace of contraction than the previous 46. Japan's monetary base fell 6.1 year on year, while consumer confidence strengthened. Singapore's retail sales rose 6.2 in November, missing estimates. More oil news is that U.S. crude inventories rose by 3.3 barrels last week, the API is said to have reported. Colonial shut its Line 3 refined products pipeline, a critical supply conduit to the U.S. Northeast, for unscheduled work, according to a shipper notice. Services will resume on Saturday, and Vonda Insight says OPEC may make deep cuts if Brent threatens to drop below 70. Chinese coal buyers began asking traders to secure Australian shipments after Beijing signaled an end to an import ban. The companies include 4 importers initially earmarked to resume purchases in other firms. Gold eased from a 6-month high, while copper snapped a 4-day slide. Aluminum in Shanghai steadied after slumping in the first few trading days of the year. Wheat edged up. European natural gas futures rose, reversing an earlier loss, and regional power prices also climbed. Mubadala formed a JV to lend $2.5 billion over the next 5 years. The UAE's largest publicly listed firm. Silvergate Capital laid off 40% of its staff, or about 200 employees, as part of a plan to pare back their business in the wake of the crypto FTX collapse. Walgreens sales beat and the company raised guidance. Constellation cut its comparable EPS forecast for the full year to 11 to 11.20 from 11.20 to 11.60. U.S. e-commerce sales rose 3.5% over the holiday season from a year earlier to $211 billion, online shopping record for November to December period. Adobe Analytics said the uptick was attributed to deeper promotions as retailers tried to lessen bloated inventories. Exxon said lower oil and natural gas had a negative impact on fourth quarter earnings of about $3.7 billion compared with the prior 3 months. T-Mobile reported preliminary wireless subscriber growth for the fourth quarter that slightly beat analysts. The second largest U.S. mobile service provider added 927,000 new phone customers in that period. Top China brokers, a global dream derailed by exodus at CLSA. Walgreens CVS plans to get certified to offer abortion pill. Tencent return to top 10 clubs shows China rebound bet soaring. Winklevoss, Gemini lost COO amid tumult in crypto. That makes sense. What are they? Winklevoss twins, Gemini loses. Oh, they lose. Okay. I didn't read that right. J&J files a spinoff of consumer health business at Kenvue. Walgreens plans to get certified for FDA abortion pill. Johnson & Johnson Consumer Health Kenvue files for IPO. Goldman strategists see value stocks outperforming again in 2023. Walgreens beat sales estimates. Microsoft initiated a buy at D.A. Davidson. Hawaiian Airlines defers delivery of 10 Boeing 787-9s. UK extends Microsoft Activision deal probe to April 26th. Salesforce managers were blindsided by news of layoffs. American Express cut to underweight at Stevens, price target 134. Luxury real estate buyers may need to look further afield for bargains this year as demand and prices hold up, according to Sotheby's 2023 outlook. The biggest growth in terms of value will be what are considered to be the second best locations. If you're looking for snow, consider Switzerland versus Aspen, beach San Diego over Santa Barbara. Happy hunting. Sustainable wine tasting. Calistoga, a small town in Napa Valley plagued by wildfires and blackouts, may get backup power supply running homes and businesses on batteries and green hydrogen. PG&E and Energy Vault plan to create a microgrid that can keep the lights on for 2 days during emergencies, with service possibility available in mid-2024. The NFL got back to work with Buffalo Bills safety Damar Hamlin still in critical condition. Players across the league reported for practice yesterday as they began preparing for a crucial Week 18, which includes 2 games and another dozen Sunday, the Washington Post said. CES, Sony, and Honda unveiled the first prototype of their joint EV, launching under the brand of PHILO. It features 45 sensors, including cameras, radar, and ultrasonic sensors. BMW also showcased their iVision D concept car, where the windshield acts as a giant voice-controlled display. Thousands of mourners packed into St. Peter's Square for the funeral of Pope Emeritus Benedict, 50, 55, 56? with heads of state, royalty, and clergy from around the world among them. AP reported the procession occurred after some 200,000 people paid respects during the 3-day visits of public viewing. Black Diamonds, a giant tuna weighing 467 pounds, was auctioned off in Japan for $275,000, the first sale of the new year of Tokyo's Toyotsu Fish Market. The sale of Oma bluefin tuna, called Black Diamonds because of their high value, signals consumers are returning to spending in restaurants and bar. Michelin-starred sushi chain operator Onodera was expected to serve it today. And then on this day in history, in 1709, temperatures across Europe plummeted overnight to the lowest in 500 years. The Baltic Sea froze, people could ice skate over the Canal of Venice, and even the Mediterranean was struck by a chill that became known as the Great Frost. The 3-month deep freeze led to widespread famine. When the ice finally thawed, it brought floods that were followed by a flu pandemic and plague. Well, it's not good, man. It's not good. Wow. Wow, there you go. Wow. Wow, lots of news. I want tuna right now. I don't know. Is that just me? I don't know. I heard that, and I was like, that kind of sounds good right now. I don't want to eat all 400 pounds, but I don't know. Something about the tuna. I like the tuna, man. I guess they got the tuna today. Apparently, it's going to be served somewhere. Yeah, a lot less aggressive than the last couple ones. Toro would slap right now. I know, for real, man. That's what I'm saying. Get a little ponzu sauce. You know what I'm saying? Get something good in there. Oh, man, I eat tuna out the can. I love tuna out the can, too, bro. I feel you. I can run that up, bro. We lived off that. The Costco tuna. You know what I'm saying? What's it, chicken of the sea? Oh, man, stop playing with me. Let's get to some pre-market movers, though. Amazon, they rise 0.7 pre-market after the e-commerce company said they're laying off 18,000 people. Coinbase slumped as much as 7.1 pre-market after the cryptocurrency exchange was downgraded to market perform from outperform. Constellation Brands, Constellation Brands, son. STZ, they fall as much as 4.4 pre-market after getting their year earnings forecast. Gap, Victoria's Secret shares fell pre-market after UBS analyst Jay Soul cut his recommendation on both retailers. They're down 4.4 and 5% respectively. GERN dropped 7.5 pre-market after announcing 175 million shares via Goldman. Novacure is up as much as 117% NVCR in pre-market after saying a study evaluating the safety and efficacy of tumor-treating fields in stage 4 non-cell lung cancer met their originary endpoint, or originary? Was it? I don't even know what I said. Statistically significant and clinically meaningful improvement in overall survival over standard therapies. U.S. Foods, USFD, shares rise 2.7 pre-market after Barclays raises the food service group to overweight. SLGN shares are up 1.6 after the Truist upgraded the packaging company to buy from hold. Silvergate sinks as much as 35% after saying that they're firing 40% of staff, and the cost will be $8 billion. They had a lot more. They even said they're suspending their Dean project $119 million charge-off, and then they said there was like $8 billion in withdrawals or something like that. So we'll see. But T-Mobile shares are up 1.1 after beating estimates and raising forecast. Tesla shares price target was cut to 250 from 285 at Mizuho. Shares are down 1.5 ahead of the bell. China stocks stall, taking a breather after the NASDAQ Golden Index soared to the best start of the year on record. Vivint Bio, VYNT, soars 125 after the company said the Engaged Life Science Capital they got, oh my God, I can't read today. They engaged LifeSci Capital, the financial advisor, to help in exploring strategic alternatives. And then Western Digital shares are up 4.3 after saying that they're going to re-engage with the deal with Kioxia. And then Wolverine Worldwide, WWW, is down 3% after the bell, after Piper Sandler downgrades the stock, writing that the footwear brand estimates are likely too high heading into 2023. Woo! Breathe. I just can't read. I don't know. Like, you ever you read? Oh, yeah, damn. Ford says EV sales are up 223% to 7,800. So Ford is actually running here to start off the morning. Oh, wow, very good for them. Very, very good, man. Very, very good. But those are your pre-market movers, Chattadonia. You feeling good? I hope you're feeling good. I hope you're feeling good. Let's see, what do we got? I need to go to the bathroom. Is that okay? I'm going to go to the bathroom. So excuse me, I'll BRB. We love you. I hope you're blessed. Get ready for another awesome day. I already had the data. One more data set along the way.
The Fed,
God bless you.
I think people who are thinking about a Fed reaction function
Don't be shy.
Are looking at data that really isn't applicable to what the environment that we're in right now. And what I mean by that is that when we were in a period of secular disinflation, there was a Fed put, right? The Fed could ride in on the white horse and save the day because we were in a period of secular disinflation. And the disinflation got so embedded in the economy that the Fed even started taking their eye off the ball, right? How many people were complaining that the Fed was talking about climate change and all these other things? Yep. Well, you're not hearing the Fed talk about climate change today because inflation is much higher, 40-year high. Their eye is on the ball. They have one mission. So to look at the Fed's reaction function over the last 10 or 15, maybe even 20 years is worthless in the current environment. And I think we have to all understand that the whole credibility of central banking is on the line here. The Fed is going to err on the side of being tighter rather than looser because they don't, Fed Chair Powell doesn't want to go down in history as being the Fed chair who ruined secular disinflation. I think we should think of the Fed as being very tight for an extended period of time.
You can see they are conditioned by the 1970s and the experience there, and you can see the weight of that is something that they carry, and I think we heard that from Neil Kashkari from the Minneapolis Fed. What I hear from you, though, Rich, just going through your calls, you don't think we go back to the pre-pandemic regime. You think the index level is challenged. You don't think this is a moment in time. You think this is a new regime. And, Rich, underlying that really must be a call that you don't think that the Fed funds rate, even if it peaks at 5, is returning to what, 3, 2, anytime soon?
Jonathan, I wish I knew. I have no idea. I'm kind of the worst forecaster for decimal points that you'll ever find. But I think we should think of the Fed as being tighter for longer than people think.
Y'all with me?
However one wants to interpret that, I think is fine.
Okay, Charadonia. They have their opinions. You know what I'm saying? They have their opinions. You hear them every day. Everybody try to confuse you. But hopefully you are thinking about thinking and thinking every day. So tell me, Chad, you know what time it is. I need your first play of the day. I need a serious one. If it's not serious, Moz, feel free to, you know what I'm saying? You get them. But what you got, baby? What you got? What's the first play of the day, Chatadonia? You can vote on the poll and make sure you like the video too, baby. Oh, HKD. I haven't heard that in a while. Spy puts. Share of Tesla if we get below 100. Waiting for PMI. Long on the puts. Bostic. Oh, screw Bostic. He should be fired. Baba puts. Watching for the bonds. Tesla 100 put. NVIDIA puts. Airbnb. Back on defense. UNG call. Spy short. Short BBBY. Short SQQQQ. Average on Tesla. Oh, wow. They're going crazy. Crowd put. Not sure. Spy puts. NASDAQ long. UNG. Coin puts. Greedy flow. LABBDDD. The biotechs. DIA puts. Spy and Tesla plays. Short spy. Baba puts. Don't front run. Apple weekly. UNG cash secure puts. Croc puts. Roblox calls. XOM. CVX. You do have that conference today with PSX. MNQ both ways. Yang. Mulan. 23andMe. Tesla puts. Sit back and lurk. Deposit money. Meta put. Spy calls. Microsoft put. Ford puts on all chips. Walgreens to the long side. Apple XRT take on the minutes. We go over it in a little bit. Defense or check the watch list. Roku watching Netflix for upcoming earnings. QQQ puts. UNG. GE Chad crowd put. Apple below 125. Oxy puts. CRISPR SI puts. Waiting for LT additions. UNG Netflix call. Fill the gap. Spy puts. MNQ call. Short EQT observing. Clear the board till Powell. Paying myself. Amen. AMD Nvidia. Short Barrett Gold. 50 shares. Long ES if it holds 38.50. Hood earnings play. Spy 0 days. Spy puts. Calls on Zen mode. F calls. Walgreen calls. UVXY 6.5. Solana short. Shop long. Hello, Chads. GDXJ puts. Holding Baba puts from yesterday. Spy puts. Short EQT. Biden puts. Watching Meta and Roblox. And collecting cash. Give me one more. Spy straddle. GM long. Let's take it, baby. Amen. Wow. Chad the Donia. Watching Amazon and Google it. AMD long as usual. Let's go. I got a couple plays for you. Again, maybe those conferences like we talked about, you're going to hear from CES and all of the chip makers, not to mention the chip news from yesterday. But again, I already opened up 2 MNQ. Damn, that's already making money? Alrighty. Well, I went 2 MNQs here earlier after the data. Yeah, we're like slowly edging in there. And I would be watching from the level of yesterday. So this is why I made the play. I mean, just keep in mind yesterday's levels and where we are at from that. But I'm going to be watching NVIDIA, TSM, WDC. WDC has their own independent news. Amazon was pretty good, but we'll see what happens. Then Citi and JP Morgan. I believe ex-dividend is today on JP Morgan. And then their earnings is next week. Then Constellation Brands, they did good. And then NVCR, another biotech that was up there. And then Netflix, I'll keep an eye on it. I mean, you've seen it over the last couple of days, and I think you are hearing from Bostic right now. So, but we'll see. I don't know how he's still in position. Anyways, but yeah, I think it's going to be a good day, chat. We have our data. Let's make the most of it. I hope you guys are ready for it all and call out any plays, and let's make it a good one. Do you have any questions? The data was just all very strong data. So I think that's a great question to start with. Pretty much continuing claims came in at 1,000 or 1.69 million versus 1.72 million. And that means there's lower continuing claims, which is not good. That is strong employment data, which leads to a negative reaction. And then initial jobless claims came in at 204 instead of 225 expected. Again, another set of strong data. And then ADP came in at 235 job additions versus 150,000. So all of the jobs data was strong. And then I will give you the caveat is that the initial jobless claims and continuing claims, this represents the New Year's weekend. So during the holidays, in a weird way, even on the holidays, people don't file for unemployment. It's a weird effect. So some people are talking about higher revisions next week. However, for right now, it was bad. And then the ADP, that was actually your biggest candle. So this one was the jobless claims, and you had more continuation. But this one right here, that was the ADP, and that one came in very, very strong. So granted, there has been a change to ADP. If you guys remember, do you guys remember a couple months ago, we let you know that they were changing the methodology behind how they calculate it? Well, ever since then, it's still kind of a new data set, and it doesn't always represent what we want. But all in all, even from yesterday, every single set of jobs data we have been getting, it is not good. I have not closed ACIW, actually. I forgot about that one, not going to lie to you. That should be on my list. But, yeah, I'm still in that one. But overall, jobs data is going to be key. You have one more set of data here in 15 minutes. Then you're going to hear from Bostic and Bullard. I think Bostic's already talking. And then we'll see what happens. But Chattadonia, it's game time. And you know what we do here at the Coat. Before we do anything, before we try to chase a dollar, before we try to enrich ourselves, we must pay homage to the people who have enriched us in so many ways. You know what I'm saying? You know, they've enriched us in so many ways. And it's an honor to be able to say this every day. I mean it from the bottom of my heart, and I'm honored to be even surrounded by a lot of Chads who feel the same way, man. And we got to say thank you and God bless you to all of the veterans, all the active servicemen, past servicemen, anybody who has served this country for real. Thank you for your service, and God bless all the families as well, and thank you for your sacrifice as well. And if you serve your local community, whether you're a doctor, teacher, nurse, firefighter, police officer, anybody just helping out their local community. Maybe you even help out at a local nonprofit, maybe a food bank, man. But if you're doing something for the community, God bless you and thank you as well. I hope you know you are appreciated, and keep on doing what you're doing, baby. Amen. Amen. But ladies and gentlemen, please rise. Place your right hand over your heart. Say it with me. I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all, baby. Son of a Jets! Oh, it's game time, baby. Chattadonia, good morning. Horn, let's go. Oh, it's game time. The Jets have been sent. Welcome to is it the third day? I don't know what day it is. It's the third day. I think it's the third day. Oh, man, the third day of January. The third day of the year. Let's go. Oh, good morning. Yes, let's go, baby. Let's go, baby. Hey, man, it's game time. Oh. Let's go, let's go, let's go. Day 3 trading. I know. Let's make it a good one, man. Let's make it a good one. And again, just get ready here. Keep in mind yesterday's levels. There's going to be a couple of conferences going on. I will check that schedule here in a second. But really, let's just see what start we get off to. And then again, even Europe and everything else wasn't too hot. So we're going to have to see how that plays out. Again, Euro close. Today's kind of more of a bumpy day compared to some of the other things we saw. So PSX will be at 11. NVIDIA, you'll hear from them at 10:50 Eastern. PXD will be at 8 o'clock, and then Merck at 8:55. And then I think that's about it. And then just don't forget about any of the bank earnings along the way. So Chattadonia, get ready. You got about 45 seconds. Post any plays, like the video. Make sure you're subscribed. And make sure you got a good attitude, man. Let's bring it home. Well, I keep saying bring it home, but we're starting the year, so I don't think there's anything to bring home. I think we got to go home. But I guess we got another journey. I don't know. Maybe I'm overthinking it. But let's go, man. Let's go. Let's see what we got. And again, watch energy and chips. And then the bank stocks. So I forgot about ACIW. Maybe I'm going to put that one up here. ACI dubs. Hey. And then the MNQ, and get ready. 4, 3, 2, 1. Round 1. Fight. And you're at 38.32. So again, you're pretty much near the lows of yesterday after the minutes. Oh, really? You gonna bounce like that, huh? Huh, JP Morgan? Oh, big bounce on JP Morgan. They scammers. They are the scammers. And then you can't buy on ex-dividend day, right? Or like you don't get the dividend, right? If I don't know. Yeah, because it's not going to settle. Okay, let's see. Everything's red. Energy's actually doing the best here. I got to clear this to, remember, active trader slows your computer down no matter how OP it is. So 38.33, not moving too much. Again, the MNQ I opened up at the data pre-market. Issue. Oh yeah, where is BA? And then watch the banks again. I think they'll be good, but financials are actually they're like right in the middle right now. Real estate, materials, and communications are the worst. Oh my gosh, of course Boeing is still going up. And then Meta's actually in the green. Silvergate sinks by a record 40% at open. Google's in the red. Tesla's dumping. Remember, they got a price target lowered. And just in general, with the market coming down, it's not too hot. So you're about to hit the pre-market low right now if we keep going. 38.27. Again, next level is going to be like 38.22, 38.20, and 38.18. If you've noticed, I give you like 3 levels here at the line just in case, because it's like things have been moving a little bit. And we've had those levels pretty static for a pretty long time. Walgreens, they just had earnings, so keep that one in mind. And then there's JPM selling off. Boeing is holding. HKD halt. Let's check Walgreens. Damn, Walgreens up 6 after beating and raising. I guess they don't like the conference call. Even HBI getting dumped on. I think everything. Netflix, I've heard a lot about Netflix today. I feel like a lot of people have been liking it, again, for that gap fill or whatever. Mulan Pop. Yeah, BBBY is awful. Kohl's price target cut to 18 from 20. Silvergate sinks at 40%. That was yesterday? Banks? Yeah, banks are even lower. And then again, PMI data in 15 minutes. You're about to hit 38.20. This is a soft level here, so watch if that ends up breaking. Jobless claims, ADP, both came in very strong. At least, I think, minimum 10%. ADP was like 30% higher than expectations. So, I mean, you could do the math on that one. And then that ACIW is still rocking here for a little bit. AMD in, trying to recover. We'll see. Remember, China was really good yesterday. They're not starting off in the same breadth, but they might be able to come back. Okay, the MNQs are actually kind of hitting here. 1, 2, 3. We've been, 4 minutes in? 3 minutes in. Wow. Airbnb. Feels so slow, Okay. I went 100 shares of JP Morgan, 134.38. Not a recommendation. You will lose money. Idea would be, again, I don't think I'm going to get the dividend on it, but remember, they have earnings next week. And I think the bank stocks, in a weird way, again, consumer data not doing better, or jobs data, but then higher rates. I think the banks are on fire. So this is going to be for a flip. Flip in pre-earnings run. What did I get? 134.38. I think there's at least like another $2 of downside to it. And then if it gets exciting at the end, middle of the day, it could go up a lot. I will get the divvy. If I will, that'll be a double whammy. I even forgot, XLU. I even got paid a dividend on XLU on those shares. I don't think I'll get the dividend. I think that'll just be an added bonus. So you see, I'll make the play without thinking that's going to happen, if that makes sense. And then again, the MNQs are up here from the pre-morning. Again, you went below 38.17, 38.20. So this will be a big level. We have data in about 10 more minutes now. So keep that in mind. So far, no even bid at cash open. Bonds are clapped comparatively. Even Netflix going down. XLE. Check industrials too. They broke out. XLI. They broke out of a big resistance yesterday. HKD is on the high. Walgreens is dumping right now. Damn, bro, they're down 7%. It seemed like it was good earnings, but if that keeps dumping, maybe that becomes a pickup. We haven't had that in a minute. Jobless claims. Jobless claims already came out. All jobs data already came out. Next level is going to be services and composite PMIs in about 10 minutes, 9 minutes now. And really, I mean, I would just be looking straight up for any gauge of pricing contained within those. So we'll have the data. We'll go over it, and we'll see. Again, NASDAQ is down. Everything's down about almost equivalent, with the NASDAQ leading a little bit more. You're below these levels. And like we said, just keep in mind now, you're at the lows of yesterday, lower than the minutes. But, I mean, it's pretty much just holding this downtrend more or less. But the bonds are coming up. I don't know why Walgreens is dumping. Again, their earnings seem pretty good. But we've seen that happen with Walgreens a couple of times, actually, in the past. ACIW, that one's still holding up. So let me see. I don't know if they got a downgrade, but Walgreens, I've seen that many times with them. They said they're not considering large acquisitions. They say they post $6.5 billion loss on opioid charges. That could be it. And they swing to quarterly loss as lower sales opioid settlement takes a toll. So they beat sales estimates and they had good guidance, but they did take a big loss in terms of their both the opioid settlement, and then I think they're just reporting lower sales in general. So even though you could beat expectations, but I think over the longer run, it's still a lower sales number. And then, yeah, EPS was better. Yeah, but they posted a loss per share. And then someone says margin. And then SPY's still going lower. Again, data's really, really close here, though. So we're going to see otherwise. And then everything from now, the low of yesterday was 38.15 on SPX. You're at 38.17. And damn, it's already 1%. And then even JP Morgan now, I was up on it a little bit. That's slipping. The yuan, I will check. I'm sure it's probably down. Yeah, I mean, even chips are down 2% right now. I think WDC may still be up. Yeah, WDC is still running as far as the chips are concerned. Remember, they have the news of that little buyout. So new low there on the SPX. It's not like dumping. But actually, yeah, you just flushed 2 more points lower than where we were yesterday. And then again, their data is soon. Yeah, bro. Western Digital looks It's clapped, but it's still holding up. XOM, again, PSX says like 11 o'clock Eastern. You're going to be getting that. And then remember the chip makers, NVIDIA, AMD, Micron, I think ON Semi too. They're going to be having that conference at CES. Tesla, massive dumping. What else is new, huh? What else is, I feel like this a Tesla man, this a Elon man, this guy, they always say every day, how do you lose it every day? Oh, wow, that's a lot of bid support, but that's a lot of volume coming in. So you might get a little bounce here, and you have 6 more minutes. Oh, they ate that. So that means a lot of people still purchase, but you're hitting another low, 38.12. When was the last time we were here? I guess you're now getting into those lows of Monday or Tuesday. And now I think we're below the Christmas levels. But that's a huge candle for 15 minutes. Yeah, you're done, bro. There was a lot of sales on that one. And then even bonds are coming down, so I'm pretty sure. I don't know if SPY is outpacing it now. They're matched up. Ay. Bro, that was crazy. So that's a lot of sales. You're still diving into it. Again, some names more than other, but it's really like consumer discretionary, real estate, tech, and then consumer staples, defensives, utilities are still holding up. But damn. Again, it's about 1.2%, 1.3. It's still there. Yeah, the NQ short's like up 450 right now off of the MNQ. So those are even the small ones, which is pretty surprising. Again, next level right now is going to be 38,000. Remember, 3805, 3806 is kind of its own level. And then data in 4 minutes. Okay. All right, I closed out 448 profit on the MNQ. And then I'm just going to wait to the data here, and then we'll go from there. There's like another 5 points. Data will be PMIs. And again, PMIs might not even be the biggest one, but just in case, we'll see what happens from there. But you're right next to 3,800, and I don't think, I think we might get tempted to go ahead and test that. Market likes to. Market likes it. But 3 more minutes till data. Again, the expectation is 44.4, and, look into any other metrics related to pricing in it. Top 50 shares AMD, I like it. I want to get WDC, but it's up so much. And then jobs tomorrow. Non-farms is going to be huge, and this is why I took it, but it's I shorted late after the data, and it still dropped so much. But the whole idea is a lot of the jobs data leading into this today, or this whole week, has just been awful in the sense that it doesn't look good for non-farms, but you never know. Only Powell knows. Good or bad, I don't have any expectations, so pretty much that's why I'm closing out before. So I responded to the data today, paid us some money off of it by just responding quickly, close out before the data, and then I can make another trade from there after I get it. I'm sure I'll miss out on some of the move, but either there, it could be, it could just let it balance out if anything. So 2 minutes. Tesla's new price target is like 230. I think from Mizuho, 230 or 130, I don't know. I have to double. There's a very big range, Habibi, very big range. So we have JP Morgan. Did Amazon give up? Yeah. And NVIDIA is down way more. Even AMD is down a lot too. I think WDC is still holding. They're coming down though a little bit. What's the other one? WDC. XLE. Watch industrials, though, too, even though they're down right now. But we'll see if the data changes. Okay, 45 seconds. Does it even move a lot? Yeah, I'm just going to go ahead with it. It's a fat premium. I'll go small. I went 50 shares WDC at 34.30. What? I've never been filled so much lower. But it's up 3%, but I think they're just kind of in their own world, and they look like value comparatively to all the chips. I know I'm buying that right before the data. Came in 44.7, slightly better than expected on services. Global composite PMI just came in at 45. There's no expectation, slightly higher. So nothing too much there. Let me check the prices. I need the price data in it. I don't know if there is price data. Hold on, give it a sec. But 44.7, it's not anything. No big beat or big miss. Do not trade. Yeah, but as of now, I mean, it's still weak. Everything is still in contraction. So it's kind of like everything else where data is still going downwards, but it's not a big enough beat to cause like a crazy candle. Next event on the day will probably be James Bullard at 1:30. So keep that in mind. ACIW. Market doesn't seem to like it. It's just kind of like the other PMIs earlier this week where just not as hot, but I'm waiting. I don't want to go to the website. I'm pretty sure there's pricing data in it. Neutral with bearish. I would say neutral bearish tilt like last time, or borderline. I'd say overall neutral because you're already down 1%. And then if you even factor in the pre-market, you're already down a lot. So it's like I would argue it's more neutral, but just like last time, it's all contractionary data. So, I mean, as far as the consumer is concerned, it's not good. But as far as inflation, services coming down, that's going to assume something better than not. But you're still going lower here. Even the banks are slipping. Energy is the only thing green, and consumer staples are holding on. UAL and Love on the high. Airlines are moving up. So that's a little one. Actually, airlines are moving up big. Check news on that. United Airlines is actually moving up great. I'm not seeing anything. Yeah, airlines are the ones leading here in the morning. Love, United Airline. They're doing good. So you're getting volume. The data didn't cause a crazy reaction yet. So I think now we're just going to probably do our little dance here from the morning. And then any other comments here, I think Bullard will be the next one that we're going to hear. The global services, 44.7. Hey, well, they're doing good. They're doing good. WDC's coming back up. I'd watch for financials to pick up or for consumer staples or industrials to come back up. The industrials wanted it. They just have a pretty big gap. I guess $10. 3803 again. We did this dance before. You guys should remember, like 3803 gets very, very like I even think this is where we opened at one point, 3805 to 3803, and it kind of just holds and then does the dance at 3800. Then if you really break, then it starts to get ugly by another 20 points, but we'll see. So this is going to be a stubborn level. Bonds and S&P bouncing on that. Yeah, more WDC news. Same news as as always for the day. The Kioxa stuff. Treasury 3-year rises 15 basis points to 4.25. ACIW is still holding up. Apple pissing me off. This is everything. Apple, Tesla, they all very, Actually, Apple's about to go green, believe it or not. So you're down 1.4 on the NASDAQ. Apple is about is break even almost. And then SPY 1.2, Dow 1.2. Netflix only down 0.6. Microsoft still getting mollywopped. Microsoft's ugly. Damn, I should have held that one. Amazon layoff news ain't hitting. SI, the layoffs in the morning, they're still down 44. ABVC Biopharm resumed trading. This thing's up 150%. What's that? $840. They got approved of IND submission. Is this the lung cancer one? Oh, this looks like it's fucking hell. I'm buying the biotech. That's up 100%. 170. Put $300 in, 200 shares. 168, not a recommendation. I'm reading it now. They got some level of FDA approved within 30-day review period, and they've earned a milestone payment of $600,000. But I'm learning from what's it called? It looks like hell. That's why I bought it, because it looks like they've had a lot of reverse splits. So that's the thing that sucks about it. But we'll see what happens. Yes, I'm still in PRVB, but my share position is really small on that. That one is ABVC. Do not trade that. You will lose money. I only put in $300 on it. It's relatively small. I don't know. Is it halted again? Yeah. And then Boeing is just ripping faces. ACIW still holding. Energy catching bids. Where's even WDC? They're up a little bit. Very big roller coaster. But at least, again, you're holding this level. Just you want to see some bigger moves. But, kind of. That's already 10 points there. You got to get back up to like 38.17 now. But then if you fail 38.17, it'll get ugly. There's BOPH and then like NVCR or something. There was like 3 other biotechs today. Fibrogen raised price target 27 by Bank of America. We leave this range. Maybe tomorrow. That jobs report tomorrow, now that's going to be very big. And now you see the volatility here today. People are worried about it in the sense that you don't really know how that one's going to play out. So now the jobs report is holding up. The non-farms tomorrow is holding up a lot. So it's just like if that trend continues, we might flush. If you get strong jobs data tomorrow, we're going to flush. However, if there's weaker jobs data, then everybody is just, you're going to eat back all of this. So again, these are minutes, a lot of people talking about jobs and rates and bonds moving, but realistically, if that jobs data comes in weak, the bonds are going to rally and you're going to go up a ton. Small Pete's or the cult. Sorry for bad plays in 2022. Want to improve. God bless you, man. Don't worry about it. Don't apologize. Let's go. Just keep working. Amen. WDC hit the high coming down, but then what's it called? Ain't looking too good. How you say the WDC? Boeing little pop. Boeing just hates us. Yeah, Boeing just they hate you. So half pin duo. Never thought people would lose their job, but here we are. It's not. Well, right now, the data is showing people are getting more jobs. That's the thing. Fed futures moved. Let me see. I mean, let me check these ones. So you hit the VWAP, but still kind of flush in. Banks are dumping now. Boeing hates us. That means it's going up. Apple, big pop. Apple's up 0.5% right now. June rate hikes did go up. Fed futures did go up here on June. Let's see. So you're going to want to look at ZQH23 and ZQM23. Yeah. Yeah, they actually did a lot. So even from ADP to the jobs report, that could probably make sense of where we're at now. But yeah, the Fed futures did move a little bit more bearish in the sense that they're pricing in slightly higher rates, meaning they're giving up some of the game of chicken. The bonds got a little worried today. It could definitely flip back, but that's definitely some small movement. Pretty much March is staying the same, but then June went up by like 0.1%, which is big in Fed futures world, but it could also be reversed in one set, or we'll see if that even changes any of the speeches. Yeah, Apple's, I don't know what the hell Apple's doing. JPM still at the low. At least WDC is holding up. Little pop on Google. Remember Young Meta yesterday was killing it. He want to fight again. Apple holding up. Apple's up. Apple's a leader right now. And then consumer staples are the next best to energy today. And then real estate materials are the worst on the day. Tesla's still down 3, but you're getting above VWAP now. So 38.17, this is make it or break it, because if you fail from here, this will be a violent downtrend. Netflix on the high. So that's what you got to watch out for. But if you could get above 38.20, even like 38.27-ish, I would say, you kind of can neutralize this. So this is kind of a make it or break it here, at least for the morning, and it's only been about 30 minutes. Fun fact. Volume 11 million? I mean, not bad. If it continues at this pace, we'll be a little bit above average. You'll probably hit 20 million in the first hour. Amazon layoffs, I mean, it's good and bad, right? I mean, it doesn't say a lot about the company, or it's not good for the company or consumer. At least they're over the holiday season, but then, so that's not good in the broader economic sense. However, for them as a company, it's great for them to save some money. And it's one of the more bigger layoffs, more than not. 17,000, 18,000 individuals is a lot of people. But again, they still have a workforce, I believe, of over 1.07 million. Peloton agrees to pay 19 million civil penalty. CPSC says, what civil penalty? You pay for I thought you pay the penalty every month. You have to subscribe to ride your bicycle. Amazon's coming down, though. So Apple's killing it. I mean, Meta and Google were trying to show a little bit of life there, but really it looks like Apple and Netflix are your only ones. Netflix is now green. And everybody was bullish on Netflix there, so where's Disney? Disney was a big leader on the S&P yesterday. They're kind of holding. ACIW, that one's still moving nice. JPM, not nice. Pinduoduo and Baba now, or Baidu at least. China names are starting to come back up here. Lockheed, wow, Lockheed. They don't usually do this one. Ever since I buy Lockheed, the Lockheed, he's very hard-headed, you know? Wow, very good Lockheed. Lockheed Martin. Very good guy. Oh, Walmart. All right, you got to get above here. Burning time helps change the downtrend as well, too, but really, if you reject here, I mean, you might have a whole nother set. Again, I closed my MNQ right around here, so it's a little bit higher than where we closed the short, but then still a gap between the data in the morning. Oh, JP Morgan. Where is it? Pierpont, what is his name? Apple. Dude, what in this? Is this because Microsoft's selling out? Apple looks actually very solid. It's very weird. I don't know how I feel about this. And then we could have made another little bag there on Microsoft. But Microsoft's even trying to come back up. Yeah, Apple's below even 2021 levels. Love and United Airlines are killing it. So now we're actually under 1% on the SPY. SPY's doing the best. Dow and NASDAQ are, believe it or not, matched up. Oh, JP Morgan a little bit off the bottom. That one just hasn't even moved too much, which is good. And ACIW is still rocking there. Oh, Uber. And then what time is it right now? It's 10. 10 a.m. Lumen, L-U-M-N. They're speaking, I think, at a conference. So get ready. You might get data on that. But I'm waiting for NVIDIA at 10:50, PSX at 11, and then everything else will come a little later. Where's T-Mobile? They had earnings. They were good. They're holding up. WDC. Airlines again. Delta and American on the high again. What's the other one? Nikes is going off of the earnings, Habibi. Nikes have good earnings. You remember when Netflix, they say, I have good earnings and everybody, the market dump, but Netflix go up? Same thing with Nikes. Nikes, you know, I tell you, very good. They just did it, you know? They like to do it. So good earnings, people ignore everything. Oh, Netflix. Damn, Netflix. 1% almost. Why is ACIW is getting a little crazy now? When was the last time I was here? Pinduoduo, 52-week high. Illumina. Again, Netflix is really, really killing it. And then Apple's calming down. This is the downtrend point, so you got to be careful here. You're right. You're not getting above 38.20. 38.17 is a level, but like, I mean, you drop the bouncy ball. If this comes down, that's going to be a violent downtrend. So it's still, we're not out of the woods just yet. Why is the divvy 18%? If they probably offer a divvy, and then the stock drops so much, and then probably a yield trap to say the least. Yeah, banks are still low. Again, Pinduoduo's up. Where's Win? A lot of China names are running there. They're still kind of in the red. Win is holding up. Don't forget to like MGM as well, too. MGM still climbing. Yeah, MGM, Uber, a couple of these travel plays, they did pretty decent right there. Ulta, SDC. FGen, Valero, Valero MPC. I don't know. No, PXD is the one at the conference. Denbury at 11. Okay, you're coming back down. It's still there for now. We go 378 if we break the 3800. So we'll see. Watch how we treat 3805 pretty much. 3807 to 3803 is kind of the range. And then if you break 3800, we're going to 37. Or the last time we broke there. Okay, I sold the ACIW like $100 profit. I think it could still go up, but just remember we bought it at like an 8% premium. So squeezed out like $1. CACC. Oh, wasn't that Credit Acceptance Corp, bro? What the hell? Chad, this thing was at 450, 500 yesterday, 2 days ago. Oh, that's like really dumping. I forgot what the news was on that. Intel will be at CES today. So keep that in mind. But they're on the low. They don't speak till later. And then WDC and then NVIDIA is going to be at like 11. So in 1 hour, NVIDIA will be at a conference. Market bouncing up from that. So hold on. 38.17. Again, if it just comes right back down, it'll be meaningless. But you would have expected it to kind of die from there. So burning time helps chill it out. Yeah, bro. Credit acceptance is, dude, that's 10%, $40. Bro, that's 500 to 388, 360 in 2 days. 488 to 360. That's crazy. Whoa, 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 whoa. Hold on. Banxico hawkish stance must be kept longer. Pound falls below 119 since November. Bro, something just snapped. It looks to be the bond market, but I'm not getting anything. Bro, what is this? Scammers. No, hold on. Putin orders 1 day Christmas truce in Ukraine. IFX. Hold on. It's like one of the little Russian things. Christmas truce by Putin. Putin orders 1 day Christmas truce. So it's gonna play out. Remember any of the whole like peace talk? I think the market just really wanted to move, but it's one of those Russian things. It's Russian news. Dope. Oh man. So it may not last. Like I said, I just put out this stream alert. Take it how you please, but just the main event is at 1:30 with Bullard. But that was the only crazy headline that could have caused. Dude, that was just random ass bullishness out of nowhere. The chart's bugging, but that was like, look at these contracts, bro. That was like 4,000 contracts almost. Purchased all there. And again, they're dumping it already. 38.55 now. That order block might stay there. We'll see if they try to. But that just neutralized the downtrend. But now you're back to 38.20. But now you get a lot more room. So until you break 38.10 again, it's still really going to kind of hold up now. And now this is a support level. You're not getting the bids, but that was a shit ton of contracts just traded. I guess technically it's your first sign of a Christmas or any sort of truce, but I don't think. I mean, how many times have we seen missiles fall and peace talk this, peace talk that? You know what I'm saying? So let it do what it wants to do, but at the end of the day, the real main event is 1:30. No, my chart is not bugging. This is real. This is real. Again, I got you the news there within about, it was like 15 seconds. We didn't know it was happening, but it was a one-day Christmas truce by Putin. And then Putin orders January, the headline is ceasefire in Ukraine. So Putin orders January 6th, 7th ceasefire in Ukraine. Kremlin says that's coming in again right now too. Again, I think just if people pile into it, you might get a move, but I just don't know how long it's going to hold. That's why I just keep in mind there. But we've already cut out our shorts. Thank God we did. And then again, the only thing I bought was long, took a little bit of profits, and then we go from there. But you have not really, that's the first official ceasefire that you've kind of technically heard out of them. They've had like grain corridors and this and that, but they've never really announced that. But again, it's for fucking one day. So, you know what I'm saying? But we'll see. But either way, though, you got the market moving. The next real event here is 1:30 with Mr. Bullard. Tesla, where are my Nikes? It's meaningless, but that's a headline at the end of the day. You've seen, again, we've seen a couple of Russia headlines here and there throughout the last 12 months. I mean, that's enough there. And then again, especially with the level of bearishness that we came into with the data. But dude, that's too much money. Bro, that was at least 4,000 or 5,000 contracts now. So the amount of people buying this up, holding it, and trading it. So that's your big level you need to break. And then you got a little mini order trap here, but it's starting to move here. I think people are just going to ignore the dates on it, read the headline, and be like, yes. So watch out for that, though. Banks are starting to move now. Everything's still red, though. Consumer staples and industrials, they're coming up, but still red. It's just a one-day ceasefire in Ukraine announced by the Kremlin. So technically, your first ever officially Russian announced ceasefire for one day due to the Christmas holiday. I think it's because the Orthodox Christians, which is primarily Russian, they celebrate Christmas around this time. So he's announced a one day, he said Christmas gift, peace and love, one day. Yes, Putin bombed Ukraine on their Christmas and then called a ceasefire on his Christmas, or AKA the normal Christmas Eve, Christmas. Putin bombed the Ukraine. And then now on the Russian Orthodox Christmas, they announced a one-day ceasefire. Yo, Billy. He said mistletoe means something else to Putin. That's a good one. I've never heard that. That's a good one. That's dark, but it's a good one. So let's see how long this lasts. Again, it could give back up, but at the end of the day, I mean, I didn't even make a trade on it. We're just going to ride it through. Let's see what it does to any shares. Apple Foxconn says December revenue fell 12%. See if Apple goes down on it. They might have priced in. People might have priced in worse, though. So even if it seems bad, it might be better than expected in a weird way. Ukraine church celebrates Christmas same day. No, they changed it this year. They said they wanted to break away from it, so they moved their Christmas to the American, I guess, holiday or the pagan calendar or whatever you want to call it. Or at least that's what Zelensky announced this year or last year, end of last year, a.k.a. 2 weeks ago. Can they do that? I mean, as Zelensky could do, Zelensky Time Man of the Year. You know what I'm saying? I think he could do whatever he likes, man. He's fighting out there. Yeah, he even banned the Ukrainian Orthodox Church. Yeah, he said that the churches were a source of spreading misinformation, I think, or that they supported that the Orthodox churches supported Russia, so they banned that. That was I think that was a month or two ago. AMD for the long term, I would wait for that, but I like them. Again, I mean, a lot of times we've had this question yesterday with a lot of other names. I like a lot of these names, and just because I might want to buy them at much lower prices doesn't mean I think they'll go there. But to protect myself on anything for the long term, I still, I'd want to make sure if I'm buying anything, it's at a real deep discount. So we're still holding from the top of you're not back to the top of the candle, but where the candle kind of ended on that Russian ceasefire news. So again, some bid support here, but it's starting to break now. And there was a lot of sales on the high. But let's see, 38.20. So again, if it bounces up here now, this is forming a little bit of an uptrend. Like I said, you start to question this at 38.10. I think 38.10, 38.13, you could go for greedy short if you want it. Boeing pop, screw you. And then Lockheed fall on his head now. Why they do this? Yeah, Pinduoduo is running, even Baidu. I think Baidu's still in the red, but Pinduoduo is hitting 52-week highs. Delta and United are still doing good too. New Year's Star, and we're still in the 378, 384. I mean, we got above the Christmas level. I mean, we actually had a very good start to the year in a weird way. So, even ending up where we were yesterday, that first 2 days was very good. But, I mean, now we're right back into it. And then the bonds have had a very nice start. And then China has had their best start in 20-something years or on record. Still waiting on Airbnb. Yes. I still like it a lot, and I got to ask myself between buying before or after earnings, because I do think their earnings will be good this time, unless they want to guide lower on anything. But same philosophy as it. I want it at a much lower price now. I'm not going to try to fight Wall Street on growth and just wait till everybody vomits and buy up all of the big sells. It's really the main idea. FOMC, the data, jobs data today was strong, and that wasn't a good sign, especially coming into data tomorrow. The non-farms and then all of the preliminary jobs data seems to be, seems to be strong. So if that's the case coming into non-farms and then non-farms ahead of Powell, that will definitely confuse things. It'll even confuse the CPI. You got to realize if the jobs tomorrow comes in really strong, then that's it. I was looking at Overstock yesterday because it's down a lot. But that's the thing. We bought it at a pretty decent price, but even though it's still 75, but I would buy more Overstock if it goes to like $3 to like $5. I'd want it at like the 2016, 2018 lows, more or less. So there's still more downside. Celsius co-founders. Celsius like an energy drink or like Celsius like a crypto drink? Which one? Seasonal jobs. Yeah, well, even then, part of the jobs now, they do count seasonal jobs and during the holiday season, even for jobless claims. Like, it's like literally, even on the holidays, people don't, what's it called? Like, people don't file for unemployment. They even take a break off of filing for unemployment because of the holidays. Remember, we talked about that during Thanksgiving and Christmas. So that's why most people are expecting an upward revision, but only thing we just don't want to see, you just pretty much don't want to see a high non-farms tomorrow. But then the ADP was very, very strong today. The 10%, pay yourself first, baby. Pay yourself first. First and foremost. It's a large region, spies and at lows. I mean, the lows we hit earlier were very low. That's one way to put it. And then now there's just where I think we're just so data dependent. That's all. Like, again, go give me a CPI that's hotter than expected or doesn't drop as much, and give me a strong jobs report tomorrow. You'll be right back here real quick. You see what I'm saying? But then vice versa, if we get anything good, the market's really it's ready to run on the right data. So it's just data is going to be very, very determinant of all of it. If CPI doesn't drop, and well, if it doesn't drop alongside of strong jobs, that will be hideous. But then even if the jobs are strong and CPI is good or bad, I think the jobs will take the cake unless CPI absolutely surges. But I don't think there's any possibility CPI comes in high next 2 weeks, next week, just because last CPI in January was 7. Yes, I think the market is a lot more worried about jobs than not, or at least the bond market is going to move more on jobs than not, and then bonds could probably affect stocks. So you've given up the Russia news, a little bit of a wishbone there. Russia news not back there. I believe you're entering near the greedy short level, 38.13, if you want to take that. And then bonds are up a little bit, but still down on the day. Bonds are actually down a ton. Tesla's about to flush too. Amazon, yep, they're getting clapped as well. Apple, watch if they give up. And then Netflix, they were doing good too, but they're starting to sell now. ACIW still hold. Bullard's like 110 or 130. But that will be the next thing. Treasury adds individuals to counterterrorism sanction list. Walgreens, I think just let it keep dropping, but I do like the drop. If it did start coming to like much lower levels, because in a weird way though, they still don't yield as much. I think they're still 4 or 5% right here, 4.5%. And then there's still like that equity risk, so I would wait a little bit. Yeah, 5.5. So let it go down a little bit. If it starts yielding a little bit more than that, that could be good, but you have the equity risk. Otherwise, I would like Altria to go down a little bit more. And then we've missed every ex-dividend. So now we have to see, what's it called? I'm just going to be holding a little bit of cash here until either you need the value names to drop a ton or we have to wait. It just doesn't make sense to even buy anything yet. Oh, you got approved PHILO. Let's go, baby. Let's go. On the same page, yeah. I'm not scared of it. I like it. I like Walgreens still. But at the right price, because I think when we got it, it was yielding like 6-ish. So if you could get the right yield on Walgreens, I mean, they're going to be that. But that's crazy. They had to pay $6 billion for the opioid stuff. But they got some good things there at the right yield. At the right yield. Exit Walmart and pick up VZ for the long term. I think Walmart's way better than Verizon, depending on what price you got it at. But also for the long term, I mean, I'm not a fan of selling out for the long term. So I don't know what strategy you're employing on that, but I don't know if I could even speak on it since I don't do that. Selling the abortion pill. That seems abortion pill, dude. Like, is it called Plan B? Like, what do you mean? Abortion pill. But have you ever seen the chart of how much of like Walgreens? Bro, Walgreens owns they control like 40 or 30% of most of the market share of like any pharmacies across the United States. So like all of pharmaceuticals, like how they're dispensed in the United States, it's like 4 companies. And Walgreens is one of them. NVIDIA pop in here. Is it 11? NVIDIA's at 1050. So in 20 minutes, NVIDIA will be presenting at CES. Make little margin on those. Well, it's a dividend play. So a lot of those, what we're looking for is steady cash flow. That's it. As long as they're bringing in money, they could pay that dividend. I mean, it'd be nice if they could grow and all of that, but just like Haynes and all those, it's like you want to make sure they have staying power so that they could stay alive, and just that's it. If they stay the same, it's great in a weird way. But again, they just paid out like $6 billion. Yeah, NVIDIA's popping right now. Dollar extends broad gain. Canada currency falls to day low. AT&T. If you're looking for monthly income, why not buy? No, I'm looking for yearly income on like a long scale with the potential for upside, but just a solid company on there. I haven't looked into Jeppy. A lot of people have brought that up to me, but it's not really, I'm not like looking for, it's just a basic age-old Wall Street strategy. Find good companies with solid cash flow that pay a steady dividend. If you're able to, if you think they'll be here in 10 years, then that's where you really get your money on it. not to mention any other potential upside or hopefully preservation of capital alongside of a solid, steady yield. Yeah, the premium income. I'll have to look more into it, but I need to see, is it at a premium? Yeah, it's still up. It's like near 2020 level. It's actually a better price than not. It looks just like the S&P 500. Maybe at one of the lows I could consider it. EIA says natural gas stock bot piles fell 221 BCF last week. Estimate was 240. Jeppy. I like saying it. It seems fun to say. Cisco. No, I haven't really looked much. Yeah, that's going to kill UNG. Walgreens at divvy for 100. I don't know about 100, but a pretty long time. But I know they haven't missed the dividend. No, we'll go over UNG in like an hour at Euro close. Rum Bear Cave report. Hot dog. Yeah, they're getting clapped on that. Rumble's at 6. Jeppy pays 10%. Jeez. Dude, it pays 11.7. That seems scary because it seems like it has a little bit more downside there. But that's actually quite interesting. But then again, if you end up, what if I don't know if they have any dilution measures or anything like that. So it's buying an ETF instead of buying equity in the company. But I'll look into that. I think at a lower price I would consider it, but that's a nice yield. But it does make me ask questions because like at least when I'm getting 10.5 on what's it called? Getting 10.5 on Haynes. I know what I'm buying. I know exactly why the yield is that high. Otherwise, even if they're executing a strategy or not, I don't know how consistent that's going to be. Very interesting. That's a high yield. And I'm very interested in high yields right now. Where is KHC? And B REIT? I have no idea. Brought to you by JP Morgan. Oh, Kraft Heinz is doing too good. That's a premium from there, but they still dead since 2018. IIPR, I think we've seen that. Just use the REIT philosophy with all those. Try not to pay too much of a premium. This is actually great that they've came down. I mean, if you could get it a little cheaper, it'd be even better, but 7%, not bad. How do you avoid dividend traps when you want high yield? Make good time being, but keep one in the long term for 10 plus. That's why I just going off of the company itself. That's why if it's an ETF, I mean, that's subject to change. If you're going to go buy any sort of company, just make sure you know what it is, right? So, we bought IRM when it was yielding like 12.7. I knew what the company was, and I said, I like that logic. I like the idea of it. I think it's going to be here. So, kind of going back to that mentality and making sure that they'll be here, the payout ratio is not too high, all of that. You like HBI. I just know it's going to be here in 10 years. Like I said, we talked about it yesterday. It just the last 20 years of revenue being $2 to $4 or $6 billion, net income $500 to $1 billion. It's done that for 10, 20 years already. So it's kind of just along those lines. I don't know what JPM will do or Some names if you don't know about them as much, but like legitimately my whole life I've seen Hanesbrand. I've seen Michael Jordan with Hanesbrand, but it doesn't mean my confidence is that high. So, I buy one high yield dividend stock every 3 years. I mean, I could deal with it. The Colt ETF for the long term. I mean, if you want me to, I'll get paid 1.5%, 2% on all of your money for the rest of my life and turn it into my piggy bank. Or you could just follow along with the long term for free $99. It's up to you. Maybe into the meantime. In the meantime, you follow along. Maybe one day. I'd rather have a REIT, though. Because REITs, you're forced to pay out 95% of profits. And you can only use 5% for, 5% for operating expenses. Tesla running down. Yeah, even the market, though. You've given up the Russia news. IPR is not quality. You looked into it. Questionable cash flow and unprofitable tenants. I'll have to look into it. It looks like they were up a lot. It still even has premium, though. That's the problem. That right there just makes it easy. REITs have to pay out 95% of profits. How do they have any cash? Yeah. They're not. That's the whole idea. You could raise capital, but the idea is with a REIT, because they're not taxed. So if you're a REIT, you don't get taxed as a company. Because if you're paying 95% of profits to shareholders, you get REIT status. You don't pay taxes, and then all of your shareholders have to pay taxes on what they get. Thought it was 90. I'm pretty sure it's 95, but maybe it's 90. I know it's like a solid majority. You have to pay it. You have to pay out to shareholders. So if you do that, then that way, the idea of a REIT is to take people's money who invest and go buy properties that generate returns. And then everybody splits up the returns. So you don't need to grow your business. The only way you grow your business is by paying people out and by getting more money and buying more property. Ever thought about starting your own REIT? Yeah, I've talked about it many times. I don't like dealing with people. Like, it's just a lot of work. So you got to think, like, I could start a REIT tomorrow, and I could even put properties into it at a very large level, but it's just not. I mean, you'll have to deal with people. You got to get lawyers. You got to file forms with the SEC. You got to make, you're going to have to manage inflows, outflows. Like, it's a whole nother level of business where it's just, again, you'll get paid for it. I'll probably make 5 to 10% on all of the holdings, and I could have good access to it, but the question is it really worth all of the work? And then you got to just deal with people. You need constant investors? Not really, no. Because if, like, let's say we raised $50 million at initial IPO, right? And you take that $50 million and then we go and buy $50 million worth of properties. And they're all yielding 5, 10%, whatever the properties return, right? We would hold those forever. And then everybody would just pay, we would just pay it out to everybody holding investors, and that's it. No, Cardone is not a REIT. Grant Cardone, he syndicates deals. So that would be like me finding the deals and then selling them to qualified investors and then getting my own little type of equity on it. Those guys are syndicates. They're a lot different than a REIT. They're not required to pay out profits, and that's it. And that's the thing, though. We would only be REITs have to just pay out the profits. But at the end of the day, syndicates is like I've syndicated a couple of deals. That's what I did for a lot of the China money I dealt with, is that I would bring them fat deals, and I'd say, here, I'll do this deal, and I'll get this set up, and you guys are going to make this much, and then give me my 5% and without putting any money in on the deal. That's what Grant Cardone and those guys do. So it's like, even then, even agents can do that. A lot of people don't know that. So, like, here's a fun fact. If you want to make a shit ton of money and you have a long-term mentality and you're a real estate agent and you work with investors, instead of taking a commission ask them to roll your commission into equity. And then, so especially if you're on commercial real estate, that's what you could do. I've seen commercial real estate agents become multimillionaires by helping out their commercial clients. And instead of charging, a 2 to 5% commission, they roll their real estate commission check, they roll it into equity. And then you roll it into equity, and then now if the investor is willing to do that, you're able to take a portion of the deal without putting any money at all. And then if that blows up in 10, 20 years, you just made bank. Tesla shareholders are pressing the board to prove they have a succession plan for Musk. But yeah, no, it's genius. You could do it. It's totally possible. I know a lot of people have done it in the past. And again, if you find deals for people, that's what you could do. Again, I've syndicated deals. I didn't necessarily roll the commission. I would just never charge them commission, but I would just say, hey, I'll do this deal, set it up. That's what I did when I was a lot younger. And like, again, when I was working with Olivier before they wanted to go and do the fund and all that. But it's something totally possible. Bear Cave issues negative report on Rumble. Baba's coming. Is Baba green now? Baba is green now. Tesla, can you do something for me? Can you talk to Elon Musk for me? Tesla, can you stop going down? Oh, WDC is going. WDC Las Vegas. Is that what you call it? No? Okay. Okay, so that was like what? Greedy short of 3 points, but it's back up here. Like I said, you're kind of breaking it, but as long as you don't hit a new low, I mean, it might be able to work its way up, but if it comes up and fails again, you'll still be in a downtrend. I think Futu is dog shit. So sorry if you have it. I'm not trying to hurt you. I mean, I don't know if you were here on the day before New Year's. I showed you all of the emails that they send me, and it just seems like a very scammy business model, not to mention they are coming off of, what's it called? They're coming off of that negative China news. Qualcomm Salesforce to build new connected vehicle platform for automakers. Qualcomm's moving up. Again, that's the CES Auto Show forum here. I believe you're going to get more of those updates. And then 7 minutes in the video will be presenting at CES. Wallbach. I mean, the only charger that I liked was ChargePoint because I've used them. Otherwise, I mean, any of these names for the long term, like we said this year, I would just focus on quality. So, I mean, if you have a section for growth, you could buy some of those names, but I would buy growth names that are just deeply discounted that you know about. But, I never really bought an EV name for the long term, and I don't think I will unless it's Tesla at a very low price. Otherwise, I'm not really a big fan of any of the chargers. And then now that the chargers have lost that hype and they're cheaper, it's like so has everything else. So, this could be pretty much you give me the opportunity to buy, some bigger blue chip names at a discount versus, a higher risk growth name. I'd rather go for some of those. Ford with the divvy, it's like 5%. A little higher, I'm down, but it's already compelling. But like Ford is like, it's a legacy automaker. So that's what I at least like about that. Yeah, automakers who have an EV wing, totally fine. You know what I'm saying? It's like GM, Ford, I don't know, Volkswagen, anything that has like its legacy, and it's been here for a while. Again, just going back to any of the logic there. Again, you could allocate some of your growth money to high risk stuff. No problem with that. Just don't fall in love with it, and make sure you don't over leverage your portfolio trying to get something that's not really going to hit, you know? Or if it's just going to have a lot of risk. But then at the same time, you could go buy AMD. That's a high growth name that's very, very cheap. Or again, like when we bought Meta there, you know, there's some big names that have gotten really, really low. PCG, I don't know. I don't really have a EV thesis. My only thesis has kind of just been it's overvalued. People got excited about it, but I like the car companies if they're at the right price. What is it, PCG? PG&E, like electric. Utilities could be decent, but I would hold utilities for a swing. Not necessarily for the long term. I like NVIDIA better than AMD, but I mean either or. But then again, if it goes lower. What long-term pick am I most excited for? I think everything we got. I mean, we got to walk away I don't know how we did it last year. Like, honestly, man, God is good. Finger to the sky, man. That's why I'm always be saying that, you know. But we walked away with some cool pickups. The only thing I didn't like about last year was that, like, I added a lot of companies, but I like everything we added. You know, I liked buying, you know, to get Meta at 2015 prices. I'm very happy about that. Netflix at the same level. At, well, you know, a very, very low price. Again, then even like Redfin at a really stupid low. And then same thing with HBI. And even JP Morgan. Don't forget, we bought some JP Morgan at 116 with all of it. So it's like I'm excited for all of those, and I'm still even excited for some of them. I'm really excited for Airbnb, and I'm excited for Altria, and even some of the names that we already own that we could still build to. So I'm just excited for time. I don't know how to describe it, but it just like I like time. I like how, you know, we're doing quite adequate, and I think there's opportunity with that, and that's it. I don't exit, so I don't have to alert for the exits for the long term. So in the last 3 years, you've watched me for 3 years in a row. I think a little longer, but 3 years with the long term. All I've done was add to these portfolios. It's gone up, it's gone down, but I've never sold out of anything. Well, UWMC, I'm not as excited for it because that's one there. I like the dividend yield, but it's definitely on my radar. But like I'm saying, you know, everything we got here, it was a beauty. So it's like all of these have just been pretty fire. And then I forgot even IRM too. We had that one in the smaller one. I got some Coca-Cola, some boomer names, but I'm just down for the time. I think with enough time, I mean, our mission is being executed, and just little by little, that's exciting enough for me. You have 122 shares. Yeah. We have another 116 in another one, but technically I think I just bought like 100 shares in some, and then look at all the drip. We've gotten a lot of drip. Even then, on all of these names, like, you know, just enough time. Got me 2 dividends. Yeah. But like even JPM, we've gotten a year of dividends almost. Altria, we've gotten, you know, I think I've gotten like 20 or 40 shares of Altria just on drip. Or no, I think 23 shares. Walgreens, I only bought 100 shares once, and now I'm sitting on 109. That sucks today. That one was up before today. AT&T is awful, but it drips. Where else? I think that's it. And then the rest were just the failed growth plays, but then a couple of growth at cheap prices is working for us. Tesla flush. And NVIDIA in 1 minute. Keep your eye on that. See if we get any events on that. Yeah, bonds are ripping. We got some way to go. We're doing better than the market. MO dump. I can't. MO $41, man. Just give me it. T's payout's only $5 because it gave us free shares, though, remember? So we walked away with like 30 shares of WBD because of it, but now their yield is 5%, and I'm not a fan. NVCR, that was the biotech from this morning. Dollar soaring. I mean, I'm assuming the data, but it was already up in the morning with everything else. But yeah, ever since the data and all of that. But I know the pound and a couple of other things dropped. UK gilts are kind of looking ugly again. Disney. I don't know about the news, but Disney was very strong the other day. Yesterday. WBD dumpster. Yeah, I think it was up at $30 when they gave it to us or something. And then it just dropped. But I thought you would think they would do better. Like, you would think some of these like media companies would have way better stocks, but they don't. It's kind of weird. NVIDIA CES, we might get some. GM is number 1 car maker in 2022. Ford is number 2 EV maker behind Tesla. What? Does that make sense? So is Tesla number 2 or number 3? That headline says GM is number 1 car maker in 22. Ford is number 2 EV maker behind Tesla. Yeah, so Tesla is the number 1 EV maker then. Ford is number 2. Total car sales, GM is number 1. Why did they word it like that? Yeah, Mary Ibarra. She's an innovator. Wait, what's the guy's name? The guy who makes the electric cars? Oh, yeah, Ford. Baba again. And the video, no news yet. Amazon dump. Spy coming down. Pepsi dump. Yeah, there's some like lawsuit, I think, or people are talking about it, but even Coca-Cola. I mean, I would love a bigger dump on some of these. That's what we want for the dividends. I don't know if you could watch CES live unless it's like a big speech, but you're coming back down, greedy short, you're back below it. So this would be another level here, but you're really in that downtrend now still, even from here, but get ready. 10 more points to 3,800. Greek security forces open fire at Turkish Coast Guards, Turkish media reports. Bullard speaking at 10. Yeah, 10 Pacific time. Theta Thursday. It's like the markets, it feels kind of slow, but lately it's just like, well, we won't move a lot when we end the day, but it's still moving pretty big. I mean, you're getting 10-point moves every, 15 minutes? Now back to the greedy short level. And then what? We got 30 minutes here till Euro close. QQQ 20-cent move. Implied. That's where it end by the day or the week. Okay. All right, I'm going to go to the bathroom. Follow me on Instagram at the Trading Fraternity. I love you.
That FTX was making to get everyday savers assets on its platform. So it's well known that FTX was all over sports marketing, for example, all over arenas and athletes' jerseys and umpires' uniforms in the MLB. But behind the scenes, they were also making a push in places like they were trying to get IRA assets on their platform as well, and trying to more broadly influence and find places where people had a trusted account somewhere and they were partnering with those types of companies and going to those types of places.
And if this turns out to be something that regulators really get their arms around, how does it affect the long-term trajectory, do you think, of the way that crypto is going to be regulated? Because this is exactly what government regulators are, the types of people that government regulators are meant to be protecting.
Exactly, and I think this is an example where FTX seemed to, at least for a while, fall through a couple of the cracks of regulations. I mean, you did have FTX International that was operating out of the Bahamas, as well as FTX US, but it seems that, at least for a while, regulators weren't quite on top of what exactly was going on at the company, and I think that it does put a lot of pressure on regulatory agencies to now go back through what happened and perhaps look into how to ensure that this type of thing won't happen again.
Did any IRAs take Sam Bankman-Fried and FTX up on these offers? Do you know?
What we have in the story is an email that came from an employee at FTX talking about a push that they were making in the IRA space. They also appeared in a forum online for IRA type investment kind of savers, and they popped up in places related to these retirement savings. You know, I think that they were cut short before they really got to the level that they wanted to achieve. But what we're trying to illustrate is how this type of push takes hold, and once you get on the treadmill, how hard it can be to stop. So this implosion in some ways stopped what could have been an even more massive, even more devastating situation.
Good point.
Annie, really nice reporting. Thank you for bringing it to us. We really appreciate it. Amazing to see just how far the tentacles.
The tentacles. I didn't flip NVIDIA. I'm still holding it, but I don't think you're getting anything from the event yet. I think you would get a headline, but not yet. We got Bostic today already, and then nothing else, and then that's it with, what's it called? We're waiting for Bullard. WDC, I want to write it out. I mean, it's an outperformer today. It's still holding up, and again, I like the chips from the China stuff, and the WDC has just already been mollywopped. So even leading into some of the earnings, it might be good, but if I could get a good enough bag off of it, I'll just flip it. But right now, it's only like 29 bucks off the 50 shares. NVIDIA keynote was Tuesday. I see him on the schedule today for 10:50. I don't know if we could listen in. CES Autotech is going to be NVIDIA, then Marvel, then HP, then ON Semi, Enovix, and then Micron, Analog Devices, Skyworks, Intel, and then Septon. Sounds like a list of transformers. We're coming down. People saying Tesla breakout. My hopes have already been dashed. I guess we could, this is called, I call it hope. I think people are still hopeful. If that's considered the breakout, I mean, I'm like, that's good. And you're coming down. So 3807 to like 3800, every 2 points is going to trip out. But unless it just flushes. Bro, that volume on the Russian headline was crazy. And now it's just chilling. Tomorrow is going to be huge in the morning. We'll be here early. So I think tomorrow is going to have a big one. I mean, unless they front run it. Crude barrels, 1.69 million. Estimate was 1.5. So watch oil too. Yeah, crude numbers. Treasury to auction, 18 billion. 29-year, 10-month bonds. News for crowd? No, I have not. I actually have not seen that. I just hope tomorrow's non-farms, if it does one of those BS moves and it moves 1% before the report, that could kill it. You know what I'm saying? It's like if it moves too big, even today, I hope you guys see how the data was today. It was like you moved down big and then it stayed pinned till the next data set, but it was really, really slow up until we opened. So it could still kind of be one of those more slower moves, more or less. First check mark, 1 to 12 deposits hit, baby. Amen. Pay yourself first. And OPEC affects oil markets. I mean, that's about it. I mean, think about that last speech when they started cutting. Good thing they did because oil would have been down even way more. But it has like I wouldn't say minimal effect, but it just depends on what everything else does at the same time in the actual market. So coming back down, though, you look like you wanted to hold that. But 3806, so watch 3805 down to 3803. If that flushes, 3800 is going to lead us down to like 3780, 3788. So there's actually still a little bit of meat on the bone, low key. So definitely the greedy short here. If it could hold up, it'll be good. But if you set a new low, that will be ugly with 30 minutes coming into Euro close. My opinion on UNG is the same. We're going to go. I got something cool to go over with you in about 30 minutes. Oil is just, at this point, though, it's like the oil questions, the UNG is just that right now oil is it's getting tied into the recession. And I'm very much starting to believe that in the sense that it's going to be like that. What we saw last year is over now. And it's really getting into this point of what happens after oil moves like that. And then what happens if you do enter into a recession? What happens when things, occur like that? Because that is it's just now you're going to have to really realistically, we're going to have to compare this to 2008 or even like 2001 and any other times where the market is slowed down or the economy even, and oil, oil and energy and commodities have their own little effect. Oil deflation will lead actual recession. Yes, and it's also getting to the point where this should make a lot of sense. If oil goes back up, the Fed cannot cut rates at any point nor pause. But if oil goes down, it actually makes sense where the Fed might be able to pause. You could even argue that the moves right now in oil and UNG are even advocating why the bond market is playing the game of chicken with the Fed, because it's down so much. Like if you don't want to, the Fed is going to be wrong, or remember, they're going to tell you it's transitory before they admit it to you, right? They're going to tell you it's a soft landing, or that, we're not going to do this until it changes at the whim of the data. But where oil and energy is at and the price of such, that could dictate the broader policy, right? Yes, it ties into the currency as well, but just think about it. right now, if oil shot back up to $120, do you think Powell would actually stop raising rates? Just, I hope it makes sense logically to a lot of you guys, right? Just think about it. Because if oil is up, prices are up, oil going up, leading to higher gas prices, you know what I'm saying? There's no way inflation, Powell would be in a very difficult position. Because then they're going to be like, well, look at employment, but they're going to say, well, look at the price of energy and look at the daily costs that you have to spend. It doesn't look like inflation is subsiding at all. But then vice versa now. Now, whenever the Fed stops, whether it's middle of the year, end of next year, or whatever, if oil is down, then you have justification where it's like at least that is one of those big stickier inflation metrics that is no longer wreaking havoc on the economy. And then it makes sense where cheaper energy, cheaper oil, maybe oil has actually, or maybe inflation is actually coming down. Doesn't recession bring about higher oil prices once they start cutting rates, right? And then once later into the recession, but it also could precede a recession, and large drops have commonly occurred. Let's see. Do you think inflation has peaked for this little bit? Yeah, for this next year at least. It's going to come back. I mean, I've literally been saying that since 2020 or 2021. Again, I never believed transitory, and I hope I've been able to educate you guys as to why, and I've been able to show it. But for the most part, I don't think it's going to I don't think there's too much money. That's it. It's going to go up. It's going to come down for a little bit. And then right when people think it's done, it's going to rocket right back up. I think we're living in the 70s. Actually. I've been saying it for a while now. Yeah, but you can't even get the oil. We have to get another metric to show you. But even towards the 80s, literally right before Volcker raised rates, you had to have oil started really, really dumping on there. Again, even 2000, 2001, leading into it, oil dropped, and then it started to go up as you were crashing. But it's the same thing. 08, 09, oil ran up crazy in 07, came down drastically, right? But then by this point, the market is getting clapped and even bottoming out, and then they start adjusting policy, then oil will make its move and then chill out. So where are we now? We're right here. Big run up, kind of dropping into it, not as aggressively. And it just, in a weird way, it kind of precedes those moves. But quite simply, the Fed will not loosen policy if energy is up. It's a simple fact of the matter. They won't have the ability to. It kind of runs in the face of everything they want to accomplish, right? If you want to stop inflation, your tools will not allow you to, if energy is up too much, it doesn't make sense. And if energy keeps going higher, you're not going to ease up on your fight against inflation. If energy goes down, then you're going to be a little bit more willing, or at least you could be able to move along with that. But, commodities, Fed, inflation, everything is going to move in waves. If oil dumps again in a weird way, I mean, it's both good and bad, depending on, it's bad if we're trading it, right? But it's very good for if you want them to stop raising rates, or if you want monetary policy to cool down a little bit, then it's actually great if oil comes down, even for a lot of companies. Netflix gas in, sell the call, or hold for greedy. Well, that call will be dependent on non-farms. So if Netflix is gassing now, it's definitely outpacing. I mean, you got a pretty solid gain. It's just That's it. By tomorrow morning, if the non-farms comes in bad, and it comes in as weak data, you're gonna make bank. But then at the same time, if that data comes in strong, you're gonna lose all the money. So it's a nice little back and forth. Best to stay away from growth. It's just best to stay away from anything too expensive. That's it, though. It's not even, and too expensive is very subjective, right? It's just understand there's risk. That's the best way. I wouldn't say stay away from growth. I mean, literally, I bought in a lot of growth recently, and I'm up 30% on like 5 or 6 different plays. But the idea is just like, that's why I'm so specific. Where I'm like, listen, if I'm gonna buy it, I want it at a really low price because I'm assuming everything can drop 30% from here. You get what I'm saying? So it's like, otherwise I might as well wait. If I already have exposure, and if I think it could drop 30% and I already have exposure, that's why I'm willing to even pass up on things. Because if it goes up, I already have exposure. If it goes down 30% from here, I've already been down 30%. Again, my long-term plan, that's not going to shift, but then I have all of this cash, and then I could just go buy everything a lot cheaper. So I wouldn't say stay away from growth, but don't fool yourself into thinking that this is the worst of what you've seen. You see what I'm saying? Where it's like you can have lower prices from here. You can have Apple can go down lower, Netflix could go down lower, everything could go down lower. So it's like you want to try to get things if you are going to buy it, there will be deals, but just make sure you're looking at prices that are more or less in line with that view. Yeah, HKD, I've heard about it way too much today. Netflix still ripping. How they do it? I put the KHD. Keep money on the sideline. Yeah, and just don't overpay on the rallies. You see what I'm saying? We've seen it way too many times this year. Or last year, I guess. Right? It just if you're buying after a little bottom and bounce and you buy here, you're down 20% now before it drops another 20% 6 months later. Right? Just don't buy into these pops. And then you got to be able to find it. Now this, like, you got to realize, even from October, we are legitimately up 20 to 30% on so many plays. That means there's 20 or 30% of risk just there. And then if you hit that low, what's going to happen, right? And then assuming the situation gets worse or whatever else it may be. So that's all you just got to keep in mind is there's more downside. Oh, Jake from State Farm hooking up the Twitch. Hit him with it. I love it. I love not warning the Twitch of the horn. Because I could just hit it. You know what I'm saying? Amen. Amen. God bless y'all, baby. AMD CEO talking on NBC, CNBC. Yeah, hey, Chips, again, you didn't hit a new low on that. That's a good sign. And now 15 minutes till Euro close. It's kind of doing what we did yesterday. Just a little bit later. Yeah, I don't think that's on news. I think we're just getting into Euro close. No warning horn's the best. Your wife got you a horn to blow that sounds like yours. Hey, bet. Hey, bet. We got to start sending them out. We got to start sending y'all your own horn. Bro, Netflix is insane right now. Good call, though, bro. You guys don't remember this morning? How many Chads were like, Netflix calls, Netflix calls, Netflix calls, Netflix calls. So, no, Chad was on top of that one, man. I was kind of like, why is everyone so bullish on Netflix? But it really, really shone through here. Can you explain the answer to oil dumping? What are you not getting? Let me know. The whole idea is that higher energy, the Fed will raise rates because higher energy causes inflation. That's it. So the lower energy is, the more likely the Fed will raise rates, or they will stop raising rates, and then vice versa. The higher energy is, the more likely the Fed will continue to raise rates. TLT, I think the bonds are, there's a strong bid all across the board. And then the bonds sold off big from yesterday. But now, again, maybe some of the data could be pointing towards that. But the bonds all year, they reacted to the data, a little bit worried about how it could affect Fed policy. But the bonds are holding steadfast to this idea that the Fed is probably going to stop sooner than they're saying. Bullard could be hawkish, but we are lower. That's the thing. But I don't know. The last couple times we've heard, what's his name? It's been awful. Remember losing money to the horn and claps? That traumatized me, but I still listen sometimes. I mean, people call me superstitious for my beliefs, but I mean, look at the decisions made. You know what I'm saying? JetBlue to offer new daytime flight option from New York to London. I'm still in the Tesla shares getting absolutely clapped. Who's bringing oil down? The Fed? Well, higher interest rates help bring oil down by slowing demand, but at this point, you could argue demand destruction, and the cherry on top is everything else. Is all of the policy shifts from OPEC to the government dumping, price caps, all of that stuff. HKD still going. China is a big driver for oil as well too, but that's why everyone's waiting for the China demand to hit, but it's not. So even though China's saying they're reopening and stuff, you're not really watching all of that come back yet. Or they could just be buying it from Russia, and then maybe it's changing things a little bit. But at the end of the day, though, that will be a factor because China reopening will be inflationary. TD turns off day trading. Another thing like that. Remember we had that earlier? Get a free horn with every merch purchase. Wow. I like that. It's a good idea right there. AMTD. Yeah. I'm not going to play any of them. I mean, even then, it just... I think we could make normal day trades on, like, again, even if I want to play, MNQ still made us almost $500 today. But like, I'd rather go with the mini futures. I'd rather go with like smaller share plays. But if I hope that Bed Bath and Beyond, reminds you of something though. That's it. You're just, even SI from yesterday. SI was up 40% yesterday before dropping 40%. Or I don't even know, was it 30%? But it's actually wild. Where just like everything in this market, you're 1 day away, 1 hour away from something that could absolutely clap it, especially if it's like speculation based. There's no mercy in it. So it's up to you. Again, my speculation plays are biotechs. I would rather that one I could do all day. Keep it small, a couple $100. It's a biotech. You get a chance of it getting really lucky. You could get clapped. It may even come back, but at least biotech, it's kind of attached to something else, and I know what to expect. Whereas, there's a lot of names out there. You're one bad news away from instantly getting clapped, and there's no mercy with it. Speculate Origins. Origin is not speculation. It is an investment. That's what my good friend Jay Alt told me. So I'm waiting to invest. Origin. I'll flip it on news, though, if there's anything that, like, gets it really, really popping. He knows I hear. I know. That's the word on the street. HKD was just that, like, Hong Kong IPO. It went up, like, 2,000 or 20,000%. It's, like, small float, short squeeze. I don't even know if it was shorted, but, yeah. Bankruptcy news, Wall Street buys back in. It's not working anymore, though. That's it. Like, look at it. You see what I'm saying? They've already warned of, it just is not working anymore. And then you don't remember Ryan Cohen scamming the shit out of everybody? And I told you guys, and then you got mad at me. Not all of you. Maybe if you're here right now, you didn't get mad at me. But yeah. Everything is not the same, dude. It's not the same. I'm telling you, it's very weird. It's very, very weird how all of this, like, look at them, bro. There's just too much supply. They've added too much supply. You had too many people dump on it. The sentiment is not high enough anymore. And it's just, the chickens is it the chickens, right? They're coming home to roost. Is it turkeys? I don't know. Ryan Cohen didn't scam anyone. Don't spread lies. Okay. Maybe, I guess, the word scam is used loosely. I think he was just very disingenuous, and it led to a lot of retail people losing money by getting their hopes up. And then a lot of people on the internet did his bidding to make him $250 million, whereas everybody has lost almost 99% following the event. Is that fair? So I don't know if it's a scam. I just say disingenuous, working against the best interest of retail while acting like they are, taken advantage of, I'd say is the best way. To the point where he filed a filing, and you could read it to people, and they will tell you he did not file that because he wanted to sell, even though the filing said he wants to sell. So, just straight taking advantage of retail and the support that people were there. BBBY didn't want to follow. That's why he sold. You can see the PR coming out. Just stop. How much did you invest, or what's up with it? Like, why are you so into it? Hey, they got you? I feel, man. I feel. That's just what I said the first time, though. It's like, why? Again, you have no obligation to defend people who have not been in your best interest. At the end of the day, this channel, everything, all I've done is shown the best interest for retail. We have taken our losses, but as it comes down to the meme stocks, we executed those perfectly. Getting to the facts. No, the facts was he bought a $250 million or whatever of this stock. People were under the impression, and then with under 60 days, 30 days after the stock went up after he purchased, he filed an intent to sell, sold, and got out of it. So you could try to put it on activist investing if you like, but that's not, I don't know how long you've been on the street for, but that's not serious at the end of the day. But good luck. I hope it works out well, and I hope that belief system takes you far. Again, Ryan Cohen be charged with being an asshole. If he didn't file that form that people were in denial about, he probably could have gotten in trouble. But that form, that's it. he told you what he was gonna do, and people were in denial about it then. But either way, I think the carnage speaks for itself. You know what I'm saying? When was this the Ryan Cohen move? I remember we made money flipping it, but at the end of the day, this was Ryan Cohen getting in. This was Ryan Cohen getting out. I mean, it's not, call it whatever you want. Hit the bell. You recently stopped hitting notifications. Take a screenshot and email it to me if that's the case. It should show up on like your subscription bar in the left when we're live, but we've definitely had that issue. You bought BBBY. Trade against the gray, and good luck. Good luck, my friends. Good luck. TJX, the cheap retailers, bro. That's it. Even Ross has done good, all of them. Anything on Bosch, BHC. And then Netflix just took 3 big candles. Yeah, Bosch Health just took a big pop. 2 big pops, 2 candles. Let's see. I feel like we heard something on them the other day. No, we're dropping now. You're flushing. That's it. 3,800 now is in play. 3,803. Watch for 3,800. Froggy Friday Jr. Tomorrow's data is going to be crazy, though. So Bosch, I don't see anything on it, though. But 2 big candles came back down. I took it off the screen. I love you. Play more MES, MNQ. Remember, if I even play like a bigger one, I'm just waiting for the big ones until bigger data so I could either like average down or move from it. But remember, if I play any, you could go with the MNQs even if I go with a big one. So my size, that's the beauty of it. It translates perfectly just with smaller size. And like in this market, I've been doing more of the MNQs to, I'm trying to ease into the beginning of the year until we get real easy data to follow. So it's been good. It's been good. And then Euro close in 3 minutes after hitting a low at 3,800. Your downtrend is almost perfectly here on the morning. But get ready. We might get some moves, and then I'll go over something for you. Size doesn't matter. I think size does matter. And I'm 5'6". But at the end of the day, go with relative size. Go with what you're comfortable with. Meta, I don't know. And people have been talking about the adding of the shares there, so we're going to see what happens. Do the hokey pokey and you turn yourself around. That comment didn't show up, Tim. We're going to talk about oil and gas here for a little bit. I got a cool research report to show you. Or are you saying what we talking about? We're talking about futures. MNQ versus NQ, MES versus ES. If I go with a big play on one of those, the small ones translate perfectly. And then at the same time, too, it's like I've been trading a couple of them. I think we're like 3 for 3 or 5 for 5 or something on those MNQs right now this year. We've done pretty good on it. It's only been 3 days, but they're great. I mean, they move smaller. They allow you to hold them a lot better. And, you know, you get to do them. Yes, live trade every single trading day. Yes, Monday through Friday, my friend. And then we have a watch list. Second link, nightly watch list main channel. We recap everything. Bosch Health is up 2.5. I have no news on that. Wholesale electricity trading and power markets, no. I have a general idea, but I'm not. I don't think I'm even versed enough to even. I have no idea when it really comes down to the nitty gritty of all of it. Nor have I participated in it. Culiacan Airport in North Mexico closed since 8:30. How quick do you announce the data? If it's economic data, we usually get it within seconds. And even then, we're pretty decent at getting news very fast. Just all depends. Like, I think we got the Russian news about 4 or 5 minutes before it hit any mainstream media or until a report came out. And then data just all comes out at the same time. But low-key, even this morning, bro, jobless claims lagged. It lagged by like 30, 45 seconds. It was weird. So 3807. I mean, watch for a failure here, but if it goes up, it'll be good. Meta, remember, just going off of the cost. They had awful earnings, and then Mark Zuckerberg said, okay, I'm going to stop spending money. And then everyone's like, okay, that's all we want. And then it was at a very low price, comparatively. And I think even like PE, their PE is still like 10 or something. Even with this price, yeah, their PE is 11.9. So, like, even when we bought it, I think the PE was like 9 or something, or 7. I don't know. It was really, really low. So, it's like, it's just weird. It's weird in the sense that it just, people are more worried about at some point, and then another bad earnings, people are going to price that shit like it's going out of business. So, it's kind of interesting. Okay, there's your pop. 8-week bills allotted at high, 4.1%. I don't know the when issued. And then Euro close, so that's it. You remember, Europe was bad comparatively to the last couple of days. Oh, where is it? Oh, I need to see it. Damn it. I had that report for it. I need to find it. That's what it's all about. I'm trying to get this for you. Hold on. I'm trying, bro, that natural gas report I had for you just disappeared. It's not good. Where's commodities? Let me see. I wanted to. No, it's really, really good. I think it's there's a lot of cool stuff, but it was comparing is really what we talked about already. But there was a lot of cool graphics and charts and then the breakdown. I think they might have gotten rid of it. I was talking about the second half 2008 things. Hmm. Ah, here it is. Interesting. So actually, this is an old report. It just got updated. That's why I couldn't find it. Interesting. So you're moving up here. Yeah, in the video, we haven't heard much on that. Bonds. There's the SPY. If you could break out from here, it might be a decent for a greedy long. Again, euro close now. We're bouncing. We've done this a couple of times, though. And again, bonds are still up a lot. Mm. Today is boring a little bit. It was a little bit more exciting earlier. The data was nice. And then again, euro close, it might get a little crazier. So we'll see. But now, Chatadonia, you've waited for this moment. You've asked me about this moment many, many times. You know that? You've asked me about this. I've been asked this question so many times. You know, this is a very, very good question. Josh, what are you going to do with natural gas? Josh, how do you feel about oil? How do you feel about oil? You know, this is probably, I don't know if I've been asked this more than, can I see his face? So it's good. Oil been very, very active. I don't know. I kind of want to do something here now, too. I might make a trade here in a little bit. Bonds top, but as far as oil and UNG, I'm still down substantially on both of those. We killed it last year in the final purchase and waiting with shares. I'm glad we got shares, which was good, but it ended up hitting me a little differently. Okay, I bought one MNQ for the long side, 10,855. Not a recommendation. You'll lose money. That's the one I wanted. Only one, though, instead of two, because then I still think it could go down a little bit, but we'll use that. Sorry, I know I'm supposed to be talking about oil. But still holding it, and even though I'm taking a big loss, I mean, really, we've been talking about playing the x-axis over time, And we've already talked a little bit about what happens to energy prices ahead of the recession and then now demand destruction. It ended up being up there, but it's really, I'm waiting till the end of the quarter. And by the end of this first quarter, if any of what I'm about to share with you materializes, you know what I'm saying, then I'm going to cut out and take my loss. However, I'm going to use this end of the quarter and really what goes on with the data, the Fed, and everything to determine if it makes more sense to average down or just walk away and be a man about it, you know? So at the end of the day, it's always been about the x-axis, which is time. So I don't care about it going up or down. I would love for it to have gone up. However, it's not going up, and it's all about the timing here, especially with all the external factors like we talked about on Tuesday. So this is what I want to share with you today to kind of understand what is going on. So what we're going to be talking about, this is a research report, senior micro strategist Mike McGlone, and it's a little bit older. It kind of got updated, but I think this is very, very interesting. But the idea here is that long energy, short equity unwind, and 2008 rhyme. So responsive selling, pretty much the theme of this is that long energy, short stocks unwind may look a lot like 2008. So responsive selling in second half may overwhelm both energy and equity prices and echo to second half 2008. The typical forces of supply and demand elasticity have been constant in energy, and the benchmark natural gas futures face headwinds from index rebalancing if prices don't drop. The Federal Reserve sledgehammer may swing harder. So this is kind of one of the bigger points here. And you got to let me, he'll read it. I'll read it here, and it's a little bit more explanation. But what I want you to understand is that look at how UNG and oil was, especially coming into this next year now. One thing you got to understand is that when UNG is not up as much, when oil is not up as much, and now that it's declining, there will be rebalancing on a lot of these funds. Hopefully you understand that, in the sense that now it has less of an impact, or when it starts going down here, and especially after spending almost about a 1 quarter dropping, funds are going to reallocate their strategies towards it. And that rebalancing now, it's not only of the price moving, but it's like, pretty much you're not going to see UNG and oil added as much to a different ETFs, or people are going to lower the amount to balance out any of their strategies. Again, that's why this first quarter is going to be so important, because depending on what happens with rates, the economy, the data, what will end up happening is that people will say, okay, it makes more sense for me to go long on growth stocks and short commodities and vice versa. Whereas last year, especially in the first half of the year, what was the play? People said long energy and short stocks. Are you guys following? So that's a simple sort of balance that big money and funds could start to do. And that's what we picked up on at the beginning of last year, is that people had this idea. They say, well, look at the environment. The Fed's going to start raising rates. There's all of these issues with Russia, Ukraine, all of that. And again, the weather and other stuff factors into it. So what did they start doing? They said, okay, short stocks buy energy. So now, if anything for this first quarter, even the first half of the year, but I'm sure we'll know a lot by the beginning, the first half, hopefully you get what I'm saying here, is that if there is a bigger sentiment shift, you will watch a total rebalancing of people saying, okay, energy's done, go buy growth, go buy value, go buy the things that are very cheap. Yeah, don't even get me started on Tesla. But that's kind of the first thing. Is your bias looking? Well, this bias I'm saying now is actually, this is against my idea. I mean, I've always been about the x-axis. So I respect a lot of people. People were telling me this when I made my trade on it. I just disagreed. So, and that's where I said, hey, I'm willing to play with shares. I only averaged down once, but I respect it. I just pretty much in September 2022, I did not expect demand destruction to start occurring. I thought we would have had a little bit more time. It seemed the Fed was hell-bent on raising things, so that's why I went with it. But that's why I made sure I went with something related to equity and not options. But, that's what I get for it, and I have to pay it. I gave back a lot of my gains, and I was going from a position of gains, but at the end of the day, I definitely thought it was worth it. At that moment, I would rather have been in it than not. Then if I ended up being right, it would have been the monster move, and I didn't want to miss that. But at the end of the day, there was people who accurately said, you guys are saying demand destruction. You guys are bringing this up, and I agree with it as it's now came true. But at that moment, I just disagreed with it. So even then, what I am showing right now, this is showing you hopefully both sides of the coin. Whether I'm right or wrong, whether I'm up or down, my main goal is to give you guys the information on here. So, and that's what this is saying, is that as we're able to move forward here, we are going to find out really what this next quarter is going to bring. And if we do, and that's the thing though, I am pairing it up with bonds. And like I've said, if energy does begin now this demand destruction drop, we have a bigger problem. And that was kind of part of my ideas with all of these trades here, where I was thinking, well, listen, even if natural gas comes down, what's going to happen? If natural gas comes down, demand destruction is going to come down. So at the same time, take a look. And this is something you got to keep in mind. This is when the stock market was at 430 as natural gas was declining and went down to 340. And now we are at 379 currently. So this is the problem that I had comparatively to, do you guys see the difference? While the last time the market hit 360, natural gas was going up. This means it was moving off of something else. But now, once UNG started moving with the market, it's starting to bring about this whole idea of demand destruction. And that's what we're talking about now, because this is what we need to be looking at. So here's your first chart. Where is my chart? Yes, I do have gas. I do. And that's why we're going over everything, but everybody just keeps asking me it. But I am sharing with you why I plan to either take my loss. Instead of a stop loss, it's a time loss, more or less. I'm based off of the x-axis. Again, just like you've seen me go with every other event. But we're looking at here. So here is the 100-week moving average versus the S&P moving average. Again, it's kind of what I just showed you on the chart there, where at one point you're now watching equities. There's going to be a shift here between equities and not, of short equities, buy energy, and then vice versa. So you could kind of see here, history's done this a couple of times, but here is the logic behind this. Energy prices have rarely advanced as rapidly as they have in first half. This is what we saw here. Again, this last year, what you saw in the beginning, it's only really happened a couple of times. The fact that supply and demand elasticity typically react with reciprocity may plot out in second half, which we're kind of seeing. Akin to second half 2008, the invisible hand is in our graphic showing the potential early reversion from the greatest stretch in the Bloomberg Spot Index of the 100-week moving average since 1991. Notable differences from 14 years ago include the relative overextended condition of the S&P at the start of 2022, aggressive federal tightening, and the world tilts towards recession, including China, and Russia's invasion of Ukraine. Spiking energy is lifting global recession risks, and central bank interest rates. Energy prices in the S&P have dropped about 60% and 30% in second half 2008. Unless they fall in second half, the Fed is more likely to keep tightening. So the whole idea here is not only one, you can see how the stocks move, but mainly after any big rise in oil, gas, what ends up happening? You get pretty much equal and opposite reaction. Now, the good part is that anytime, again, 2000 leading into 2004, after they matched up, you do get the bounce back up, and then hopefully things get back into a more normal supply-demand balance, right? So that's what we've seen a couple of times, and really, that's really what we want to be looking for here, or if it makes sense. Otherwise, if there's more drops, there might be more drops on both sides. Again, even leading into like 2020, you saw gas drop actually more. Gas and oil drop more than that. Even 2015 with China, natural gas dropped more than the market. Oh, my overlay covers the ball. I was trying to look at the SPY. So, and then again, like the point we talked about earlier, is that related to natural gas and oil, the thing about it now, hopefully you see, if we're wrong on UNG, you're wrong on oil, and now it doesn't come back up, what does this bring about? We talked about it all day here today. Not all day, but for a little. And Microsoft is dumping on the low ticker. But it's very simple. Energy has to drop now that it's given up a lot of the gains there, and now it's starting to kind of rubber band from the run-up. Energy has to drop, otherwise the Fed is going to keep tightening. So it's one about demand destruction, but the next level now is about the Fed. So it's kind of bittersweet for us, but now really it's like, okay, energy and gas are down, and there's a reason why, even with the weather, even supply and demand, and there will be a point where the rubber band snaps back. That's why I'm playing time. However, it is now tied to the broader macro here in the sense of it's very simple. It's either we're getting massive demand destruction, and even then it is either going to be if energy comes back up too soon, the market is not going to like it at the next level because the Fed will keep tightening and vice versa. So now the next question is this a lose-lose for U.S. natural gas? So now this chart is saying what stops typical natural gas responsive selling? Oh, it's not showing the overlay. This should be overlaid with the Bloomberg in there. How come that's not looking up? No, it's not giving it to me. Hold on, I'm trying to get this up. It's not working. So there's another chart. It's supposed to be the commodity index overlaid with natural gas futures, but let me go back. This should take you through 2004. Yeah. So again, there's one thing now people are looking at. And then again, all of these moments have correlated with both demand destruction or other Fed policy, but it's looking at the reciprocity, or, you know, you go up big, it's going to be reciprocated on the back end, and then vice versa. So again, here are times we've gone through it with oil today when I showed you that, but this is natural gas. So now a headwind for elevated U.S. natural gas, in addition to typical forces of supply and demand elasticity that have pressured prices since the 2005 peak, is the commodity index rebalancing. At almost 18% on August, natural gas was the highest weighting in the Bloomberg Commodity Index. Rebalancing occurs in January, and net selling will be necessary to bring gas closer to about 8% of the target weight at the start of 2022. So this graphic shows how rare it is for natural gas to reach similar extremes in price dominance as it has in August. So this was supposed to show you the weighting. It's not overlaid there. Yeah, it's not even going to give me that one. This is just natural gas futures. But do you guys get that one? Quite simply, is that at the beginning of last year, when you look at the commodity index, natural gas made up 8%. And then what happened by the peak that we had there in August? It shot up. What happens when your asset shoots up? Other things either go up or go down, or they don't go up as much. What ends up happening, it becomes more weighted. And then they rebalance by January. So honestly, in a weird way, the fact that it has came down leading into January, that could be good. But at some point now, a bigger part of it is that it was outweighing the overall commodity index. So now the estimate showing that 10% of gas futures open interest may need to be liquidated to alleviate overweight conditions at current levels in the Bloomberg commodity market cap. So essentially, at the start of the year where we are now, and then as it's moved from last time, pretty much you're going to want to come into a balance, and then they're going to try to balance out these indexes. And don't underestimate how you purchase futures, and some of the futures open interest is related to some of these funds that are using it to average things out. Remember when we were looking at wheat, wheat ETF was one of the bigger buyers of the wheat futures. Same thing applies to natural gas. So now, in a weird way, the sell-off here has been good, but the real question now moving forward for this quarter is, how do these funds balance? How do these commodity ETFs, how do they weigh natural gas moving forward from here? So second half unwind may pressure USO more than the SPY. First half dip in stock prices and rip in crude oil may turn out to be more of a counter trend move for crude. Since United States Oil's fund inception in 2006, the ETF is down 80% to the August 22nd gain of around 340% for the S&P. The graphic shows the consistent outperformance of SPY and USO and whether the relationship has reversed either way. Either way, risk versus reward may lean towards resumption, particularly due to the sharp downturn. The ratio stretched too high in 2020, and now that the Fed is accelerating tightening, both ETFs may face headwinds. There are a few more powerful deflationary forces than the stock market declining at high velocity. Spiking energy prices are typically ephemeral and have increasing central bank vigilance to arrest inflation. So, overall, the idea here is we're looking like 2008. How we play out, you're going to watch a little bit of a push and pull, equal opposite reactions as we enter into there. But at the end of the day, people are expecting oil to unwind more than natural gas. But thankfully, we're already here into January, and we're going to see where it goes. But point is, we're either going to face 2008 or UNG is going to bounce back up. That's what I get out of it. And we have no way to tell. So that's why we're going to wait for the first quarter. And I hope this information helps you. And even then, my idea has not changed in the process. We're just using the x-axis. So, yes, amen, amen. I hope that helps you out. There is your natural gas and oil talk for the day. Tune in on Monday, and we could talk about it again. And hopefully I could find you something else to show you. And all opinions are welcomed. And, yeah, welcome. That's because gas is already down. Well, gas could go down more, is what this is partly saying. You see what I'm saying? It's not as if that means gas and oil will not go back up until the market really bottoms. That's the beauty of all of this. So this isn't to really, what I shared with you is nothing to defend my position, where it could really go both ways. If you truly, I understand what is said, and that's what I'm saying. If you understand it, it's telling you it's either we're entering into that second half 2008 now, where it's no longer short equities, buy commodities, where it's short equities, short commodities, until you get that rubber band pull and then equal and opposite kind of returns a little bit, or as the central bank now eases up on policy to allow it to come up. So do you see where I'm getting at with it? That's why I think it's quite interesting, and that's why I wanted to share it with you, because at the end of the day now, if I got caught off balance with it, I did not think demand destruction was going to occur around August and September. I did not see that happening, but guess what? It did. And now it's like, okay, maybe you're a little faster, because again, around September, we were like 5 months into the yield curve inversion, or maybe like 3, but now it's a lot longer. But now this time around, now the commodities, there's no safety even in the commodities. So that you're going into lows, but now, that's the one thing. Depending on what time frame you're on, overlay it with UNG. It's either on the short term in the quarterly. That means the SPY is going to catch up to UNG if this is correct, and we're going to get that, right? Otherwise, on the yearly, there's still a lot of time here to kind of catch up. But overall, something is about to snap more or less. So get ready. Amen. 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 It's good. Biden live on border security on YouTube. Wow. Say there's a bloodbath in the streets. SPX selling off 3,000, sub 3,000. What are the safe haven stocks? A bloody time, consumer staples, energy. Commodities may provide that if they get really low, but it will probably be staples, but in a weird way. It will be the companies that are, it's the companies that are kind of already priced to go bankrupt in a weird way, as long as they don't go bankrupt. So that's why some people are going for deep value right now, just in the sense that last year, depending on their performance, earnings, some companies already priced in this idea that they're going bankrupt. If you actually look at some of their pricing, and again, in a weird way, they still do have higher multiples depending on what it is, but those names might be the ones. Pretty much the names that got killed first might provide their own. Explain the part with oil in '08 in Afghanistan. Yeah, we did not explain that, but, I mean, let's be real. What else is happening that's, I don't know, Afghanistan related, would you argue? Currently, from 2022, 2021, 2022, shit, till today. Not Russia or OPEC, Ukraine. I mean, would oil and gas would have had a different effect there if we didn't, again, on both ends, both the upside and the downside. But you technically do have a global conflict around this same time as well, too. It's just not the scale of the Afghanistan, Iraq wars around. But again, Iraq was around 2000 and 2001. Proud test. Data shows there's been no demand destruction, price due to increased supply. I mean, I could agree with that in some ways, but there is some elements where you are getting, I guess, at least the demand destruction at certain prices. I mean, people still need energy, right? But then again, we're watching it on other areas. So if I would agree if the chip makers didn't, I'm looking at more of an aggregate demand destruction, more or less, where you got to think the chip makers have been plummeted. Cars are plummeting. Houses, lumber, you could go across the board, but certain things we're always going to need. And then that's why there is that's this supply-demand elasticity. Demand went up, supply is going to go with it. Again, especially as energy related, and then even down to the agriculture. Like we talked about there, wheat wasn't going to last forever because as the price goes higher, more farmers are going to plant. And coming back up. GE, which GE? Where's Bosch still? And bonds are up. SPY needs to catch up. Bosch is still running. U.S. Germany send Ukraine armored vehicles. Demand destruction, just demand gets destroyed. So, I think used cars is a good example. Even chips as well. Again, I mean, lumber, it's either prices get too high where people just reject it and they say, no, I'm not going to buy at that price, or they can't. But then also things that affect the purchase. So, even aggregate demand, the whole idea of the Federal Reserve and interest rates, as you raise and lower rates, it affects aggregate demand. Right? So it's just think about what happened with cars. Even then, I'll tell you right now, even to finance a car between a year or two ago versus today, the rate to finance is even higher. It's almost doubled, I think. But then now when you go and look at the price of the cars, they're still high. So imagine now higher interest rates for a year, both interest rates on a house goes up, less people are going to buy houses. Less people are going to buy cars. The more expensive money is going to be, it is going to make the bigger purchases a lot harder to purchase. That's why cars are one thing, but then energy, you got to think about it. When it's all said and done, you could lower energy demand by, forcing people like they did in UK to cut back and do certain things. But when it's all said and done, you're always going to need it to a certain degree. But as far as the bigger purchases or more even discretionary purchases now, as rates stay high or go higher and stay there for longer, people are going to start wanting to buy less, especially if the prices are high. So if the lack of supply brought prices up, They was already expensive, but guess what happened when things were expensive? The money was free. People were down to buy it. So now prices are still a little bit higher. They've came down, but with interest rates higher, the demand is slowly just going lower and lower because now price is high. People don't demand the same things at that same price. They'll say, I want it lower. And then even the access to even buy it at those higher prices is starting to diminish, and it has gradually diminished over the last 12 months. Let me see. I want to see the car rates. Average finance rate. Let me see. 9% auto loan. I'm only getting data sets from like 2011. I want to find it. Freddie Mac 30-year mortgage rises to 6.48 with 9% auto loan. I got quoted at 18. Yeah, bro, auto rates are very, very wild. I'm trying to see like a average just so you could get an average. Automobile interest rates. I don't know why my data is so outdated. I'm only seeing like 2011. I see Russia average interest rates on car loans. JPM a little pop. Ah, there it is. Federal Reserve average financial rate of new car. These aren't new cars. I don't know, used. And this is up. This is only till September. It's just not updated. I need to find a better one, but it's showing it went from the beginning 2020, 21, 22. It went from 4.2, 4.4 to 5.5. I think it's probably higher, near 6 now. But you got to think about that. 4 to 6 almost, even 1.5. That's almost 50% more in interest, right? I think you could even look at the mortgage rate as well, too. But, again, there's more cars than there is houses. I think it's a lot higher. But even then, that's almost 50%. And it's not, you get to an average rate of 8%, you're 100% higher. So it costs now to finance even a car 100% more than at one point 12 months ago. So that's going to lower demand, not to mention now the car prices are still higher. So it's getting that in there, but demand destruction occurs, and I'm even speaking on those broader levels here where I'm looking at aggregate demand across the board. We're watching it fall off of cliffs in September. Or you could just buy the car up front and have no loan. Well, yeah, but that's like when they're like, yo, you're homeless. Why don't you just buy a house? Simple. Then you won't be homeless anymore. Well, it's just not everybody buys a car in all cash. You would be surprised. Be responsible. Well, I mean, again, when the rates were cheap, the most responsible thing was get a loan. I'm telling you, bro, they were giving out money for free. You will never see a 2.7% mortgage on a house ever again. Probably. I don't think we will for another maybe 20 or 30 years. It was the smartest. You were better off buying loans on houses than putting up cash. And then the car rates, bro, even all the cars were, if you had good credit, they were giving you interest rates for like 1 to 2%. Again, a lot of places even had 0% interest in some like on the lower end cars, but you were able to get like crazy luxury cars for bare none interest. And it was actually wild. So it's just like, that's where it's, in a weird way, it was kind of responsible. Now, it wasn't responsible to over leverage yourself, but I mean, it did pay off in 2020 through 2021 or 2022, but it's crazy to think that, that money, some of the money was practically free. And then especially considering how the supply and the prices moved, it was insane. You refinanced 2021 to 2.8. That's crazy. Yeah, that was a beautiful time. Avatar has passed Top Gun as the biggest 2022 film. Prices were wild. No, not in 2020. Houses were probably 50% cheaper. Cars were cheaper, 50%. Like there was a period. It up until GameStop, then prices started shooting crazy in a weird way. It was like January to March 2021. That's where the prices exploded. And then again, they issued a whole nother set of stimulus. Nordstrom is exploding right now. Yeah, they're doing actually pretty good. Adjustable rate loan. Depends how when does it adjust and what does it have like a range? But there should be a cap. I mean, the bond market is saying rates won't go higher. The Fed is saying we're going to stay higher for a year. So in a weird way, unless Powell wants to go full Volcker, and by, let's say, whatever happens by the end of this year, if, let's say, the jobs numbers keep increasing and they don't go down, and then the CPI comes up and energy comes back up by the middle of this year, then you're screwed, because then that means the whole range is going to be updated higher. But at this point, it seems like even the Fed is saying a peak of 5.25. Bond market is saying peak at 4.5 by the end of this year, and then we go down. So you're pretty much going to be within that range, but it is subject to change depending on how the rest of the year plays out. WBD says we're not looking at any strategic asset sales. Seven-year leg. No, well, again, I think you got like another 1.5% as of now, higher than where it is, like by the end of the year. Otherwise, it go down again. None of this is a recommendation. It's all very subject to change, but it really depends on the Fed and the data. Mm-hmm. I think Biden is speaking. And WBD CFO ends remarks at conference. Roblo up 2. Where's HBI? We haven't seen him today. Did he finally calm down? He's still holding 7. Good for you, dog. Good for you. Yeah, Roblo up 2. Redfin down 5. Disney Avatar past Top Gun again. What's the other thing I was looking for? WDC, that's holding nice. And then JP. And I still have that MNQ. Oh, it's barely up now. It was up a little bit more there. We're good for now, but 38.10 again. Danger zone will probably be like 38.05 this time, 38.06. Is it possible inflation is transitory? Well, I mean, just the rates. That's it. It's just the slow effects of the rates now. And then if it affects more demand, we'll see it. But I mean, inflation was transitory. I mean, it's already been a decent amount. Let me show you the chart. But this is like the whole theory with everything. And I hope you guys don't miss it. Because, I mean, it's something we've discussed a lot. Where is it? Take a look. You're early on everything. Just no matter what. So we are 29 months, 30 months into the whole inflation rising trend, right? Again, inflation used to never happen. I don't know if you guys remember that. Like, when was the last time your ass heard about inflation prior to 2021? I said 2020, I have a video. I said, let's get rich off inflation. And it did work out. But at the end of the day, when did any of y'all ever talk about inflation? When did inflation ever come up at a dinner table? When were you really interested in it? 2007 for a little bit. There was that. 2007, 2008, inflation did have its own conversation. And why? Why did 2007 and 2008 have an inflation discussion? It's just what we were just talking about. It was oil and energy. That's when, remember the 2007, it was all gas prices. That was the war, all of that stuff, and then, real estate was going up, but in a weird way, it was energy inflation that people were really, really worried about. But inflation that's why Powell keeps saying it. Everybody, if you know the financial history of the world, they let the genie out of the bottle. That's why it's been so weird. And that's why Powell, he has to say what he's been saying. He has to be saying, no. We can't let it get too bad. We have to be committed. That's why transitory was such a mistake, dickhead, because it wasn't supposed to, they let the genie out of the bottle. You got to realize half of this chart, mother effers were saying it was going to come back down. But inflation didn't really happen too much. It's not something that really occurs in this, especially in this type of economy and monetary system that we have, especially as of late. And that's what people were worried about with all of the QE from 2008. They said, no, modern monetary theory. The biggest worry about the failure to the system that we have would be inflation. You realize that, right? This whole idea of go negative interest rates, go zero interest rates, go buy shit, let the Fed buy assets, buy bonds. The biggest risk of that failing would be massive amounts of inflation, which nobody wanted to deal with. And then, quite frankly, you didn't watch it materialize ever until now. So this is what this chart is showing you. This is where I'm glad, again, people are aware of this now. Again, I was just talking about this very early, and maybe I was premature just because we didn't know, but I was just going off of money supply when it's all said and done. But you're 29, 30 months into this at 7.7 CPI. And again, I think we even came down a little bit, right? So take a look. Another 36 months, you stopped going up at that same pace, but it's slowly, again, it was very, very sticky. And then that's where after that, another 3 years, 2.5 years, that's when the final wave came in. The comeback with a vengeance. See, Act 1, inflation new highs. Act 2, all clear. Act 3, the comeback with a vengeance. And that's what happened throughout the 70s and 80s. So I forgot why I brought this up here. I forgot the question asked by it, but the whole idea here is that we're still very early with everything when it's all said and done and what could potentially occur. So keep that in mind as we do any analysis moving forward, or just that you're going to need some patience. Just welcome to the market, the new market where we had a lot of fast-moving stuff, but now just don't underestimate that you are going to need that patience now, because we won't really know what's going to happen. But it's all going to take time, and that's why it's going to be quite the battle with everything. Yeah, you're probably going to get your dump now. Those are big candles. Look at 38.06 already. It could bounce from there and like chill it out, but if it flushes, this is the greedy short now. You've been here like 4 times. Wasn't as much volume. That Russian headline today was great, though. ON on watch. I think they are at the conference, potentially. Yo, yeah, that could be from that. Yo, ON is dying. I think it is. I think it is at the conference. ON, yeah, 12 p.m. Yeah, they started speaking 20 minutes ago. So conference started and they dumped. But I bet you it's analysts probably writing a downgrade on it. You're going to hear that probably soon. You could try to get into it early. It's already just down 3%. That definitely looks like something there. Verizon's on the high. But they are at CES right now presenting something. AMD and NVIDIA didn't really do much. Microsoft. Chinese stocks and U.S. extend gains and best start on record. Big support. If we melt, we go lower. And we could if the fear kicks into gear. And bonds, I mean, and now it's going to get weird again. Bonds are really about to go green. And if this continues, it's either market needs to catch up. Otherwise, we sell off. Everybody keeps buying. And then that's it. ON's bouncing now. Again, I think you're going to get news on that in a little bit. I would definitely say this is the event. We don't know what it is. We don't know what they're saying. But that was like a 3-4% move total. AMD, just all the chip stocks. That China chip news was very, very good. The China chip news was it's very good for U.S. companies. Pretty much China just gave up on trying to they're letting the United States build out their chips. They don't want to get sanctioned anymore or limited. They want access to it. They spend all this money. They're dealing with COVID-0, and they're not seeing the effects that they wanted from it. Spy waiting for Apple. Come on, y'all don't know who we waiting for? You know what you waiting for. I'm waiting for it. That's why I think. But then again, if we break that level, it'll be bad. But I doubt a gigantic flush will happen without something very simple. It's your boy. It's your boy. It's your boy James Bullard. It's your boy James Bullard here. Here to tell y'all, I think the terminal rate should be 7%. I don't know if James Bullard, he actually, I don't know. He talks like this a little bit. And I think it should be 7% terminal. I don't know why they're doing that. Then they get a little bit of a chuckle in there. I don't know. Bullard has a unique voice, but it's your boy Bullard. Here to tell y'all have unwarrantedly loosened financial conditions. Y'all need to come back to reality. And Eminem comes in. He's like, back to reality. Yo, there goes gravity. Whoa, he goes bad and he won't that, but he's won't, and he won't that, but he won't, and he won't bad, but he, and then Powell was so mad, but Powell must raise rates and he can't, so it could get weird, crazy like that. You know what I'm saying? don't quit your day job. I can if I wanted to, because I paid myself first and I stuck to the principles of the laws of wealth. That's the beauty. That's why. That could lead us into a discussion about saving 10%. We've kind of talked about it, but that's what I was trying to show y'all the other day. You know, you save 10%, do that minimum for a year. You do 20%, you'll get 5 years. You'll have a full year of income. So if you, let's say you wanted to quit your job to pursue a rap career, you could definitely do that. It's amazing what could happen. Crypto lender Genesis lays off 30% of staff. Bruh, literally fat crypto bounce yesterday, and then everyone just lays everybody off. Ethereum didn't move, though, as much. GM, Roblo on the high. Yeah, bonds bounce. I think I might go with the yen. I think they're kind of matched up now. They had that little gap there, but nah, there's still a little bit of a gap. Ever since that stupid little pop thing, I guess it's kind of there. See, they were hand in hand, and then they strengthened more, but then you weaken off the Japan stuff. We're going to have to see. They will come back, though, eventually. They will become best of friends. The yen is down a lot, though. When do you believe retail will go parabolic with their layoff plans? That's whenever the Fed cuts rates, maybe a little bit before, but chances are that's all I'm waiting for. So that's why it's weird, because everything I don't view the rate cut as bullish unless it happens in a I don't know what I feel like. I don't want to be too biased, and I don't want to, I've been surprised in so many ways. And I just know they have so many tricks up their sleeve, but it's just along the lines of maybe there's a way the yield curve uninverts, and maybe they cut rates and it doesn't cause a total panic. But I view the rate cut as extremely bearish, and whereas a lot of people see it as bullish. And I love how I think the psychology of it always happens. That's why throughout the history, it's just I see it now, living through it at this moment, where it's just you go through a lot of pain, the yield curve is inverted, rates are high, and then after you go through 20%, 30% pain, everyone's like, yeah, it's done, and then they think a rate cut would be bullish, but it's not. Why? Because a rate cut would be the Fed admitting that they need to spur aggregate demand. We just talked about oil and natural gas and commodities and demand destruction. You got to realize, if you go and tell me you were just hell-bent on destroying demand for 12 months, 18 months, raising rates at the fastest pace ever in history, and then 2 months later or whatever, you instantly change your mind, and now you want to spur rates, and you want to spur activity, and you want to cut rates, that's very odd. That doesn't, you know what I'm saying? It's just, if you really want it, it's like somebody for 12 months, they're like, we need to save money. I can't spend money. I'm not spending anything. And then all of a sudden they're like, maybe we should buy some more. You would kind of ask some questions, but it's more or less that's literally what's happening. But them trying to spur them, it would pretty much be a sign that's when the economy is really about to slow down bigger than what we've already seen. Because in a weird way, the economy's slowing down, but until those earnings start dropping, some things look pretty decent in a weird way. It's still chugging along in its own little fashion, but that's what we're looking for. think Bullard will be dovish? I don't know. I mean, we're lower. Last time we're about lower or the same price as when. I think we're lower. When go to the main channel, when did I make that video? Bullard's a psycho, I believe is the title. I had a cool thumbnail. One month ago. Bullard is a psycho. Can I get a date on this? November 17th. So you're lower. This was Bullard last time. Bullard made it insistent to tell you that the terminal should be at 7%. So I don't know. He might be a little less, but he might be in the middle now because you're at least lower than, because it ran up before he said that. So I think this might be a good spot for him to kind of be in the middle, but honestly, I mean, I'd rather just react to it than try to predict it. San Diego Gas and Electric traded. Yep. The bill to go. Everyone's been saying that. Yeah, SDG&E. They don't love me now, Mount. Anything good happen? I mean, we made a couple of trades, but I don't think anything like good happened. If anything, the data, jobs data was too good. It was strong jobs data, which led to a negative reaction. And now I'm ready. I mean, I think tomorrow is going to be just insane. MRK running. I think they're at an event too. I think it was earlier. I don't know. I saw them on the conference list. MRK was 855 though. As if the market is being guided to crash to implement certain policies. I mean, yes and no. I mean, I think that's just always going to happen, but it's also like there's cycles. I mean, and there's just, it's something we've talked about. There's consequences. That's all. There's consequences of what happened before COVID, after COVID, everything else in between. So, you know, it just makes sense. You know, things happen in the markets like this. It's very bull runs and bear runs, you know. There's times when there's economic contraction and then there's a lot of economic expansion, right? So it's kind of just in the middle there when you really like it. Just you have not had an economic decline in a very long time. Yeah, believe me, you know how many times people have been trying to go for it? It's been a long time, bro. Missed earnings. ON is going down again. Keep your eyes out for headlines on that. Certainly, it's cyclical. Yeah. It's good, though, I feel. But, like, I mean, the one thing, like, the one thing that will happen is no matter what, they will push policy afterwards, no matter what. That's all. Every economic collapse leads to a big policy shift or whatever. You know what I'm saying? So it's like, it's not like they need to bring it down to cause it, because they'll just fucking all swamp on it right when it happens or afterwards. I mean, how do you think we got all that money? Chinese demand may take time to come back in. I'm not seeing anything. A credit card cost post to hit 4-decade high. Nope. That was a big pop, but I'm not really seeing anything. MRK's leading up now. ON, check the other chip makers. Just look at, there's that little divergence there with the bonds. U.S. House begins set. Can we bet on it? Like, is there any way we could, like, bet on it? You know what I'm saying? Because I feel like that would be, like, the easiest bet. I would just take the under every time. Can we bet on, what's his name, McCarthy? Where are we? Still got to get above 38.20 or all of this is meaningless. And the NASDAQ is actually lagging behind. Action today. It's moving a little tighter this time, but in the morning it was pretty good. There were some opportunities. He'll eventually get it. I don't know. I think it's... Dude, this guy's voting 3 times in a row. He literally's like, I lost, do it again. I lost, do it again. I lost, do it again. So I don't know, man. He's out there. He's really about that life. You could bet on Calci. I thought they were banning like a lot of the what's it called? I thought they were banning the thingies, the bets on politics. I think they are this year. Japan will strengthen cooperation with the U.S. in the area of technology export control. So that's not good for the chips there. Factor that in. Deere presents more efficient planting and fertilizer machine. Let's hit 7th ballot beginning. Japan Trade Minister Nishimura were determined to vigorously support semiconductor cooperation in the U.S. I think it's a catch-22 because, again, China benefits off it, but they also don't like it. And right back down. Oh, man. I think this is going to be... Well, I hope Bullard provides something, but this kind of sucks. It does. That first couple moves were fire, but then ever since here, you're kind of stair-stepping, but pretty whack. And big orders coming in. Still a decent amount of volume. Let's check the volume, actually. Not bad. 36 million by hour number 3. Oh, you got to do some push-ups, Chad. I need you to get the body moving, please. Stand up, stare a little bit away from the screen, relax the eyeballs. I'm going to stand up and go pee. I was going to say poop, but I don't need to poop. So I'm going to just go pee.
Of
I'll be
a
right back.
downturn,
Move the
but it
body.
may well
Let's go.
be
It's
that
game
by
time.
the time it
Happy
sees
New Year.
that, it will have
Amen.
raised rates enough that the momentum takes us down into a mild recession at the very least. And that's what everybody fears. The Fed will do too much before it essentially can rest.
You've said the risk of tightening too long is greater than the risk of too little. With that said, how bad is this recession going to be this year?
Well, the Fed basically thinks that it rather tighten too much than tighten too little and then see inflation pick up and have to do it again. So what would a recession look like? Well, if the Fed believes that if it does happen, it has the tools to elevate growth once again by cutting rates. But of course, these are the economy is slow moving, so there will be some momentum down before it picks up. If we don't have financial sector problems, I think it can still be a mild recession. But there is a potential that things build on each other. For example, employers today are not letting go of their employees because they feel the market is tight. Once they see some slack build up, they may be much more willing to lay off employees. And so we can get a much sharper downturn once there's a little bit of it. So whether the Fed can fine-tune things, I think there's a very real big question around that.
Professor, you've also spoke about recently about the concerns of actually inflation, though, coming down quicker and stabilizing more than central bankers around the world are expecting. How would that work, and how quickly could we see that timeline?
Well, it's not so much that it comes down quickly, but the question is what happens after central banks bring down inflation. So let's say by 2025, we've got central banks bring inflation down within their target. Then we're still back to the problem of very slow growth, where, think of all the supports to growth we had, including the fiscal stimulus and so on. That's going to go away. We're going to have deglobalization on the cards. We have low immigration. It's hard to see immigration pick up tremendously. So all the headwinds to growth, including the fact that emerging markets are not doing well and China is slowing considerably relative to its past growth. Where is the new growth going to come from? And if so, we're back in a relatively low inflation environment without growth. We've seen that before. And it's not a great environment. So how do we get out of that? So central banks at some point have to start thinking, okay, what if we do get there? Again, it's too early to do that. Right now, the big problem is inflation. But it may be that, a couple of years down the line, the big problem again is low inflation or even deflation.
Professor, thank you for the insights as ever. Chicago Booth School Professor of Finance, Ragam Rajan, with us here on Balance of Power. It brings me back to this Michael Burry scenario that we talked about earlier in the week, Anne-Marie. The Fed starts to cut next year, the government then acts to stimulate, and we have a new peak for inflation to talk about on the other side.
Yeah, and also, of course, with the jobs data tomorrow, there's a lot of concern. The market is running incredibly tight. The Biden administration is touting this as a huge success, but what happens when...
Yeah, tomorrow's going to be exciting. It's going to be exciting. McCarthy lacks votes to win House Speaker and 7th vote. S&P again continues to churn around the LT Fibonacci. It's been trading around the 38.2 Fibonacci of the March 2020 low to January 2022 peak. Falls as much as 1.3. Still remains in long-term downtrend. A significant break above or below that level could be decisive. And yeah, that's your technical update of the day. I missed the what? Oh! Are you kidding me? Oh, Chattadonia. Yes, it's here. Are you? Oh, my God. Oh, no, let's go. Oh, Peach Nation. Oh, wow. Oh, ahead of Bullard. Oh, my gosh. Bullard in 15 minutes. I know. I'm sorry for your ears. I imagine my soul. I thought I missed it, and then I saw. Oh, man. Woo. God bless you, Bradley Fizzle. We're starting off the year strong. It's good. Wake you up a little. Are you awake now? There's no way you're still sleeping. I'm just saying, you have to all be like woken up after that now. So that's good. Thank me later. Thank me later. It's okay. Wow, we did it. We made it. Woo! It's good. It's amazing. That's amazing. So amazing. Wow. The charts. Very good. Very, very good. Man. Oh, man. I think the page did make my day. And I'm seeing some stuff here. I'm trying to factor in. It's already January, bro. January 2023. We got to deal with rates. Man, we've had some good talks today. You guys, I think the peach made your day. It's kind of feels like, I don't know, this is feeling very holiday-y all of a sudden. Got to snap out of it. Charge point volume. Is Biden saying something? Chargers. Chargers, San Diego Superchargers. Mercedes to launch charging network. Global branded high-power charging network. I think that's it. Are they partnering up with them? I don't know. I think Mercedes just came out with something on a charging station. Oh, yeah, I think ChargePoint. I just saw it. Yeah, ChargePoint and Mercedes. Ah, that could be pretty good. What, 890, 990? Hundreds of fast charging hubs to EV. I keep thinking ChargePoint is Chipotle. That could be decent for a flip. Bullard is a psycho. I don't think I'm going to take it, but I will scream alert that one out. Because I think that news was kind of hard to find. Or unless they just put out the whole headline. I had to go through the Mercedes article. Mercedes. San Diego Superchargers. The scream alerts. We love them, man. And I mean, just this year, bro, we got to keep fighting. Got to keep fighting and working. And I believe in the opportunity. Don't want anybody to miss it. We've been getting some good trades. I mean, hopefully we keep it going. But that's it. This is the year. It's a great year. Shout out to my God. I feel it's going to be a great year. What today reminds you of? What does it remind you of? I have used a bidet. It was a very interesting experience. I've only done it like once in my life. It was cool. Had a heated toilet seat too. It's pretty wild. Non-farms. Non-farms is tomorrow. Tomorrow morning. Dancing Queen. It is in a weird way. And I mean, a lot of people are even saying it, even in the chat. And what I just read is just like, you're right next to a very key level here, too. Long or short? I'm holding one long, but I'm keeping it very small. I don't even think it'll even move anything. The big money's tomorrow. That's just what you got to keep in mind. Tomorrow could end up being actually very massive. The forecasts have all been low. Like even the, what's it called, was very low. The, what was it? The ADP number was extremely low. Remember, I brought that up there yesterday on the watch list. Like the ADP expectations were 150 and it came in at 230, but then the highest was like 300. And then like if you even go look at some of the ADP numbers from last year, they were very high, especially even for like January, December. But like last time it came in very, very low for November. But then to start off the year in January, last ADP was 800,000. But then again, they changed the ADP reporting about a couple months ago. How is non-farms more important than the minutes? Because it's new data. So if to simply answer that question, and I hope y'all feel me, the minutes is old in a weird way. We were looking for something new. We were looking to see if something was different than what Jerome Powell said on the press conference. We were looking if there was going to be a discussion that they had about the rates, that would be new and not announced. However, it's old date. Everything about it was old. And the market was even down, 6-7% since all of that even occurred. Whereas tomorrow, that non-farms will be your first non-farms of the year. And it would be, it's going to be new information. And then you'll have the CPI. And now the next Powell, it's going to be going off of that data rather than everything from pretty much November, December. Deere announces electric excavator for construction. Where's Caterpillar? PRVB tanking. I mean, I think it hit the 52-week high, chilling out. It is going down a lot, actually. What the hell? That looked a lot bigger than before. But seems like New Year. You started off the year good, sold off. But I think it's done that at every 52-week high. Welcome to Biotechlandia. Non-farms will be pre-market tomorrow, huh? I'm not going to hedge against the ES. I will either average down or hopefully take that shit home if it ends up working in my favor. So if jobs are bad, I think that ES will come up a lot. And then if jobs are good, I may want to even cut it, or I might balance it out with a negative NASDAQ. Short NASDAQ, and then we'll go from there and see. But otherwise, because even then, another week after tomorrow, or next week, really, we're going to be having CPI and earnings. JPM Biotech event? I do not know. Deadline is February 13th. Fed speaker should be on in like 7 minutes, 7 to 30 minutes. I need to check, actually. Fed Bullard at 1:10, so 20 minutes. I have an interesting time on here, actually. Fed Bullard on U.S. economic outlook. St. Louis Federal Reserve President James Bullard to discuss the outlook of the U.S. economy and monetary policy at an event hosted by the CFA Society in St. Louis. Proverbial proverb. I think Bullard will be bullish since he's most dovish. He's very bearish usually. Bullard is a psycho. But then again, he kind of like, we know where Bullard is at. like on the dot plot, Bullard is the guy. Bullard said rates should be at 7%. And that was mind-blowing when he said that. Yeah, Bullard is not your friend. Unless you want him to be bearish, but I don't even even on the dot plot, like he was saying 7, but the highest dot plot was like 5.6, but that's one of these is Bullard. I could guarantee that. Like he, I think he did kind of lower it, but no, he said 7, and I was like, dude, what are you saying? No, the guy's kind of crazy. Well, Bullard said kind of happened. It kind of did. I mean, I think he was extreme about it, and he said 7%. But like, if you think about it, the SEP did go higher, and that really was kind of a surprise. He is kind of right. 41st JP Morgan Annual Health Conference, January 9th through 12th. Lots of biotech presentations. Yeah. Thank you for that. Slack is cutting 10% of product engineering teams. Wouldn't that affect CRM? Who was the other one who cut today? Amazon? NVX. Oh, I forgot about that. Yeah, they did get clapped. They're up now. Yeah, Amazon, I think they're one of the biggest. And then who else? Was it Facebook who cut 30,000, or was it Amazon? But Amazon still has over 1 million employees. So, I mean, if you think about it, that's like, and that's what Michael Wilson was saying. He's like, these companies aren't, even if they cut, it's like, it's nothing. And he says they're going to be too late. And we're coming back down. Watch out for those levels if it gets clapped. But like what, 18,000 divided by like, I think it's 1.007. I actually did that right. I'm surprised. They cut, I guess, 1.7% of their staff. So like, even take their expenses and cost. I mean, I'm sure you can figure it out, but it's good, but it's still not like, it's, they're still going to cut eventually more, but that's a lot of people that they have still. But then granted, if you could cut the higher paid positions, it's a little bit better. Mm. $3,807. So this is the other level. Get ready for it. Dude, dancing, man, this is weird. It was so active in the morning, and then we just calmed down. I feel like we should be celebrating a holiday. Should we make up a holiday? Our good thing is not January 6th today. It's like January 5th, man. I don't know. It's a very calm here for the third day, bro. Yeah, it went on autopilot until end of Bob. We'll see what Bullard does, but man. It's Chad Day, baby. It's Chad Day. It's Insurrection Eve. Jesus. Jesus loves you. NOC to think of P.D. Pablo. No, but I see the correlation. North Carolina, come on and raise up. Take your shirt off. Wave it around your head like a helicopter. Geitz nominates Trump for speaker.
This is not about public policy. This is not.
I said that just came up there too. Abby Vi GS Rivian final trades. Abavacious. Yeah, Matt Gates, I don't know how to say his name, votes for Donald Trump for Speaker of the House. ECB should aim to reach terminal rate by summer, Villeroy says. Watch the euro and pound. A little bit, some ECB comments. Villeroy, ECB mustn't be obsessed with mechanical rate hikes. Too soon to define level of ECB terminal. ECB should depend on data, including more inflation. French inflation to peak in first half and be about 4% end of 2023. Slower French inflation encouraging, but not sufficient. Upcoming data for Abiva. I don't know. Let's check. I could check other biotechs too. Lecanemab, that was Ian. That was, what's it called? No, Biogen. Next one's Arrowhead Pharmaceuticals. ARWR. They have a data release on January 9th. I'm just going through the calendar. This one looks decent. If you're into that. It's kind of expensive. Hold up. That's a pretty expensive biotech. ARWR. They might have a data release anticipated on January 9th. SPY dumping a little bit, or a little bit of a cheek lay. ADRLX, they have regulatory action December, and then ANNX, something by the end of the month. Anexion. And then January 14th, asthma PDUFA for AstraZeneca. Acer PDUFA. Seagen PDUFA. So there's a lot middle of January. And that's about it for from now until February. Okay, get ready. Where is it? 3806. So again, you bounced stupid off. Remember, you hit that in 1 minute, then bounced up. Now it took you like, what, 30 minutes to get here, and then this is about to happen right before our boy Bullard. Yeah, Arch is on the high. 136. Fed Bullard in about 7 minutes, give or take. Some people are saying 10:20. I think the event starts at, 120, but it starts at, I see it starts at 110, so I don't know if he'll speak immediately. Bullard link, we will have it up here. We'll be playing it live. Otherwise, it's just some conference on U.S. economic outlook. Where's the link on me? You gotta find it. I mean, how you gonna ask me for the link when I'm gonna play the link? And then it's like, if you're really that interested anyway, how come you didn't know about it beforehand? And then if I'm the one who told you about it, then you know I'm just saying, bro, like I feel you. So it's like you gotta go Google that shit yourself then at that point. But we will have it here live. But if you didn't know about it prior, now you asking me all of a sudden like, oh, where do I get it? But it's like you didn't even know it existed till I told you. So now if you didn't know it existed till I told you, then you know I'm gonna have it right here, and we gonna have it on here anyway. So I'm just trying to figure it out. But you could Google it and you'll figure it out. I mean, it should, you know, most people figured it out in the process. You know what I'm saying? Sassy. It's not even sassy. I'm just like putting together lies, like connect the dots. You know what I'm saying? I'm like, how did that even happen? How does that even occur? I'm trying to figure it out. Like, you know, yesterday we tried to figure out how it took 12 months to subscribe. And it's okay. Whatever you choose, I understand. I'm not judging you. I'm curious. You know what I'm saying? I'm trying to figure out how we got to this so I can understand a little better. You know, I'm just trying to understand, because understanding is key. You know, knowledge and understanding is great. It's not even frustrating. I need more comprehension. I'm trying to learn. I'm doing my own due diligence. Yeah, I'm trying to figure this out. We're going to get to the bottom of this, bro. Let's get to the bottom of this. Short squeeze come. I don't know unless I don't think we'll get any squeeze or not until Bullard says something. And then even then, Bullard could also just don't underestimate. The guy will not hesitate to say 7% interest rates. So that is something you're going to have to focus on. Bullard will be in the next 5 to 20 minutes. Or 25 minutes. First and only, you sign up for notification. That's an honor. Sadly, YouTube still ain't going to give them to you, but thank you. Amen, man. You know where to find me. It should show up on your subscription bar. That's it. That's what YouTube is trying to play me with. So they'll say, I'll show up on the subscription, but not your alerts. But thankfully, we have a pretty consistent schedule, so you know where to find me, Doc. Tomorrow is the last day to take down your Christmas tree and not be late for a Christmas tree takedowner. Bro, it's weird. I was like, damn. Like, bro, Lending Tips, they, like, got rid of their Christmas tree in, like, a day. I felt, like, offended. I was like, really? It's like that? You just gonna move on that quickly? No, that's it? Just like that? One day later, you ain't even give it, like, a day? Oh, Tesla. Oh, yeah, and you guys know the news yesterday about the little electric boat thing? It was filed by a fan. It wasn't the company. So that was filed unbeknownst to Tesla. Tesla raised to buy at Edward Jones. I think that's the first buy rating I've seen in a while. Jeff Window. He's a pretty good analyst, it looks like. Edward Jones analyst. Let's see. I'm checking his coverage. He's not bad. His average return in the last year was 1% loss. Peer average is 5%. Past 3 years, his average return is 8.75. His peers average 13%. So his last rate, he updated Boeing to a buy in September 2020 on Boeing. That's actually his first update in a while, actually. So, I don't know. He doesn't really seem to do a lot of updates, though. Interesting. I could get his biography, but I think that's just doing too much at this point. He was raised by 2 parents. He grew up in a small town. He likes long walks on the beach and upgrading stocks every other year. Edward. Or no, his name's not Edward. Jeffrey. I don't even know what his name is anymore. Anyways. But yeah, they got upgraded to a buy. How tall is he? I don't know. He might be taller than me. That's the thing. Because, like, you have a good odds of being taller than me. But if you're smart, you know, I feel like short kings are usually smart. So he seems like a very motivated individual that could come as a result of being so small in life. So he had to learn to overcompensate and learn other things. He's a senior analyst, though. And he's from St. Louis, Missouri. His focus is equities, automotive, Canada, consumer discretionary, electric equipment, industrial service, and industrials. Jeff Windrow. That's it. 5 people have viewed him today. I wasn't the only one. Everyone was like, who the fuck is this guy? The chip event, I mean, it's already started here. I think you're going to hear from like Intel and Micron. ON had the conference. We haven't updated there. NVIDIA ain't do anything. And that's it. Isn't it clear that non-farms will come in strong? I would like to think so, yeah, just because of how everything has came up. But I just don't want to get caught off guard with having too strong of a bias. So that's why I think kind of holding it in and then more so reacting. But that's a good opportunity to go for a gamble if you want. But at the end of the day, ADP, the relationship between ADP and not, it's never really shown us anything. And then the jobless claims, it could be mixed up because of seasonality. So, yeah, just nothing's that simple. Yeah, that's why it's like it should. But in like, again, all of the metrics have seemed very strong leading into it. But as of now, it doesn't seem, though, like I don't think it's in the bag. I have the event. I don't have any audio. All I see is his name, prospects of disinflation in 2023. The title sounds bullish, low key. The title sounds bullish of what he's speaking at. So maybe he will come on in 10 more minutes. But the title is the prospects for disinflation in 2023. Let me see. The last ADP. I remember looking at this last time. So last ADP came in low at 127 in November 30th. But then the other time, November 2nd, ADP beat again. And actually, I think November 2nd, inflation, or didn't the jobs do good November 2nd? No, we dropped. So ADP was strong last time, and then it did drop, and then we popped. Let me get the other one. And then remember, though, private payrolls and other things will come into play, and wages and unemployment rate. So remember, the non-farms can still get tricky, right? Just remember, like, even if the number beats or misses, just don't forget they could quickly jump to another metric. So I'm checking for last year. So like in November, the ADP came in very strong. So in November 30th or November 2nd, the estimate was 185 to 230, and the ADP came in at 239. And then November 4th, November 2nd was ADP, kind of like this, ADP, and then November 4th, the CPI came in, or the non-farms came in above those still, 261 versus 197. But I believe the unemployment rate is what dropped. Or the unemployment rate went up. I think there'll be a Q&A here with Bull. But I don't know if it'll be a Bull. I'll call him that. Microsoft on the low again. So, okay, this is actually kind of doing a slower downtrend now. That little bounce there this time. They're tightening up the two-step. Yeah, that was the month where the employment weight. Why do I keep talking like Daffy Duck or Bugs Bunny? So that was remember November. So last November, ADP came in higher, very high. And then non-farms came in higher in November as well, too. But then the unemployment rate went up. Do you remember that one? And then people were bullish on that. So then it actually ended up leading us to go a little higher. So I think there was other data, too. But this was ADP. And then this was the non-farm day. We were low, and then we ended up higher. But the unemployment rate was the kicker on that one. So it does seem, looking at all the data leading into this non-farms, they've all been strong data. But even then, last time that happened in November, it was very there. Non-farms beat the estimates every month from May till the last one. I think you're right on that. Good news. Well, strong jobs is not good for the market. Weak jobs is good for the market. Bullard, I have it. I have the audio, so it'll scare you randomly, but he's not talking yet. But then last January, that's interesting. So January, but then that was in 2022. January 2022, the estimate was for 400 to 800, and it came in at 199. So last January was a huge miss on non-farms, which we would love. But then at the same time, that was before any of this shit. And then now the estimate's 195 or 200 for tomorrow. Or no, I'm looking at the 2022. 203, average is 206. The low is 70 and the high is 350. Honestly, tomorrow could be huge. My predictions is don't predict. I mean, I'm leaning towards the report will be strong. That's just, again, like I'm saying, that's what we're talking about here. Because it's like every data set leading into this has been strong. However, you never know. Like it's just not going to be that simple. And then like I showed you from November, it's like even if it comes in above expectations, what happens if the participation rate drops, right? And what happens if unemployment goes higher. So we could beat by 100,000 jobs and unemployment goes up 0.1, motherfuckers are going to buy it up. Excuse me. But that's what I'm saying here, where it's like it's not going to be as simple. So but right now there's a huge range. Like your low of the jobs report right now is 70,000 as your lowest estimate, but that could be a crackhead. Yeah, it's Colm Fitzgerald. I hate this guy, dude. He just updated it today too. What a dickhead. You guys remember I told you about that guy? Oh, what? Oh! That's why tomorrow's going to be crazy. Look at this. Oh, dude, this is fascinating, actually. Fascinating. I love this. Oh, I love this. So look at this. Remember, I brought this guy up to you. I went and I looked back into his history, bro. Like, I started Googling Colm from, I was watching clips from, 2010 on Colm Fitzgerald because I'm like, where does this mother effer show up? Why does he show up on the list? This is Colm Fitzgerald, okay? Mr. Colm Fitzgerald of Paragon Research. This guy pops up every single data set with the lowest number you could possibly think of, right? And it's just weird because I'm like, why does he keep doing this? Okay, why does he keep doing? I'm like, come on. And then here's the funny part about Colm. how do I say it? Colm Fitzgerald. The funny thing about Mr. Colm, oh, they took it. Oh, here. He was one of the top forecasters in 2014. Believe it or not. So let me see. Let me see if I could get you the video. Look at how old we're going to go back.
Tomorrow is Jobs Day.
Look at this is how, bro, I started going back in time. You see what I'm saying? Like, look at this. This is from 2014.
The data seem to be the most accurate. Carol Nasser is here with the list. Very difficult, and yet when it ranked, well, check out this list. I'm curious if you or just
these are all the people
when it
that were
comes
wrong.
Some points when it came to making calls on another key Stu Hall's coming aspect else that's a unit of Banco.
Look at Parthenon or Paragon, I think. This guy was like, he killed it in 2013 and 2014. You got to find him on here.
I
think it was Parathongon, blah, blah, blah.
There's another issue as well.
But like, he goes back in the day, and I'm always wondering, I'm like, why does he do this? Like, he was actually like pretty like big in 2013, 2014. Citadel post record revenues, hedge fund at businesses. They took $28 billion in revenue in 2022. SPY, oh wow. I don't know. Bullard, oh, the headlines. Bullard state rates to become sufficiently restrictive. Comments in text of presentation. Rates getting closer to sufficiently restrictive. Oh, inflation expectations remain still too high, but some measures falling. Inflation likely to slow. What an asshole. Yeah, that's bullish. That's bullish for Bullard. He might talk and like bring it down a little bit, but he just said rates are... I went with one more M&Q since it was at break even. I'll go with two of them.
All right.
Recording
if we could
in
get
progress.
everyone we're going to get started.
But the text,
Get everyone's attention.
he could bat it down. But yeah, so it's starting now. But his pre-written statement, this asshole is saying that it's close to. I don't really believe him, but
We'll hope everyone
that's why I'm
enjoyed
glad the
that
plays
meal.
are
It's
smaller.
fantastic. Welcome. Happy New Year to everyone. I'm Kat McGrath again. For anyone that missed it, I'm the president of the CFA St. Louis Society. Before we get started, I want to remind everyone no photography is allowed, so please keep those smartphones on silent and in your pockets. Welcome to the CFA charter holders, the society members, CFA candidates, the Financial Planning Association, which we have the president of that, Jason Sanford.
Okay.
We also have the Rotary Club of St. Louis with us.
I think he was supposed to say something. Yeah, but Bullard just said sufficiently restrictive. Or he said we're almost to restrictive. That's just not what he was. That's not what he was saying last time.
So we welcome the groups as well as the guests. Thank you to everyone also that was involved in the planning of this event, including those at the Federal Reserve Bank of St. Louis, Joan Hecker, and everyone here at the Missouri Athletic Club. You have all probably seen interest rates and inflation mentioned at least once or twice in the news over the last year or two. I'm honored and fortunate to have the opportunity to welcome Jim Bullard to discuss these and other topics with us today. James Jim Bullard is the president and CEO of the Federal Reserve Bank of St. Louis. In that role, he is a participant on the Federal Reserve's Federal Open Market Committee, which meets regularly to set the direction of the U.S. monetary policy. He also oversees the Federal Reserve's 8th District, including activities at the St. Louis headquarters and its branches in Little Rock, Arkansas.
Again, that's why the bonds are moving on that.
Tennessee.
But we'll see how this plays.
Policymaker, Bullard makes Fed transparency and dialogue.
He says inflation likely to moderate and then close to restrict. I can't believe he said that. That's just so weird. He might bat it down.
He serves on the board of directors of Concordance Academy of Leadership, and he is the past board chair of the United Way USA. He is an executive committee
bonds
member
are loving
of Greater
it.
St. Louis Inc.'s Chairs Council. In addition, Bullard is co-editor
Even Microsoft
of the
waking
Journal
up.
Economic Dynamics and Control, a member of the editorial advisory board of the National Institute of Economics Review, and a member of the Central Bank Research Association's Senior Council.
Maybe
He's
to
an
reduce
honorary
fear.
Professor of economics
He's
at
a
Washington
dickhead.
University
Excuse
in
me.
St. Louis, where he also
That does
sits on
not
the
like him
Advisory
to say.
Council
He
of the
hasn't said that
Economics
at all.
Department and the advisory board of
Same
the
dude
Center
a month
for
ago saying,
Dynamic
yeah, he said we're not
Economics.
even. He
He's
wouldn't really
also a
talk
native
about
of Forest Lake,
restrictive. Even
Minnesota.
Powell
Bullard
won't
received
even
his
talk about
doctorate in
restrictive,
economics
which
from
is
Indiana
interesting.
University in
But now I
Bloomington. And
guess,
despite all
remember,
this,
he
still
said
has
that
time
here,
to talk
though.
to
Maybe
us
he
today.
wants us in between here and here.
Today's format is going to include
Or they
Joe's
know the
prepared
jobs report
remarks,
is going to
followed by
knock us down
Q&A.
tomorrow.
Please walk to one of these two
But still,
microphones to
we'll
ask
see if it
to
holds
ask
up.
a question.
He might
Jim
mess it
has a
up.
hard stop at 1:15, so we are asking, please keep your questions pointed and only ask one question. Don't embed two or three. And then return to your seat. So without further ado, let's welcome Jim to the podium.
As you get older, you get more bias. So this is him now. But see what anything towards restrictive. We'll see the comments. But we'll find out.
Thanks very much, and Happy New Year to you all. It's great to see you all.
Giggly
again.
little mother effer.
I remember being in this very room 1 year ago. I might allude to some of the things that were said at that time in this talk. And
That was your first time above 38.20, so just see if it holds or not.
And so I thought what I'd talk about today is the prospects for disinflation in 2020.
Again, the title sounded bullish.
And I'm happy to entertain questions about other things that aren't in this talk when we go to the Q&A here. So
Volume? Do you want me to turn the volume up?
Clicker's not clicking. There we go. Okay. So if you just want the Cliff's Notes version, you can just take this slide. First of all, I want to talk about GDP growth, which appears to have improved in the second half of 2022. That's kind of the news that has occurred over the holidays
They raised
here.
him up too.
Then I'll talk about labor market performance, which remains very strong. Inflation, of course, remains too high, well above our 2% target, but has declined recently, and I'll talk about that decline a little bit. The policy rate, our policy rate of the FOMC is not yet in a zone that might be considered sufficiently restrictive, but we are getting closer. I've got an excellent graph for you on that. And I think also that front-loaded policy has helped a lot to keep inflation expectations under control. And I've got an excellent chart on that I like, and I'll show you that. So I think what we're looking at is a combination of factors that are making it more likely that 2023 will be a disinflationary year.
Yeah, bro, this all sounds
so
very
I'll tell you my
bullish.
story
He's
in this talk here. So let's
It's
start
not
out with the
Bullard. This is
GDP
weird.
topic. GDP has been a bit of a mystery because we
So you
had
have to
this
get above
negative
this
real
high and then it's
GDP
game
growth
time.
in the first half of 2022. And people were, many of you and all of us maybe were scratching our heads a little bit about that. But GDP growth does appear to have improved in the second half of 2022. And in particular, third quarter GDP growth is now estimated to have been 3.2%, which is certainly a healthy rate for the U.S. economy.
This is not
and
Bullard.
now fourth quarter
This is
tracking
weird.
is that the economy grew at an above trend pace in the fourth quarter as well. That you may have been asleep on the couch when the tracking estimates went up during the holidays here. And so now you've got, you're looking at a pretty strong second half of 2022, and that negative first half is fading a little bit into the background. If you want to look at other ways to gauge growth, you could look at year over year GDP growth. That is slowing, and I've got a picture of that. And if you want to look at it as an output gap, instead the level of output compared to the potential level of output, the output gap is positive
38.30, so
according
C.
to current
you need
data.
to get above this,
So
otherwise
pretty
you get
much any
flushed
way you
pretty
look
hard.
at it, GDP is looking better than it was maybe last fall. So here's the picture on GDP growth. In this picture, goes back to 2021. The potential growth rate of the U.S. economy, according to the Congressional Budget Office, is the horizontal dotted gold line in this picture. The blue bars are the quarterly annualized growth rates. And this goes back to 2021. So those blue bars on the right or on the left side of this picture are all very tall. That's, we had a banner year in 2021 and, ridiculously high growth rates as we were coming out of the most severe phase of the pandemic, 7% in some of those quarters. So you had this stellar growth in 2021. So it was clear it was going to be slower in 2022. But I think I was taken by surprise that the first quarter and the second quarter in the middle part of this chart were negative. Blue bars are negative there, below potential growth rate. Now, usually 2 quarters of negative GDP growth would be a recession by a standard rule of thumb, but the other data did not cooperate with that interpretation, especially labor market data. And so I think those negative numbers in the first quarter of 2022 were a head scratcher for most of us. But in the second half of 2022, you got a positive blue bar there for the third quarter. And now look at these dots on the right-hand side of this picture. The Atlanta Fed's GDP now, which is the blue dot, and the IHS market, the former, now the parent organization of former macroeconomic advisors out here in Clayton, is the triangle there. So those are both above the potential growth rate. So you've got this second half looking a lot better now than it was. And perhaps this is and that's more consistent with labor market data. So I think you still got a puzzle about the first half of 2022, but the second half seems to have come in line with more of what we were thinking about the strength of the U.S. economy. So interesting, I think. And if you want to look at this on a year-over-year basis, I've been looking at this from time to time, the Lewis Merton stock measure. This is a weekly measure of year-over-year GDP growth. It's scaled to that metric. Again, we've got the CBO potential growth rate as the horizontal line in this picture. And you can see, according to this, that you had this big increase in 2021 and rapid growth rates in 2021 and slowing down to the potential growth rate for the U.S. economy. Makes complete sense. You had the big shock from the pandemic. You had the big recovery from the pandemic, and now it's slowing down. If you get to the right-hand side of this picture, it may have slowed down maybe slightly below potential, although I'd warn you, this blue line does bounce around based on weekly data. But this is another way to interpret what's going on with GDP growth. And you really wouldn't get this story about a negative first half of 2022 if you just looked at it this way. And then here's the level of real output and the output gap. Again, in this picture, you go back to 2019 on the left-hand side. And obviously you had the big pandemic hit to the economy in the second quarter of 2020. Then everything's pretty much V-shaped as you come back out on the as you get to the right-hand side of this picture, and the output gap, according to the CBO or compared to other calculations, is positive at this point. So pretty much, no matter how you look at it now, output's looking better maybe than it was. So perhaps the best interpretation is that GDP growth is slowing to be in the neighborhood just below the potential growth rate of about 2% on a year-on-year basis after stellar growth in 2021. So that's the story on GDP growth. And like I say, I think the second half of 2022 numbers are now corroborating better with the labor force and labor market data more generally. And labor market performance does remain very strong. In particular, the number of job openings per unemployed worker remains at a high level. I've also got a chart here in just a minute that says that if you look at this in a historical perspective, the current labor market is unprecedented for the U.S. economy since at least since the 1980s, which is as far back as my chart goes. Measures of labor demand are significantly exceeding measures of labor supply. And this is not something that's been common in the post-war macroeconomic data for the U.S. If you want to switch to some other metric, you could look at unemployment insurance claims. We got another good number today, this morning. But claims are just, I've got a chart here, they're just at very low levels, no matter how you cut it. So claims are often considered one of the best business cycle indicators, and they're not doing anything right now anyway. So here's the vacancies per unemployed person off the JOLTS data. The JOLTS report was again good.
And remember, they were bad today.
Yesterday, so
good, which is bad.
You've got 1.7 job openings per unemployed person. So it certainly seems like a person that got knocked out of their job today would have good prospects to go back in, search, and get back into a good match, hopefully fairly quickly for that person. But you can see that this has not been the history of the JOLT series to be at 1.7 jobs per unemployed worker. Even in December of 2018 or 2019, we're just slightly above one job opening per unemployed worker. And that was a pretty good labor market with unemployment rate that hit 3.5%. And, you never got to this level in the early 2000s, always below one during that era. So this is just unprecedentedly high. And the next picture really says this. So in this picture, the blue line, this goes all the way back to 1980. The shaded regions are the recessions. And the blue line is the available workers, so the measure of labor supply. So that's everyone that says that they have a job or says that they're searching for a job. That's the blue line in this picture. And then the labor demand is the number of job openings plus a measure of workers here. So you've got this gold line here going way above the blue line on the right-hand side of this chart. But you can see the gold line is normally in the post-war era has been below the blue line. So normally you have a situation where, people get knocked out of work. They spend a fair amount of time in the
and 3830, the high from the Russian news
situation. They have a hard time getting back into work, and that's not the situation that we're in today. We've got quits still at a very high level. It's not in this chart, but just a very different labor market than what we've seen historically. Now, if you look at Chair Powell's Brookings remarks, he talked about this in more detail than I'm talking about it here, but I would echo those remarks. It looks like we're structurally short of workers on that blue line. He gave reasons for that, but you can think of your own. You certainly got older workers more reticent to come back into the labor market than they would have been
jobs
pre-pandemic.
Lower.
So that's a factor. You've got less immigration than you've had historically. That's a factor. You've got a healthcare industry, a childcare industry that was disrupted by the pandemic and has had a hard time getting back on track. So this is also disrupting the number of people that are wanting to and able to come back into the labor force. So, and also the scale on this, if you just look, this is you're looking at 160, 170 million workers there. That gap is a couple of million. So you're talking about a big number of a sort of labor market shortage. So this is very interesting. And I just would caution people when they're analyzing based on the post-war data on these other recessions that you didn't have this, the circled area is not consistent with all those other episodes. So just something to keep in mind there. And then if you look at the unemployment insurance claims, this picture is a way to control for seasonality. This takes all the years in the last decade since 2013. The horizontal axis goes by the week of the year and the raw number of unemployment insurance claims for that week, going all the way across from week 1 to week 52 on the right-hand part of this chart. And I guess the main message is that the pale blue line there, the initial claims all during 2022 were basically at the very lowest end of any of these other years that you might have seen. and even including, let's say, the November and December data on the right-hand part of this chart here. So claims, again, are super low, super strong labor market, and you can also see the pandemic here. The 2020 line goes off the scale and then comes back on later. So the bottom line, labor markets remain very strong. Now, inflation is too high and remains too high, as it was last year when I spoke from this podium, but it is perhaps declining. And let's take a look at that. Now, the committee has a 2% inflation target. We've had that officially since 2012, unofficially since 1995. That's in terms of headline personal consumption expenditures inflation. So it is the headline number that we're trying to get ultimately. Headline inflation has declined, but we know, and you know, that that can be influenced heavily by energy prices and commodity prices and food. And the commodity prices have come down precipitously during the second half of 2022. And so we may want to look at other measures of inflation that strip out the volatile movements. One way to do that is look at the core PCE inflation. Another way to do that is to look at the Dallas Fed trim mean inflation rate. The Dallas Fed looks at the entire distribution of price changes, throws out those on the low side, throws out those on the high side, and just looks at the center of the price change distribution. So you throw out the ones that are moving excessively in any particular period. So the picture looks like this. This is all inflation rates measured from 1 year earlier. The headline inflation is the dark blue line here. The core inflation rate is the gold line, and the Dallas Fed trim mean based on PCE is the gray line in this picture. So a couple of things about this picture. This goes back to 2019. And you could see in 2019, obviously, inflation was very low. In fact, was below the inflation target of 2%, the horizontal dotted line in this picture. The Dallas Fed trim mean was right on 2%. So there's a lot to like about that particular measure. When the pandemic came along in the first half of 2020, these measures did drop, but they didn't drop maybe as much as you might think in response to the pandemic. And then you really didn't have anything going on until about the second quarter of 2021. That's when the blue line, the gold line jump up, and the gray line starts to drift higher. And basically since then you've had much higher inflation. You're talking about, scale 4, 5, 6%, 7% at the peak here. Now, these have turned around, and Wall Street has made a lot of, talk about this. If you look at the blue line, it peaked at 7, now between 5 and 6. Okay. If you look at the gold line, between 5 and 6, now below 5. Okay. You have to squint a little bit more for the gold line than the blue line. And then the gray line, wow, maybe it's down, but you really have to squint to see that one. So I'm not sure we've really seen convincing evidence at this point. It certainly is encouraging. The blue line is encouraging, but we know that's driven partly by energy. We know the gold line strips out food and energy, is still influenced by energy prices. The Dallas Fed trim mean barely coming off its high. So we're going to need some more evidence before we can say inflation is definitely moving down, but it's encouraging us going in the right direction on all three measures. Now, a big factor in macroeconomics and inflation is inflation expectations. They are relatively low, which I think is due to the front-loaded Fed policy during 2022. Something I advocated and others on the committee advocated was to move the disinflationary policy, be aggressive, try to get inflation under control as soon as we can so that we don't repeat the 1970s experience where we let inflation linger for 15 years, culminating in the 1980-82 recession.
But that's not good if it
with
drops below
unemployment
here.
rate at 10.8%. So we don't want to get into that kind of a fiasco. Let's get inflation under control now, while the economy is performing relatively well, while the labor market is relatively strong. And if you look at inflation-based expectations, they are relatively low. According to standard macroeconomic theories, inflation expectations are a key determinant of actual inflation, what's actually going to happen with inflation in the future. So here's my killer graph on this. This is the swaps market, inflation expectations. The blue line is the 2-year. The gold line is a 5-year, and the gray line is a 5-year forward. This goes back to January of 2021. And so it's exactly 2 years worth of data. And January 21, as I showed you on the inflation picture, no one was talking about inflation at that point. It didn't look like inflation was developing, and at least in the data, there wasn't any inflation developments at that point. So, but you can see the red circles there at the on the left-hand side and on the right-hand side are very similar levels of inflation expectations for all three different horizons.
Not seen anything.
And that's very encouraging. In the middle here, we see that inflation expectations blew out somewhat, especially during the first half of 2022. If you recall, the first half of last year, the committee hadn't really done anything as far as trying to have a disinflationary policy, and the actual inflation numbers were going up. And I think markets were starting to wonder, are these guys going to do anything or not? But we did. And then as we had a pretty aggressive policy during 2022, you can see that expectations about inflation started to decline, especially in the second half of the year, where we started to get some relief from the data, and we started to get the policy rate up to a more normal level, and obviously with 75 basis point moves at several meetings in a row. But the point of this is that we've gotten all the way back now to the pre-inflation shock level of inflation expectations. Macro theories tell us that bodes very well for the future of actual inflation. So this is a good signal for disinflation in 2023. Now, is the policy rate at the right level? The committee stated in our statement that we wanted to get to a level of the policy rate that was sufficiently restrictive. That's the wording that we used. And I put some color commentary on this by giving a speech on this in November called Getting into the Zone. I'm not going to review the elements of that speech here, but I am going to show you the killer chart from that speech. Because it does give you some idea of how to think about where the level of the policy rate is right now compared to where it should be, at least according to this calculation. And it's not in the zone yet, but it's quite a bit closer than we have been over the last year or so. And so we're getting closer to sufficiently restrictive.
Less generous, and he's saying we're here.
But more importantly, I think it shows that it looks like we're going to catch up and actually be in the right place with the policy rate in the zone that is sufficiently restrictive during 2023. So here's the chart. Again, I'm not going to go through the details of this. You can see my earlier talk as to how this gray area was developed here, but I'll talk about it in broad terms. This goes back to 2019 and comes up to the present. The blue line is the actual level of the policy rate. So you can see the blue line declining somewhat during 2019. Some of you might remember the summer and fall of 2019. And then the pandemic hits and the policy rate goes down close to zero and stays there until 2022, and then has been increasing, as you guys are well aware, since since March of last year. Now, the gray area is the zone that would be recommended by a Taylor type policy rule as spelled out in my previous speech. The dotted gold line would indicate a minimum value if you're going to be most generous that you could be about all the assumptions that go into this. Then you would get that dotted gold line, and that would kind of give you the lowest value of the policy rate that you could possibly think of that would be sufficiently restrictive. If you don't want to be quite so generous on the policy assumptions, then you'd get the other gold line, the more refined dotted gold line there, and the area in between is a gray region. So if you could get somewhere in that gray region, you know, you could make a straight-faced claim that you've got the policy rate at a sufficiently restrictive level for the macroeconomic conditions that we face today. And that would be a good thing. Now you can see the blue line's been below the gray area during 2020, second half of 2021, and then all during 2022. Even though we've been increasing rapidly, we haven't been increasing rapidly enough to get in this zone, and I think there are kind of limits to how fast you can go, even though we've gone at 75 basis point increments for 4 meetings in a row. That's helped us a lot to get a lot closer to this range. The other thing I would say about this picture is that the shaded region moves around. So the shaded region is not a fixed object. It will move depending on the data. And in particular, if you think inflation's coming down, then you think that that gray area would also be coming down. So what you want to see in this picture is an intersection where the blue line moves into that gray area somewhere. That would be sufficiently restrictive. And if you look at this star in red on the right-hand side of this picture, that's what the median member of the committee said would be the policy rate at the end of 2023. And it certainly looks like that zone and the blue line are all converging right to the star there. So it looks like we'll get to sufficiently restrictive very soon. In addition, markets anticipate what the Fed is doing. So markets are already anticipating this picture, and they're already seeing that this is going to happen. So this is helping with credibility. It's helping with inflation expectations, keeping that under control. So this is all, I think, very encouraging from the point of view of getting to the right level of the policy rate. But we do have to follow through on previous promises that we would get to sufficiently restrictive. So that means that it'll probably be ongoing increases in the policy rate TXN in the meetings ahead.
And ON Semiconductor,
so
I think they could have a
let's put this all together, and then I'll open it up for Q&A. Is 2023 going to be the year of disinflation? I certainly hope so. It does seem that the real side of the economy is looking reasonably good for considering where we're at on policy. GDP is growing faster than previously thought during the second half of 2022. That's more in sync with the labor market data, which is still very strong. Unemployment is below its longer run level. So a natural forecast to make is that the GDP growth rate will moderate from the level that we saw in the second half of 2022, and that the unemployment rate can't stay this low. Probably even if we did nothing, it can't stay this low. It'll probably move up to its more natural level somewhere in the mid 4% range. And then on the other side, the policy side, the FOMC has taken aggressive action during 2022.
I think that's it for tomorrow.
We have ongoing increases planned for 2023.
Remind me about unemployment rate.
And so that combination has returned inflation expectations to a level consistent with the Fed's 2% target. So a good prediction is that inflation will actually follow inflation expectations back down to the lower level that as the real economy normalizes. So I think this is looking pretty good as of today, but in this business, you don't want to say too much about the future. There's one related issue that I've got in this deck, which is that the committee has moved very rapidly during 2022, and this has made all of your jobs much harder than they otherwise would have been. And I'm aware of that. And so we did that because of a front-loading strategy to try to get the appropriately restrictive stance given the very high inflation that we have. But we also recognize that that could cause financial stress and has in past tightening episodes in the US, such as 1994. But I think what has happened here is that because there was a lot of transparency around this rate increase before the rate increases were made, it was clear they were going to happen. There's transparency in that sense. There's been forward guidance, and that seems to have allowed for a relatively orderly transition to a higher level of interest rates so far. Not that it doesn't have effects, it does have effects, and certainly everything has to be, tens of trillions of dollars worth of assets have to be reevaluated and repriced. That's not an easy thing to do. However, it's been done in a relatively orderly fashion, at least so far. So one way to see this is that the St. Louis Fed's Financial Stress Index is so far indicating a relatively low level of financial stress, despite dramatically higher policy rates during 2022. So here's the St. Louis Fed's Financial Stress Index. This chart goes back to 2019 and comes up to the present. This is a weekly index. You can see during March and April in the middle of the picture there of 2020, this thing hit a 5. That would be 5 standard deviations above normal. So crazy amount of financial stress right around the time that the pandemic hit. No one knew what was going to happen next. Makes perfect sense that there would be all kinds of financial stress. However, by July and August of 2020, most of that had gone away and a financial crisis was averted in the US. One of the most successful parts of the policy was that we did not have a financial crisis on top of the pandemic that could have, that financial crisis could have occurred. Financial stress went back down to a low level. If you go over to the right part of the chart here, doesn't really look like we've got a lot of financial stress today. We've got different pricing today than we had, that's for sure. And different assets are worth different amounts, that's for sure. But as far as financial stress, we're really not seeing it right now. So I think so far, so good on this dimension. Okay, so let's wrap up here. GDP growth, it looks like it's improved. Labor market performance is still very good. I think the GDP and the labor market data have come more into alignment just in the last few weeks here. Inflation's too high, but if you squint, maybe Dallas Fed trimming is declining slightly. Policy has kept market-based measures of inflation expectations under control.
We'll see. Somebody might ask him a good question.
Sufficiently restrictive, but we're getting very close. It looks like we'll be there in 2023. And so I think we are in good position to make 2023 the year of disinflation. So thank you very much.
So from Bullard, he said this will be the year of disinflation. Again, he's a little bit more bullish. There's going to be some questions. We're going to see. I don't think any of the
pain supposed to come up to the
is over
to the
yet.
Microphone. We don't come to you anymore. It's all self-service.
Thank you. Thank you for your presentation today. It's always enjoyable. I come here to try to gain some insight into the Fed's thinking, and I was glad to see you utilize the Taylor rule. What about Milton Friedman, money supply, and lagging inflation? That has a pretty high correlation of late, but and didn't the St. Louis Fed pioneer that? And do you not use that anymore, or what do you use?
We did indeed. I think if you've looked at the M2 charts, M2 exploded during the pandemic and correctly predicted that we would get inflation. And now, if you look at the same chart, M2 growth has declined dramatically. That bodes well for disinflation, but you know, it's actually turned negative in recent readings. So yeah, I'm a monetarist at heart. I certainly did lots of analysis myself on money. It's just been hard to correlate at high frequency with inflation numbers. I think that's been the main issue, but inflation is certainly a monetary phenomenon. That's why it's called monetary policy. And so I'm very sympathetic to this. The main issue for those of you that aren't into this, the main issue has been not really that money or that inflation is a monetary phenomenon. It's been how exactly should you measure money and how should that correlate with inflation and at what frequency and so on and so forth. And that there's a huge literature about that. But I think everything that could be said probably was said during that era. And but this has been a chance where money is going to maybe get a little bit of a resurgence because it did correctly predict the inflation that we got. I think I've said this here before, but the scuttlebutt around the St. Louis Fed was always and has been over the last couple of decades that at very low levels of inflation, you've got some noise in your money measure and some noise in inflation. So that when you try to relate them to each other, they're not highly correlated. But when you get a huge movement in money, then you do get the movement in inflation, and then you see the high correlation. That's why it worked in the 70s, 60s, 70s, 80s, where you had big movements in inflation. So you could actually see these correlations. And it didn't work well in the 90s and 2000s where you couldn't really see those correlations. So I think that's basically the story. Yeah.
If there is a recession in 2023 and political pressure remains strong, is there a risk that the Fed changes its 2% inflation target and lowers rates earlier?
I don't think so.
That's a tough
I think it would be a terrible idea to have an inflation target.
Remember, that's how they got PHILO.
And then as soon as you start missing the inflation target, you start talking about moving the target around. That's a way of saying you don't really have an inflation target. So inflation targeting was enormously successful. It came into vogue in the 1990s. Inflation, all these different central banks around the world adopted inflation targets either implicitly or explicitly. They took actions to try to contain inflation in their countries. And what did you see? All these inflation rates came down, came close to their targets. Inflation expectations centralized around those targets. Central banks are far more credible. And you basically got rid of all the inflation that you had in the 70s and the 80s through inflation targeting. But all that happens because you name an inflation target and then you manage toward it. So it's exactly like in your businesses, it helps a lot to say what you're trying to do and then reward people when they actually do it. So that's exactly what's going on in central banking. So what you don't want to do here is then when something's going wrong, all of a sudden you change the target. That's like not having a target. And I also think it would be a disaster on an international dimension because if the US moved off its inflation target, this would mean that all the other countries around the world would have to move off their inflation targets. You probably get a global inflation, so a repeat of the 1970s. So it's a bad idea. Yeah.
I'd like to go back to, you mentioned market reaction to this sufficiently restricted rate level. When you look at the market reaction, it's been very different. When you look at the bond market seems to anticipate the FOMC to move very hard and fast, potentially risking recession. The stock market is very optimistic, believes that the Fed will blink, and then the dollar was with the bond market, but then very recently has been with the stock market. So how do you think about that? How do you reconcile that? And do you believe one of those might be a more correct reaction than the others?
I mean, I don't have to trade every day. So I'm just telling you, my job is to say, here's what the policy is going to be. Please price all the assets appropriately. And, I understand that it matters a lot what the discount factor is for all of these assets, but I do think some things are happening that make a lot of sense. I think you had at very low interest rates, you had, companies would get together, maybe some of yours, and they would say, okay, well, we have a technology that we're going to experiment with, but we don't really have the business application and we're not really sure the payoff might be 10 years in the future, that's not going to be as good of an investment in an environment where interest rates are higher as compared to when interest rates are lower. So what do you see? You see that kind of money drying up and the valuations of those kinds of companies coming down from where they otherwise would have been. And but I'm pleased, I think, that on the whole, that's happened in a relatively orderly fashion. And so I think we can continue to see the markets adjust to the policy. Another thing I would say is that, when you're evaluating the stock market of those companies that are listed, there are two things that you have to keep in mind. How much of those profits are being earned overseas? And it's a substantial fraction. I think the outlook for the global economy is probably not as good as it is for the US economy. You've got a lot of people predicting recession in Europe. China, we haven't talked about yet, but it's kind of a question mark around China. So you've got the overseas factor, but you've also got the corporate margins. And so I think the disinflation is going to really reward companies that put a lot of effort into innovation, put a lot of effort into productivity improvement, and really get serious about running their business in a tight way. There'll be other businesses that say, oh, there's a lot of inflation, I can just raise my prices all the time. They're going to get hit hard, I think. And I think that's going to be a big factor going forward. So a lot of the investor assessment has to be, well, who's going to be the winners here and who's going to be too lazy and just try to raise prices even in a disinflationary environment. I think that's going to be a big factor going forward. So it didn't really answer your question, but those are some things I wanted to talk about.
Okay.
Man,
thank you. I have kind of maybe a basic question,
economics
101 question, but you referred to what the Fed does interest rise is the Fed policy rate. And since we follow a lot of banks, I asked them what difference it makes. And they say, as far as they know, it doesn't make any difference to them. But obviously it does make a big difference. So maybe you could explain what exactly the Fed policy rate affects. And is that different than the discount rate or the Fed funds rate? And exactly what is the Fed policy rate as far as how it affects everything?
Yeah, the Fed and other central banks do have a lot of influence on the very short end of the yield curve. And I think, as many of you know in this room, those rates will move, 90-day T-bills, let's say, will move very, very closely with the policy rate. This effect, translates into the rest of the yield curve, but in various ways, because the rest of the yield curve depends partly on what investors think is going to happen in the future with respect to inflation and with respect to real growth in the economy. So, but generally speaking, the policy rate is highly correlated with interest rate movements across the whole curve, and therefore to all other interest rates associated with other types of instruments. And so it does have a lot of influence, even if you think, gosh, I don't actually trade at this rate here, this blue line. I don't know, that doesn't have anything to do with me, but the general level of rates is highly correlated with the blue line here. So I think it does have a lot of connection, and there's been a lot of academic work on exactly that issue. Please.
Hi there. Thanks for coming and presenting to us today. The vacancies per unemployment chart that you showed before, that inversion there, how do you see that working itself out?
Yeah, it's gosh, so many charts.
There it was.
You guys must have been bored silly with all these charts. I think this seems too high to be sustainable.
Honestly, it's like 30% chance he's high
when
right
I
now.
talk to people,
I don't know. After this whole bullish thing, I don't know. This is weird.
Seems very consistent. They're
He's
pretty
sounding
much
a little
still
blasted
scrambling
right now.
for workers. I think a couple things are happening here. you've got this structural shortage maybe of workers that
I've suspected
as I was
this out of Bullard
talking about
once
earlier.
before. That's why I'm saying
firms are
that,
going
because it's
to
not my
substitute
first time I've
capital
had
for
this thought.
labor because they can't get the workers, or they're just not going to open some of the stores and things that they would have otherwise opened. You're seeing that, we have been seeing that over the last year or more, where you know, maybe they have the restaurant only open 3 days a week instead of 7 days a week or something like that. So you're seeing a lot of that. In a way, I think it's great management. Managers are not sitting around. They're thinking about how they can have profit maximizing strategies even with a shortage of workers. But you will see more substitution of capital for labor. They're probably one of the things that happens in businesses is that they have plans sitting on the shelf that they never got around to, but now they take the plans off the shelf to set up, and maybe it's time to buy the machines that they've been delaying buying or whatever. So I think we'll see some of that.
Thank you. Hey, Jim, how do you see housing working out as you know, rates have kind of killed the demand for the market, but it hasn't helped the prices, and rent equivalents and home prices make up, you know, roughly 40% of CPI. How do you see that working out?
Yeah, so I think on the CPI and the rents, we're certainly well aware of the lags in the data there, and we've got new techniques to think about that. So you've got this owner implied rent also part of the calculation, so we know how that works, and we can look at that. I think the housing market itself is very interest sensitive, hit very hard during 2022, not surprising. However, housing market also had banner years in 2020 and 2021. It surprised me anyway, that the pandemic, instead of causing a recession that fed into the housing market, instead you got this very strong demand for housing because of the pandemic. People wanted more space. They wanted more solitude. They could move farther from work because of the work from home policy. These factors drove prices up. I think that demand effect is still there. I would say on the interest rates, I think there were a lot of people that were in the market, let's say in the first few months of 2022, and they were thinking that they could get a certain amount of square footage and they'd be able to buy this house or that house. And the prices went up on them and the interest rates went up very quickly, and then they couldn't afford that anymore. So that's kind of a mental adjustment on the buyer side that has to be made. They're not going to be able to afford as much square footage at these prices and at these interest rates. That's an adjustment for those that are the couples, probably mostly that are in the market for housing. But on the other hand, these are not historically high interest rates for housing, and so once that mental adjustment gets made, I think you'll see the housing market sort of return to normal at the higher level of interest rates. So we'll see if that's how this plays out. But we're of course watching housing very closely because, as you say, it's a big factor.
Ask a hypothetical question. Come summer or fall, if you think for 2023 inflation will end around 3.5 for the year, what would you do if you were the sole decision maker as far as Fed policy?
What will we do if
you were the sole decision maker as far as Fed policy is concerned?
If it ends up at 3.5
for the year? Yeah,
for the year. Yeah, I think, I guess my general feeling is that markets think that inflation is going to come down very quickly. And, you know, I think a more prudent forecast is that probably, especially core inflation, Dallas Fed Pmi inflation will not come down that fast. And so, but you'll be on the right trajectory and you'll be going toward 2%. But it does mean rates have to be higher for longer in order to maintain the downward pressure on inflation, get it to converge to 2%. So if you look at the 1990s, you know, you had a whole decade of interest rates are much higher than what we've been used to in the last 15 years. And the economy seemed to function well. The economy boomed, in fact, in the second half of the 1990s with much higher interest rates than what we've seen today. So I think all of this can be done, but you in order to get inflation to actually converge to 2%, you'll probably have to be higher for longer.
Yeah, I just want to ask about, we haven't touched really on quantitative easing. Obviously, you guys really expanded the balance sheet, Fed's balance sheet over the years, and how I know you've started the quantitative tightening. I want to just ask, how's that going? Could you comment on that? Do you guys feel like it's on the right track? And just comment on quantitative tightening in the Fed's balance sheet.
Yeah, I didn't have anything in this particular deck. I have talked about it elsewhere, but I was very pleased that we were able to get the reduction in the size of the balance sheet going in the second quarter of 2022, part of our kickoff sort of to a more restrictive policy. And I think it has worked well so far. It goes back below
38.17, you're back in the downtrend.
It was phased in during the summer, so it didn't really reach full strength until maybe September or so, but it's continuing at pace. I
just
think
like one comment brought it up.
That another 6 months or even a year.
There was a headline from that
of this policy running in the background, and then we'll have a chance to assess maybe later this year how we're doing and what we want to do. But I do think that is something to keep in mind about this picture here about the
if it could hold 38.20
level
that'll
of the policy
be good,
rate,
watch this
because
level.
We have successfully got all of you to think in terms of mostly of the policy rate as the Fed's policy, but this is being supplemented by the balance sheet policy that is also going on. And it's not just the Fed, it's other central banks around the world. So that's a factor as well. So how much weight you want to put on that as a tighter monetary policy is a good question. But so far so good on our balance sheet reduction. And the balance sheet expanded dramatically during the pandemic. So I think we still got some ways to go to get it back to a sort of more normal level.
We know where the forecasts
Is he done? I need to go pee and I don't want to leave and then you keep talking.
What happened? And your colleague in Minneapolis said that even if you gave the model the shocks that happened, it still wouldn't have come up with 7%. So what tools are changing or evolving or newly being incorporated that weren't being used this time last year as this year has progressed?
Yeah, let me talk about this issue that models wouldn't predict the amount of inflation that we got. So the inflation picture is this one here. So this pushed headline inflation up to 7% on a 12-month basis. And it's just a shocking amount of inflation for the U.S. economy. So, so what happened? You could just say, oh, gigantic shocks. And certainly the pandemic was a big shock. It's like a big, earthquake. But I want you to think about it maybe a little bit differently, which is like a war. So if you think of World War I and World War II, and then think of the pandemic as being a war, it's not literally a war like that, but it's a social crisis on a global scale. And what happens during a social crisis on a global scale is that the fiscal authorities start spending a lot of money without asking too many questions about where the taxes are going to come from in the future. And the monetary authority is expected to keep interest rates low to support the war effort. And if you look at wars across history, all kinds of places, different places and times, totally different situations, they're often associated with inflation. Certainly for the losers in the war, but also for the winners in the war. And there was inflation after World War I and after World War II in the US. So the pandemic was like that. You had the pandemic come along. We said we're going to do a lot to try to protect the economy while we're trying to wrestle with the health situation. And we said also the spirit of the times was to say, we're going to overdo it. We're not going to underdo it. We're going to overdo it. And indeed, we probably did more than we had to, but that was part of the calculus. And we ended up with some inflation afterwards. Now you say, well, so that gets you to the 7% here in this picture. But so how do you get inflation under control? Well, when the war comes to a close, fiscal authority quits spending and goes back to its pre-war spending patterns. I think that's going to happen with divided government in Washington. And the monetary authority is no longer required to keep interest rates low to support the war effort, but instead can go back to ordinary monetary policy. That's certainly happening with our aggressive rate increases in 2022. So because of this, I think the prospects are actually good. The inflation will come down in this picture, down to the 2% target. That whole war story isn't part of most models of inflation. If you just have a model of inflation over the last 20 years, the model is like, what? This can never happen. Okay, but if you tell the war story, then you have a coherent explanation about what happened and why and how it's going to be corrected post as the pandemic continues to fade here, and how we're going to get back to 2%. So I think that's a way to think about what's gonna. So probably more than you wanted on that.
Quick question on labor rates. So you have open jobs, you have jobs filled. Are you considering, are you tracking the swap from full-time to contract?
As far as how do we count, like,
yeah, like
they get counted.
Yeah, but are those inside of your available job market, or is that tracked separately?
That's going to come as a job. Now, one thing is there's multiple job holders.
Yeah.
Yeah. So you do hear some stories about remote workers working multiple jobs. So, but actually, multiple job holders is a
really
common
funny,
phenomenon, right? You have really people might work a job and then also take another job. That's not uncommon in the economy. And exactly how that's accounted for in that figure, I actually can't say off the top of my head. I'm not that sure, but that would be a factor. Yeah,
I'd be particularly interested to know what the rate of swap from full-time employed to contract would be.
Yeah. No, I think it's an interesting question for sure.
Thanks.
Could you talk about wage inflation and then just the productivity? I know you touched on it a bit, but you mentioned supply and demand for labor, but how productive has it been? And isn't that a big headwind as well?
Yeah. So one of the mysteries about this picture, which is way back at the beginning here, this picture, GDP growth in the first half of 2022. According to the data, this is the worst productivity that we ever had in the US for forever. I mean, it's just terrible productivity numbers. And I thought maybe the GDP would get revised up, or that you could tell a story about gross domestic income versus gross domestic product, but that seems not to be happening so much. So whether it's really true that productivity declined dramatically in the first half of 2020, I think is a great question, and one that'll probably be wrestled with for some time to come. But overall, it still appears that we're in our low productivity regime, which means that productivity growth looks like it's still, even with all the volatility in the data, looks like it's still only growing about 1.3% or even less per year. We did in the recent past, in 1995 to 2005, have a high productivity growth regime in which productivity grew at a 3% rate. And that would help us dramatically if we could get the productivity to increase to that level. So maybe the new machines that people are buying and combining those with workers will make everybody a lot more productive. I hope that happens going forward, but productivity is a bit of a puzzle at this point. I think I'm going to have to bring this to a close. Thanks for everyone. Great to be here. Always fun to be here.
That was such an awkward ending. He's just like, then I've answered the question, and then, I got to go right now. Thanks for being here. It's so fun to be here. And then he just, I don't know what's happening, man. So a little bit is surprisingly not Bullard, or like it didn't seem like it was Bullard. I don't know. That was very weird. Some of the questions were good. Some of his answers too. I mean, it's not Jerome Powell. Like, I don't know. Hearing Jerome Powell is like, I feel like Jerome Powell hangs out with like ugly friends so that he looks like the hot one. But, you know, it's definitely not Jerome Powell there. Very different than what Bullard has said in the past. He's usually more bearish. That came in bullish for the most part. We're still holding up. Again, those first initial candles. Now we're chilling out. Got 30 minutes till power hour. But he gave a couple of hints. And, I mean, I'm kind of assuming that he knows what's going on. But I have a theory for tomorrow now after listening to him. Especially that whole little talk and that graph on restrictive and all that. I have it. I have something for you. I might make you – I think you need to like the video. Otherwise, you're going to have to watch the watch list. I just need to make sure you're awake. I need you to like the video and say what's up in the chat. You know what I'm saying? I need you to just like the video and say what's up, man. Yeah, I got something for you. I have a theory. I have a theory for tomorrow. I could totally be wrong, though, too. This is like a home run theory. So, like, I'm going to take a giant swing, and if I miss, I'm striking out. I won't strike out, but I'm going to take a strike. Yeah, what's up, baby? Okay, I'm just making sure you're here after that Bullard, bro. I don't know if you got a contact high off of listening to Bullard. What's up, man? Yeah, you say what's up. All right, that's good. You like the video, bro? That's good. That's good. I hope so. I don't want you could have got a contact high. I'm just making sure you're awake, bro. Just making sure you're awake, man. I gotta go. Okay, bye. It's great to be here. Everything kind of popping there. All right, I'll tell you my theory. Are you ready? Check me on this one. Check me. I know. Don't get mad at me either. I don't know why people just nowadays get hella mad on everything. So, Microsoft may seek to close Activision with FTC approval. Uh-oh. Check Activision as well. Activision's moving. That's coming across, but we'll find out. So here it is. I think tomorrow, and it's funny because I said it earlier a little bit, but after listening to him in a weird way, I don't think the non-farms even matters tomorrow. I didn't even get to show you Bullard's. I still need to show you this one. I still need to explain that one to you. But straight up, it's all going to be unemployment rate. Again, I think that's what happened last time. I don't think the non-farm numbers even matters. I mean, it's a wide range unless it's like a super easy like beat right there. But kind of with what he was saying there and just even looking at they're restrictive or not. And he just kind of, even if it doesn't happen this month, we'll see it next month. But I really think unemployment rate is the key. Because then that way I think they could literally, you could get the jobs looking however you want, but unemployment rate, remember, we've seen unemployment rate go up while job additions have increased. So I think that's the way you could accomplish anything, even down to it politically, where you could show a good jobs number and then the unemployment rate that the market wants for anything decent and disinflationary. I think that is what they'll kind of pivot to, but we'll see what happens. But I think tomorrow, unemployment rate is going to be probably the key. And no matter what we get, if that number ticks up, that will be bullish. If it doesn't, then that will not be good as well too. So that's theory number one there, okay? And then I forgot, we need to go over everything else. I'm still in those MNQs. I'm up on them a little bit, but I'm going to write them out here. Again, we're pretty close to power hour. So we've already been even like selling off for what? Almost an hour now. So maybe even if you give it an hour and a half, we'll see. But I think it'll be good. Activision's going up on that Microsoft news that just came out. Microsoft seeking to close the deal with FTC approval. But let me show you the next thing. This one's great. I was getting into it. So I was explaining to you, there's this guy, Colm Fitzgerald. Every single non-farms, this guy always like lowballs it by a huge, I don't even know if it messes up the metrics because think by medians, right? But do you guys see this number right here? Does this number look very outlier-ish? Does that number look familiar to you? Anybody? Anybody? Oh, you're coming down. You're coming down a little bit. What are we down? We're down like 1%. Does that number look pretty? That's a 350,000 expectation. That's very, very high. Very, and then again, it's very. I mean, here is your. This is what one standard deviation. I think 2 would be like right here. It does look like an outlier. Are you ready for this one though? This is where it sucks. Are you ready? Who do you think that is? Oh, you're coming down again now. Bigger drop. Downtrend is still continuing. T-Mobile and Delta Air join forces to deliver free in-flight Wi-Fi. So 38.17, you broke below it. No, Colm Fitzgerald is the lower end outlier, but somebody is saying there's going to be 350,000 jobs tomorrow. And I think you'll be surprised. That 350,000 expectation is Mr. Oscar Munoz of TD Ameritrade. It's Oscar. Yes. You remember Oscar. At one point, he was ranked number 1 for most of last year. Now, granted, Oscar has been off in the last couple of reports. Oscar is he went from first place to 4th place now. He's currently ranked number 4 in terms of accuracy. He was on fire, but the last couple of months he did kind of fall off. Not bad though, you know what I'm saying? I'm not going to hate him on there. You know what I'm saying? He did decent, but he's number 4 now. That's why GoGo was dropping. We had that up. Yeah. So now number 1 is it coming in at 245, which is still I believe higher than expectations. Expectations are for 200,000 is the survey. And last month was 260. So 245 would still be lower than last month. So it's very interesting. Oscar, he is the highest estimate out of everybody. And then number 2, Rubiel Faruqi, they're coming in at 195. And then the number 10th is at like 180, and then that's about it. And then Colm at 70, like a crackhead. Was he off last time? I don't know. I could check. Where's Oscar? So last time he expected 250, I believe. Or I don't know. I got to double check. He's still holding. I like Oscar. I think he's good. He gives bond yield. I know what I could do. I could hit him up. He's online. I'm sending him a message. Let's ask Oscar. Let's see what he says. Let's see if he responds, Oscar. A big fan, bro. Long-time listener. First-time caller. He has bond yield forecasts. UUP pop. I'm trying to see his other one. All economics profile. He estimated 240. Print was 260. It sucks because when it really, really mattered, he hit it on the head like a lot. I think up until like August, he hit every single jobs report like perfectly. But then all of a sudden it kind of just it faded a little bit. Just those last couple reports. Oh, there it is. I'm loading it up. Let's see if it loads. NFL won't resume Bills and Bengals. Wow. Do they start over or are they just going to call it? Okay. ADP. Yeah, you missed the last one. Where is non-farm? If he's correct, the market will dump. But then, like I'm telling you to right now, even if Oscar is correct, and we saw this in November, pretty much it will shoot down and like right when people get it, and then everybody's just going to jump on the bandwagon of the unemployment rate. So that's the thing. That's what you got to realize what's possible. What's possible is that the jobs report comes in super strong, and then the unemployment rate somehow manages to go up. If that happens, the market will go up, I think. I think they will shake off any lows and then go from there. And then everyone's going to play this little weird, confusing game. But at the same time, though, the estimates right now are huge. Like the range of tomorrow could be over 150,000 jobs. And again, there's a very, very large skew between the top and bottom. So we'll see. You doubt that? Well, that's what happened in November. So if you remember what happened in November, jobs report came in, I want to say 100,000 above almost. Give or take, and the non-farm payrolls came in 100,000, and this is when we were already in an environment where we would do that, but where it was good news, bad news, bad news, good news, and then the unemployment rate ticked up by 0.1%, and we shot down 2%, and then by the end of the day we were up, and then the next 4 days we continued to rally. So I could understand any disagreement, but I like I said, I think it's in the realm of possibility. Yeah, then the unemployment rate went down last month. I'm talking about the November meeting. So November, and that was after bad jobs data. It was right around here. Bad ADP, and then look at that candle. You went from 379 down to 370. You moved 10 points that day by dropping, and then you ended up here, and the next couple of days you rallied, and then I forgot, November 10th was CPI, just like this setup, and then you popped right back up. But it was the same logic. Again, non-farms in November, they were expected to be at 197, and it came in at 261. So just about 70,000 above, give or take. And then unemployment rate went up 0.1, and then we had that little stupid move. The Fed pivoting, well, what? What just happened there? Not seeing anything. But what he said, I mean, what Bullard even said today, I could agree where he's, the market even sold off a little when he said, nah, that's not going to happen. Like, I would keep the rates. But that chart of what he was saying was really telling in a weird way. Yeah, I don't know what this pop is, man. I'm not even seeing any news. Be on the lookout. I think it's just another SPY catching up with bonds. What the hell is that? Yeah, keep watch. There's something going on, or that's just nonsense. But I'm looking right now. I don't see anything. McCarthy loses 8th in a row. SPY moved more than NASDAQ on that. Again, NASDAQ still trailing behind. No, I'm not even. There's nothing. Low key, I think it's just that bond movement. Again, it's just like we've been filling the gaps. Run it again. I feel like McCarthy is like playing a game with my nephew where you can't. He's just like, nah, run it again. Do over. Nah, do over. Nah, do over. That doesn't count. Do over. Do over. What? But where was it? So let me show you the chart. This is what he was tweeting, but even though he's saying the Fed saying they won't raise rates, like he was saying, is that this shaded area could drop and then the rates are going to increase. It's like they're anticipating it. And then like he said, our credibility will be intact, asshole. And then so we're going to see, but it seems like the Fed is going to continue sending that message, but at the same time, like I've said from yesterday's watch list, the bond market is disagreeing, and the bond market is usually ahead, but it's just like the question is now, are they saying we're not going to stop, or we're not going to keep raising rates? Is this equivalent to the transitory argument? So as much as I want to believe the Fed, and I do believe they know info, I think they know a little bit more in the sense, and I think they're just going to say that until the last minute and then change their mind. But as of now, the bonds are there. So it's going to be a weird one. At the end of the day, though, that's why every data set, I'm just following it. But I'm definitely going to come in prepared tomorrow with a little bit more of an eye on the unemployment rate. And I think that will be it. I'm not bullish nor bearish. I will respond instantly. I think, again, I'm holding this from Bullard's speech. I think, if anything, we could get a little bit of a melt up into 530, and then it'll sell off before then. But other than that, I don't really. I'm in the mix, but I think it's going to be a big report. And I don't, in a weird way, I don't even think the number matters. I think it's the unemployment rate. And sadly, the amount of jobs added or lost won't even affect the unemployment rate, given what I saw in November. Because again, in November, the jobs increased and somehow the unemployment rate went up. So God knows whatever metric they're using and how they're calculating it, the lags and all of that. It's very complex stuff. That's why there's no need to predict. It's going to be really about responding. And again, that's what we did this morning. So, just like even off the jobs today, just reacting to the data, just like yesterday too, we were able to make money off of it, and you're able to at least come in with conviction. But the data should be big tomorrow, and I think it could be a max, a really, really big move. But for the most part, it's just like I will get my conviction from what that data says. But in my mind, my priority number one is going to be unemployment rate, and that's about it. And even then, unless it's a huge miss or a huge beat, and even then, I think that the unemployment rate will be the driver home to really tell us what's going on. Data is pre-market. Yes, I will be trading futures. So just like this morning. So like this morning, I made a trade at 5:30 a.m. And then I closed it out by 6:30, 10 minutes after the bell. But an hour after I made the trade, that was $400 or $500 on the futures. So, and again, if you're trading on shares, you could do that pre-market as well too. This level is quite fascinating. All these stupid pops though today. I think I'll just take it into power hour. At 18,000. I don't think it will. Again, it seems like there's a big lag, and then remember, like severance, you have like 3 months of pay and other things. So I don't know how it's going to show up. So come back down. But the MNQ, I could take some small profits on that. But like I'm saying, I wouldn't be surprised about a little bit of a melt up into tomorrow, but we'll see. If it goes up a lot by today, I'll sell out, but I'm down to hold it for a little bit. I wouldn't even mind getting some downside too, just in the sense that I think we're going to get a drop in pop depending on the unemployment rate. But then again, if that data is strong and unemployment rate goes down, we're going to get so murdered. It's going to be so bad. But at the end of the day too, though, I think it will have a little bit of a, I think it's going to be quite interesting. And now the expectations are so wide. Everybody, I mean, there's a potential for something big here tomorrow. So we'll find out. Will tomorrow be at 5:30. And yes, I will be live tomorrow morning before the bell. So if you want to be here, we'll have all the data and we'll have interpretation and all of it. And you won't miss anything. Meta on the high. If we come in line, then those other metrics will be key. Just like last time, people will look at everything from private payrolls and household, you know, there's like the household metrics. And then also, though, the unemployment rate. And then worst case scenario, they'll jump to average hourly earnings. And then there'll be some other follow-up data, but I think we'll get most of the move from there. Unemployment is released at the same time as the non-farms. You know, the numbers. That's why, I mean, honestly, it's very weird for Bullard to be that bullish. Because, like, again, him even, it made sense. He kind of, like, explained it in, like, a pothead way. Where his 7% restrictive number, it made sense based on the, less aggressive or less generous Taylor rule. And, like, he explained it with that chart. But at the same time, he was also saying the data is going to move down into that fashion. You see what I'm saying? But he was not that. He sounded way more bearish and like straightforward about it last time. So, but it was just at the end of the day, if they don't want unwarranted, easing, it makes sense. He could be as bullish as he wants, let the market shoot right back up. And if that data is strong tomorrow, it's going to bring you right back here. And then that's it. And then we dance with the CPI next week. But at the end of the day, though, I think I think unemployment rate is really it. But then again, nobody knows. It's like last January, it was a huge miss on the jobs, but then seasonally adjusted, there's going to be some big effects. So we're going to find out, but just keep in mind there's more than one metric tomorrow in the non-farm payrolls. That's the best way to put it. And that's why I'm kind of going to be leaning on the unemployment rate. The non-farms is 1 hour before the market open, correct. So 8:30 a.m. Eastern, 5:30 a.m. Pacific. I will be live at like 5:15. So I got to wake up earlier. Hopefully I get a dump in. You know what I'm saying? You guys know the routine. But we will be here about 15 minutes before it comes out. I'll be going live. And I usually trade it if it's an easy read. If it's not an easy read, we're just going to ride out because you got to keep in mind you have a parachute for the CPI next week. That's it. That's all that matters. Got to sleep early, or you just got to sleep faster. That's it. Just wake up early. That's what I do. I just sleep faster. I just wake up like 30 minutes extra. I'll be up at like 4:30 a.m. tomorrow. You know what I'm saying? Just get some water, chug my water bottles in the morning. You guys, do you know that? I do that. You got to do it right when you wake up. Wake up and then just chug a water bottle. You got to down it. Oh, it just, it clears you out a little bit. 16 ounces, that's it. Sleep faster. Yeah, you never heard that. I used to say that all the time. When they were like, I don't have enough time in the day. That's when I was in like full Yosh mode. And people in the real estate, they're like, I can't do that. How do you do that? I said, sleep faster. That's all you have to do is sleep faster. That's it. You cut out 1 extra hour a day. Wake up 1 hour earlier a day. You just created a full 7-hour workday every week. Think about it. 7 days in a week, right? If you just woke up 1 hour earlier, you slept a little faster, and just woke up 1 hour earlier, it did work. That would be 7 hours in a day. You just created a whole nother work day out of just waking up 1 hour earlier. That is an Arnold Schwarzenegger quote. Yep. Mm-hmm. That's where I learned it from. I said, yeah, I'm not that buff yet, but don't sleep less, sleep faster. It makes a lot of sense. It really clicked with me at that moment. I said, I feel. Okay. So 38.30, if we get above here, I mean, this is where you broke out. Is it power hour yet? We got 10 minutes till power hour. But this is a big level now. You're higher than the Russian candles in the morning. Oh, shit, the gap. We gap down from there? So let's see. Pins volume. All the social media company, and then pins, I think it's 2 days in a row, but they're still red. I want to buy a personal residence. It'll put you at a disadvantage to get another investment. I mean, if your current rent is cheaper and you like where you live, and you could actually secure a better investment property, there's no problem with renting if you're going to buy another investment house. But at the end of the day, it's like if it's kind of equivalent to what you're paying, in a weird way, it's your own investment property. I mean, you are paying somebody to rent. Unless you live at home, then you got the GG, then that's it. That's OP. I don't know. Like, my mom just won't let me live with her. My parents don't like me, I guess. I've asked them. I said, can I just stay with y'all? They were like, you ain't going to be blowing that horn at 5 in the morning. I'm like, please. Come on. And then, I just won't. You got the GG? Oh, well, shit. Buy a rental that you'd maybe want to live into when you get, like, married or something. But I don't know, man. I would get another investment. Fuck that. You telling me you got free rent and you like it? Can you take girls back to your house, Daniel? Is your mom okay with that? That's haram in my culture. Mama wouldn't let that happen. That's it, man. My mom even get offended now if I brought my own girlfriend into her house. It's weird like that. So I'm just saying, but if you could live your life normally, that's it. You're good to go. I'll get my ass beat. So that's the only downside. You can't have, like, parties at your own house. You can't, like, you're never going to get married. Maybe this explains all of the dating stuff now. Okay, I'm messing with you. Well, it's like, that's it. That's the only downside. You can't smoke. You can't drink. No girls. No this. That's it. The parents' rules, you got to follow it, but it's free rent. So you got to find that balance. Now you find that balance. Now you see. Fuck that, bro. Just go get an Airbnb. It's still cheaper than rent. Anytime you want to go, you be like, oh, yeah, I just bought this house from Airbnb. You know what I'm saying? Mm-hmm. You know what I'm saying? That's all you got to do. That's all you got to do. How old is Daniel? I think he's 23 or 25. I think he's 23. Daniel's younger. Hypergamy explains the dating stuff. Nah, bro, we just foreign. That's it. We're foreign. I don't think it's hard out there. That's it. Our parents all want us to get married, but then you can't bring anybody over until you're married. It's a catch-22. It's growing up foreign, bro. It's just growing up foreign. If you know, you know. That's it. And you got parents who are strict, then it's a challenge. It's a challenge. It is a challenge. So it's not even like about anything. This ain't even, this is between you and moms right now. You said your parents' house, it reminded you of the story how your dad taught you how to drive stick shift. Nah, it was just different, bro. It was just different. You couldn't a member of the opposite sex could not enter your house, whatever the reason. If you were like, Mom, I got a girlfriend, can she come over? Like, what kind of stupid question is that? I'm telling you, honestly, like if we were back in Egypt, they would have honor killed me or something. You know what I'm saying? So it's like, it don't work like that. Even if you're a guy, girl, it don't matter. It's nah. Like, I would be terrified. And then you can't even sneak out. Like, I know some people, like all my friends, like, why don't you sneak out of your house? Like, nah, like, bro, my house was like, nah, bro. We had like automatic floodlights. My parents had an alarm system. Like, that was the most terrifying thing. Try to sneak out, bro, is like getting out of Guantanamo. Like, nah, it wouldn't work. It wouldn't work. You be having your mom leave? Nah, it doesn't work like that. You'd be terrified. And I said, my mom, you don't even know the schedule. Like, it's just, nah, it's scary, dude. It's terrifying. That's it. I'm telling you, I was more scared of my parents than anything. That's all. I wasn't scared of anything else. But my mom's would she would get you, bro. And she had abilities. I told you, she could have pitched in the MLB. Should have seen when she got an arm on her. Nah, bro, it just wouldn't work. If you know, you know. I feel like I'm glad. I know a lot of chads can relate. I hear you, bro. If you know, you know. If you know, you know. Oh, you're Egyptian. ازيك حبيبي? ازيك? Get ready for non-farm, habibi. I know Verizon, I got like $26 out of it. Oh, I think I would have got like $50 or 80 more today. Your dad would allow girls over who just appear in the bedroom door randomly. You should tell him thank you, though. At least that's it, bro. You got to, like, I could have ended up really weird. That's why I said, bro, I was only allowed to watch Arthur and Clifford until I was like 16. Y'all don't feel me, bro. I watched way too much Clifford and Arthur, bro. And I was in high school. That's it. We didn't even have cable, and we weren't allowed to watch anything. So it was just different, bro. I could have, and then that's it. I don't know how, like, it's just, nah, it's weird. Clifford was a banger, bro. I love Clifford. I really did love Clifford. And Arthur was a great informational show, and you learned a lot about a lot of social behaviors. You know, a lot of challenges, a lot of drama too. Spot popping and falling. I mean, I think we're getting ready for Power Hour, 4 minutes. I mean, we're down borderline 1%. I mean, the SPY came up a lot, but the NASDAQ's actually trailing behind it. And then 38.30, you were up above it for a second, but that's where you really, really went crazy yesterday. But yeah, NASDAQ is a lot lower than early. NASDAQ's almost, 20, 30 points below that? Look at Apple. Oh, Apple. Why, yes, Apple not doing good. WBA. No, that one's long-term, so we didn't have to tax loss anything on that. I don't even have a gain or loss on it, technically. But, well, I guess we have an unrealized loss. But I'd wait till it gets lower because it could yield a lot more. So let people react to the earnings. I like it. I still like Walgreens, but what you got to wait for is if you go into the lows. Yeah, it's weird because remember when Apple was running earlier today? Apple was like really, really leading here in the morning, and now it just came right back down. There was more news about the, what was it, like supply cuts or something again? I remember we had something this morning. The volume kind of fell off, but it's decent. I mean, we got 2 minutes till Power Hour, and you're at 53 million. It'll be another 70 million day. doing nothing. Want to leverage equity to get another. I can put my house as an LLC. You should for the next one for the rental property, but at the end of the day, just don't. Just make sure you don't over leverage. Make sure that the second house does not put the first house at risk. That is where everybody gets clapped, and that's how it could turn around. Oh, Oscar Munoz accepted my chat request. Wow. It's a big day. He's not typing, though. He might have just read it, and then he's going to ghost me. Let's see. Come on, Oscar. I like duplexes. I like all sorts of... I like property. I mean, it's just all about how you hit it. You know what I'm saying? Just don't overpay for it. You'll be good, but that's kind of easier said than done. But especially, I mean, just be prepared to look and spend time on it. Real estate or business, it depends. I mean, if you could get... Usually a successful business will help you get into real estate and stocks. You know, I think everybody should. You know, if you could work for yourself and all that, or have a good solid income, that's the key to wealth. But also, you know, your investments are really, really good. Look at these, Habibi. They go up or down. You're starting off power hour with a sell, 8-point sell. I guess technically that was only like 3 points. Now you're back to the 38.20. Some of the orders are kind of showing up, but that was decent volume. They say, hello, how are you? Well, Oscar, maybe he can't talk about it. I'm still short on BA, still clapping. And then I made that one biotech play today. Bought WDC. Well, I actually only lost $2 more on it, but that play has not been paying out how I wanted. Oh, wow, JPM, we got $1 on that. And then I made JPM today. That one's still just actually moving up nice. So that was a good pickup. Greedy long. I would go into the momentum because, again, this is also, it's looking like a greedy short too. Mm, 383 ended. Well, we got 1 hour. We've had some nice power hour activity. I mean, we did the dancing queen at the lows and at the highs almost all day today. So we will see. There's only 100K owed on the house, but worth 1.2. Does that open up decent opportunity? Hell yeah. Just don't buy an expensive secondary property, right? Because then if you get clapped on that, I would go for like a nice. If you could get like a nice $400,000, $500,000 house, so then now you will have $600,000 in loans, and then just buy the other house cash, and then there you go. Now you're cash flowing, and then just still owe the other 100, and then leave yourself some equity. You see what I'm saying? Because just in case either houses drop in value, it could still kind of balance out, and then make sure you just don't get bogged down by any payments. But as long as you don't take out all of the equity, you know what I'm saying? Don't go and leverage. You know, I think you could get up to 70% on there. Up, you're flushing. But Apple's the one coming down here too. JP Morgan still holding up. So you could pull up to like 70%, maybe 75%. But that means you could pull up to 770. So they'll only give you 600,000 above that, pretty much. So I would aim for like $450,000. Then now your LTV will be 550,000 on 1.2 million. if houses drop 50% in the crazy situation, you'll still be good, and then take that $450 and pay off the rental cash. That's what I would do, not a recommendation. You say what? And then you're back below 38.17 is the level, but you're like right there. Again, we've done this a couple times, but now if you go lower than there, that won't look pretty. But that happened here, and then it just came up out of nowhere. Microsoft's M12 more focused strategy. More Americans are turning to credit cards for everyday expenses. Census data shows that households are struggling to cover bills as pandemic savings run out. The number of Americans relying on credit cards to cover daily expenses have jumped in December as households battered by inflation find their regular income is no longer enough to make ends meet. New data released on Thursday, the Census Bureau Holds Pulse survey found that more than 35% of households used credit cards or loans in December to cover spending needs in the past week. That's up from around 32% in November and just 21% in April of 2021 when the census first started collecting data. And what's that? Money from savings or selling assets? That cleared up so much. Yeah, just don't over leverage. You'll be good. The idea is get saw. And then again, if you buy the other one, you'll be great. Bullard behooves Fed to get rates in a restrictive zone ASAP. Bullard says he favors front loading data to shape 25 or 50 hike decision at the next meeting. So Bullard, just a statement came out from Bullard somehow. I don't know if this is old or not. He's talking with reporters after the speech. We can't listen. So he said he behooves the Fed to get in a restrictive ASAP. He says he favors front loading, but during the speech, he kind of said we did front load. This is new. This is coming out right now. And then he says data to shape 25 or 50 for the next meeting. So that means jobs report tomorrow and CPI that should move the Fed odds. But again, this is all, we're all in the Bullard zone if you really think about it. It behooves thee. I mean, what is the definition of behooves? Behooves. But you're coming down. It is a duty or responsibility for someone to do something it is incumbent on. Behooves thee. Appreciate you. Amen. But then there's one more piece of advice with that whole house thing. Make sure you use a co-real estate agent. Amen. 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 You're in Cali. Oh, yeah. Yo, give Najee his deal if you buy in Cali. But again, you could go get nice multi-units anywhere for that $450,000. You could probably even get you a little apartment complex if you really want to go into the trenches. Did you know that I'm your hero? I did not. Well, that means a lot. But be careful. They say never meet your heroes, though. You know what I'm saying? Like, I don't know what it'd be like if I met Jerome Powell. Honestly, he was my hero until he said transitory. China has shifted to preventing severe COVID cases. Don't know what that means. It would behoove you. J Powell. I don't know, though, but I didn't realize till today, like, bro, J Powell, he sounds so much more like, that dude is artful when he talks. Like, even comparing him to anybody else on the Fed, like, when you hear the other Fed speakers, like, ain't nobody talk like Jerome, bro. Like, I don't know if y'all realize, like, that dude is a smooth talker. Sinaloa governor reports 9 injured after Ovidio Guzman arrest. OpenAI is in talks for a tender offer that would value the startup at $29 billion. They're in talks to sell existing shares in a tender offer that would value them at $29 billion. People with the familiar with the matter say. Microsoft is doing something with Bing in them, but I don't know. I feel like, can they even buy OpenAI? I feel like, come on, antitrust? No, fine. There's a huge article. I'm seeing if there's any companies listed on it. Nah. But I know they just did that partnership with Bing. They won't sell they are. So they're going to sell the remaining shares in a tender offer. Venture capital and founders are in talks to invest in the deal, which would total at least $300 million in share sales. The deal is structured as a tendered offer with the investors buying shares from existing shareholders such as employees. It would be double OpenAI's valuation from a prior tender completed in 2021, where it was valued at $14 billion. Microsoft has been in advanced talks to increase its investment in OpenAI. In 2019, Microsoft invested $1 billion in OpenAI and became a preferred partner for commercializing new technologies like the search engine Bing. That kind of sucks. So Microsoft already owns it. The next great Google is already owned by the other trillion-dollar empire. I thought it was going to be like some Zuckerberg, you know what I'm saying? They get big. IRDM, it's had 3 of those pops. Qualcomm agrees to satellite-based connectivity for next-generation Android. SPY coming down now. If you break a little bit lower than here, you're going to get rid of the Bullardness. The Bullard bullish. Oh, I went negative on my long NQ now. Or MNQ. The decision for Activision, you just need the deal. Mulan. I'm not a fan of those names like Mulan, and I think they're lower quality companies. So, I mean, I think that's high risk, high reward. There'll be some volatility. You might get some good plays on it here and there, but I'm not really the biggest fan of those. It would behoove my portfolio if the SPY kept dumping. Well, it looks like it behooves the Apple's dropping. Yeah, Apple's leading the way. Big order sells, no bids coming in. You might go down to 38.10 now and get back into the lows here. Pretty shitty start to power hour. Never get caught up options and forget to buy the long term. No, I mean, we always make sure we add. I have automatic deposits, and anytime I stopped buying in the long term, we were just waiting to build up cash because everything would dump no matter what last year. Jeff Bezos could pull a Bob Iger and return to Amazon. Oh, that would be great if they did, but maybe he'll return at $70 a share. SPY coming down again, though. Watch out. And even worse for momentum, I need to go to the bathroom. I know, I'm sorry. 8, 9, 10, 11, yeah.
Typically, when
So
that
follow me on
happens,
Instagram at the Trading Fraternity.
Market reaction.
I love
I think
you.
the right template here is probably November 2007, in which we had a negative non-farm payrolls print, and the interest rate markets, the world that I'm concerned for on behalf of my clients, the interest rate market basically rallied from the 2 to 5 year point of the yield curve about 75 or 80 basis points inside of a month. Because that one data point, that one big negative seemed to come out of nowhere, even though there were indications of economic weakness that were starting to spiral a little bit at that time.
And it feels like we're a long way away from a negative NFP print, but it's a good reminder that things can change really quickly, even though we've been seeing this really resilient consumer, this really resilient labor market for years now. I mean, when you think about the needle that the Fed is trying to thread, do you think that there's a risk that they get more than they necessarily wanted when it comes to taking the edge off the labor market?
Well, look, right now it appears that the Federal Reserve is tightening into a recession, right? They might be a little bit ahead of it, but really not all that much. We've already seen a lot of early evidence from highly interest rate sensitive sectors of the economy that are contracting. And the only question is whether that contraction spreads or whether it just sort of deepens in that one arena. Those interest rate sensitive sectors are housing, of course, and also the auto sector, which has a really big employment base associated with it as well. So I don't think we have a great template for what that is likely to look like this time around. But I think one thing that's particularly notable when it comes to the Federal Reserve is that the markets are still pricing in rate cuts after the peak Fed funds rate, despite even the FOMC minutes just yesterday pointing out that it's going to be a very long time after we hit peak interest rates before the Fed is ready to cut again.
Yeah,
I would say it would take a really big downturn for the markets to really price in a ton of cuts in the short term.
Yeah, it was interesting to see that debate that was had behind closed doors about market sentiment or the market reaction, if you will, or market trying to front run the Fed. That, I guess, brings us to the question, though, of finding investment opportunities. And I think there are a lot of people that, at least so far, have made a great deal of money trying to bet on this idea that the second half of the year will represent, if not a pivot, at least a pause.
Coin suspending withdrawal. Someone in the chat says that. I didn't see that. That would be the big one. But I don't see that news. Biogen, I think it is for lecanemab. It's them and there's another company related to lecanemab. Lecanemab. I'm sorry. I love the biotech names. I think all the banks started to kick up here, huh? I know Remember, and JP Morgan earnings next week, so we'll see. McCarthy lost 8 times. I don't even know. Dude, they are just voting back to back to back. It's crazy. That's like, he lost the World Series, like a 7-game series. He lost every game. And he's going to vote tomorrow, probably. I think at this pace, they're doing like, what, 3-4 votes a day? Bro, that means he's going to be at 150 votes by the end of the month. I think he's going for the record. Twitch clapped? Uh-oh. No way. And then bonds dropped a little bit, but SPY is still below it. So again, every single one of these little gaps between bonds and the market, the SPY is caught up to it. So let's see. Mine is good. Uh-oh. It's pretty wild, dude. Another candle. Twitch, it's okay, Twitch. You'll find your way. Thank you, Jeremy. I appreciate that. It's been a while since anybody insinuated I was on drugs. So I think we're doing good. Amen. That's what I'm talking about. I needed that. Yeah, as an ego boost for me. I got to watch the ego. But that lets me know I'm on the right track. Thank you. He has no idea. Amen. Amen, bro. Amen. Whew. I miss it, man. That's why I was like, I thought I was falling off. They stopped saying I was on Adderall. So I was like, damn. It really be like that. I'm like, come on, we got to step it up. Parallel buys Altus Asset Management. I don't know what that is. SEC charged 5 people from scamming $45 million from investors by promising unique blockchain. Oscar is ghosting me. He's still online, but he accepted my chat request and didn't respond. And now we're back to the lows. I've never seen you have mood swings, sober AF. Well, I have Yosh, but I feel you. Defense Department has rescinded vaccine mandate. Interesting. That's an interesting one. I don't know if it'll affect anybody. I don't think it'd have a stock effect. Okay, so we're going to war then. That was from Ryder. What's his name? I forgot his first name. Government official. General Pat Ryder briefs reporters at the Pentagon. U.S. to provide training in Bradley operations and maintenance. And Defense Department has rescinded vaccine mandate. And Apple bottom. No. Apple very low. Apple's is at that point. It's like down a lot, could have a bounce, but it's also at the point where it could totally matter anything. And then troops who refuse to be vaccinated will no longer be discharged. So there you go. I think this is all coming from Pat Ryder speaking for the Pentagon right now. Yep, we're going to war. Okay. Seems like, wait a minute. Wow, seemed like a sudden change in heart. No pun intended. But damn, this is crazy. Yeah, that's big news. I mean, I'm sure for some. And veterans, thank you for your service, regardless. You've been waiting 2 years for discharge? Yeah, the Twitch is clapped right now. Yeah, man, shout out to Vet. Y'all should have seen Cole Real Estate yesterday. We had a vet. He went from military to agent. He served his country, and now he serves you for all your real estate needs. Contact Ian right now. Call real estate. Ding. That's how you started. That's good, man. I'm glad. I hope we can help, bro. I love it. I love getting military people in to invest in. I think they all deserve the long term, if anybody. You know what I'm saying? It's good. Iridium to join satellite smartphone messages. So I think the IRDM, Iridium, and Qualcomm, you already got that. There's another update. But it's been moving mad weird the last couple days. 40 minutes left, my friends. What a power hour. What a Bullard run up and then power hour dump. You've been dumping for 24 minutes straight now. Pretty actively. JP Morgan in the long term is killing it, actually. Like 7%. It was like 8% yesterday. And then we got another like 4.5. I forgot we had another pretty sick purchase on it. If you guys remember, like, because I was looking at it, I was like, man, I wish we got more at 116, but like we did. So we even got to buy the low at 116 on there. That was another one that I think kind of, we had a lot of nice pickups and a lot of new growth names, but I think, dude, we got JP Morgan 116. I'll take it. Could have got it at like 103, but that was still a nice one. But I'm glad with it. And like I said on the watch list there, that's why I even bought some more JPM to swing here today. But I think the bank stocks, if the earnings are good and the right situation hits, I think they're looking pretty nice. And you're giving up all of the Bullard bounce. If jobs come in hot tomorrow, we're probably going to get clapped. But then I would be keeping an eye closely on the unemployment rate. Apple just second half of the day here just started giving up like it was Microsoft. It was very, very weird because it showed a lot of strength in the morning and then all of a sudden it just flipped on us. That was a bigger candle. Jobs report is tomorrow at hour before open, and we will be here live 15 minutes before that. Yeah, bro, you're back to 3808. All the bullardness has been given up. You could call it bullness, bullshit or bullness. I don't know. Bullard came. He said I'm usually bearish. Then he came in Bullard. Very, very weird. Very, very weird, man. Great time to be in the market, 3808. Yeah, bro, and these sell orders have not stopped. But let's see here at the 30-minute mark, 3 more minutes. But you've been, straight up from the high here. This was 30 minutes, and then you had, 15 minutes of bouncing, 30 minutes of down, and then the bonds are still staying pinned. Bed Bath & Beyond files for bankruptcy within weeks. Sources say old but hitting again. Oh, the Lockhead. Where is Lockhead? Lockhead Martin. Where is him? You listen to Ricky Martin. It's very good. And then there's Lockheed Martin and Ricky Martin. Very, very good. Both of them, they should make a collaboration. Wow. They're living the Vita Loca. Very good song, man. You remember this one? Oh, very good. Lockheed Martin, Ricky Martin. Very, very good, Habibi. I'm telling you. It would be explosive, very explosive collaboration. The 52-week highs and lows, high-low ticker. If it's in red, bright red, that's 52-week low. Bright green is 52-week high. Everything else is intraday high, and the count is how many times. And then these little bars up here is like velocity. It's like a RPM gauge. I forgot which one's which. I think the top is 30 seconds. Yeah, or no, top is, damn it, where'd it go? Where is it? Ricky Martin, come on. 30 seconds at the bottom, 1 minute, 5 minute. I squeezed the PHILO. I did not squeeze. No, today, no PHILO, actually. I had to listen to Bullard. And I had to listen to Bullard being high, bro. I don't know what it was. It was so weird. It's not the I hate to say it because, like, I don't like to say that, but I've thought that many times before. I've seen Bullard, and y'all would joke about it. I'd be like, stop it. Stop it. But then I'm like, low-key in the back of my mind, I'm like, he's kind of, like, he's lit right now. I don't know what he's lit off of. It could be anything. Maybe it's a natural high. You know what I'm saying? Y'all think I'm always used to. I just got my first compliment in a long time about thinking I'm drugged out. So thank you. But Walmart completes 6,000 drone deliveries over the past year and now operates in 7 states. But I don't know, bro. It was just right when he was like, man, that's a lot of charts. I got all these charts. Man, y'all must have been bored as hell with these charts. That's a lot of charts that we got there. But then, like, the whole speech, he was talking about the charts. And then right when someone asked him about the charts, he was like, that's a lot of charts out there, man. Man, y'all was looking at these the whole time? Yeah, bro, you kept saying the yellow line, the blue line, the gold line, the blue line, this chart over here, this chart over there. He's like, y'all must have been bored as hell. So I don't know, man. I don't know. And then that's it. Then he started giggling. He started laughing at, like, the 2 jobs. And I don't think he was, like, making fun of people having 2 jobs. I think he was just, like, laughing like a little kid. Like if I told my nephew, yeah, somebody has 2 jobs, he would giggle. He's like, you're only supposed to have 1. Like, he was giggling at that. He was really like, I was like, man, you lit as hell, bro. Stop playing with me. I like that. That's funny. That's funny to you, huh? Okay, maybe if you were like 4 or you're high as hell. It's one or the other. That's all. Yeah, bro. We didn't even know if the charts were showing, too. All right, you're back to the lows. He was thinking 2 chains. He was thinking of something, man. I don't know why he giggled so hard at 2 people having 2 jobs. And y'all were like, he's making fun of people struggling. Y'all should listen to Mary Dolly. I'll never forget that speech. She was like, listen, people are talking about inflation. I don't feel it. You know, I go out and I buy things. Mary Dolly, you make $550,000 a year. Okay, stop it. Of course you don't feel it. She's like, I don't know what you're talking about. I don't really feel any inflation. Like, how dare you? I turned into Greta Thunberg. I'm just kidding. I'm not going to talk about Greta. I don't want to get arrested. Okay, I says, y'all got to pick your battles. I know who not to mess with. That's it. Greta is on that list now. I ain't playing around with Greta. Fuck that. I started recycling after they arrested Andrew Tate. I said, fuck out of here, bro. I went and bought a Prius. And I even use my compost bin, and I make sure I use it properly. So make sure you use your compost properly. How dare you? Fuck out of here. I ain't playing around. Man. I'm mad into recycling now. You're hollering. I'm recycling. Fuck out of here. It's dangerous out there. That's it. Y'all thought Greta was popping back in the day. Y'all thought you could mess with Greta? Hell nah. That's what I learned in 2023. It was a quick lesson early on. Yeah, I'm going to turn vegan just in case. FOA. Oh my gosh, bro. That's what that means? I just learned that right now. I didn't know FOH means F out of here. Wow. Wow. Look at that. Thank you, Chad. I did not know that. It just made sense because I said it. And then you said, I did not know that. Nah, man. I did not know that at all. Bro, you know how long it took me to learn IMO? Like, this was back in my early internet days. Bro, you know how long it took me to learn that, Lo? And I was too prideful to ever Google it. Oh, man. FOH. I did not. Man, that's amazing. Nah, that's serious, though. I'm like kind of ashamed. I had to admit that out loud to all of y'all. Raytheon is said to explore sale of actuation business. Could fetch $1 billion RTX. Oh, how does Raytheon move before Lockheed Martin? Come on, Lockheed. I need you to live the vida loca. Lockheed, pop on this one. This news right now. Raytheon explores sale of actuation business. WTW, what's the word? I never encountered that one, but I'll keep that in mind. I've seen FOH, and I thought people were just saying, I thought it was like a remix of Homer Simpson. Instead of like dope, it was like folk. I didn't know what it meant. Or maybe it's like phoning them. I didn't know. I didn't know if it was like a Lil Durk thing. I was very confused. U.S.-Japan discussing ongoing collaboration with IBM and Rapidus executives. Yeah, like, it was either Lil Durk or like, I didn't know what it meant. IBM Little Pop. IBM moved a lot from that bottom. I remember Mosby was getting that at 120 or something. Or didn't you sell out for that one for MO? But they're just still pinned. SPY pop in 5 minutes after the 30-minute candle. So we'll see. We're bouncing. I mean, I don't know as far as bounces go because we did this, but you sold off way heavier. So I wouldn't be surprised the whole VWAP. Yeah, the Zaza dropped. The Fed futures actually tilted a little bit today. Again, your data was not where it wanted to be. I think the real one that moved, it was March implied rates dropped a little bit from 4.77 to 4.75, and then June went up to 5.01 from 4.99. So it's very small, but the fact that it actually moved. But again, I think how they set up everything today from Bullard to not, I mean, we're going to have to see the data. Data is very potent. Where's HBI? Oh, this guy. How you do this, man? Wow. I thought he would take a break today. You know, maybe he tired. Wow. But Lockheed Martin, don't do it. Mobile says supervision product contributes $3.5 billion to Outlook. Mobileye. Oh, the drone delivery, that was just this statement, but I didn't get anything off of that. Just 6,000 a year, they said they delivered, or 6,000 deliveries last year. DeMar Hamlin asked the Bills game result after waking up, Dr. Say. I don't believe it. I feel like he said, where am I? Where am I right now? I would be so confused. But then I think he asked that. I think they're just messing with our order of operations, but I'm sure he did eventually ask it. There's no way that's the first thing. But I'm glad to hear he's doing good. Did you? I think my girlfriend showed it to me, but I didn't know if it was real. Like there was some guy, like, can someone confirm this for me? Like apparently there was like some guy who like made like an NFT project, and then he like somehow ended up in a coma, and then he got out of the coma, and then he what's it called? He got out of the coma, and then like he said, he was like, what the hell happened to his FTX? And then he had his money in FTX. I don't know if that was real. My Instagram is at the Trading Fraternity. However, if you do follow me, there will be a bunch of fake Joshes who'll be like, hey, how's your trading going? Do you still watch the channel? How you doing? So don't fall for it. Well, you know, I'll only send you love and blessings. I will never ask you for anything. I usually don't even DM people too much. So it's good. Is that real? I saw it. She showed me that. I was like, there's no way that's real. Because that would be trippy. If you imagine and then you woke up, you're like, and then you know, imagine if you went into a coma 3 months before FTX, and then you just woke up and you're like, what just happened to FTX? That would be crazy. Bed Bath & Beyond extends route to 30% down. It's fake. Yeah, I was going to say, I was like, there's no way that's real. It's a good story, though. Mobilize says demand still exceeds supply for cars. Mobilize making a lot of statements right now. I nominate Josh for Speaker of the House. I don't think I could lose that many times. I would have gave up after this third loss probably. I would just say they don't like me. I still can't believe it. I feel like he's going to vote again today just for the hell of it. I can't wait to see if he sets a record, man. I don't know. It's going to be great. He's in jail. SBF, I mean, he's on house arrest. Honestly. Like, I think the best example is the movie Disturbia. That's like 2012 or something, or 2008. So think like Shia LaBeouf, but just a little weirder. And then just like, he's probably creeping on his neighbors with binoculars. I wouldn't be surprised. But yeah. It was a great movie. Disturbia, it really was. Back in the day, that was like, I don't know, when you're high school, like when you were growing up, was like Disturbia hype. Like I remember when it first came out, everyone's like, did you go see Disturbia? Did you go see Disturbia? I'm like, I'm not allowed to go to the movie, sir. My parents are a little different than y'all's. That's all. But I remember it was really, really hype in high school. Or it was high school or middle school. I don't remember. I'm too old. But I remember it was like hype. It was very, very hype. You retweeted. Is it real? Or is it fake? Amazon, no, they didn't even react to the layoff news. It just, I mean, remember you get more bigger reactions off companies. Like, remember Salesforce last week? It even went up a lot. Or was that this week? Yeah, man. 18 minutes. Dude, that was like, I don't know. It's either last week or this week. I don't know. The days go by fast, man. We've been processing a lot of information lately. That literally was like yesterday, 2 days ago, I think. And coming back down. So melt up. I'm gonna hold those MNQs till right before the event. Hopefully they don't get too clapped. Yeah, Microsoft's dropping, and now Apple's coming with it. Oh, Microsoft pretty big. He posted his medical bill. Could be real. We'll see. I saw this thing. I saw this little video. I don't know if it's real or not, but like apparently there's a super easy way to dispute medical charges because technically they have to tell you what you owed, like specifically your charges, and you have to verify them. But then like you can't verify medical charges without breaking HIPAA. Not a HIPAA, but that's the Privacy Act. So I don't know. I don't know if it's real or not. I don't think I want to try to test it out because then I would have to go to the emergency room first. But we'll see, man. That'd be crazy. But the bonds are rocketing. But now this time, bonds are way higher than the market. So if we end up hitting a low, that'll be very interesting. I wish you could go into a hospital and get a menu with their prices, a la carte medical care. Can we just save the anesthesia? The anesthesia seems really expensive. If I could just get just let me get the surgery and put the anesthesia on the side. Maybe. I'll keep a menu and just come back and let me know, and I'll just come back later. We'll keep a menu and we'll see what happens. Thank you. Okay, big pop now. Bonds too. Let's see. I want to see your surgeon. The anesthesia was undercooked. I don't know. Maybe one day. I feel like if we ever fully go into like an idiocracy type thing, we could definitely see that. Dr. Lexus. We're basically there. No, we're not. That's what scares me. We're not there, bro. If you think this is bad, it's like, nah, man, this is actually kind of good in a weird way. That's what I always, maybe I'm too optimistic. Nah, bro, I think we have a long way to go. But like that's why it's like weird, because it's like, okay, I see a lot of trends and like I see how you could get to that conclusion, but it's like, nah, man, it could still get pretty wild, man. That's it. Like just wait. Like you think shadow ban is bad? Like wait till they just get rid of all of us. Just wait till like, you know what I'm saying? Like wait till it's just like you won't even hear anything and it's just gonna be like, okay, yeah. Why are you talking like that? What do you mean we just could raise the rates? What do you mean rate hike? Why are you talking like that? So I don't know, man. Flush in a little bit. If we get kicked off the internet, can we have stock market live in person? Well, we're going to need some form of internet. I mean, that's going to be otherwise. It'll be a mission to get quotes. It'll be a very difficult task, sir. I think all it's going to come down to is you're going to have like 3 seconds to communicate your thoughts. Otherwise, people won't listen. That's where we turn into that. Man, so the bonds came down a little bit off of that, so that popped in at last. Where's the dollar? Y'all thought Web 3.0 meant like big changes? No, it means you have 3 seconds to communicate your thoughts and ideas. Otherwise, you will not be able to grab anyone's attention. That's it. You got to be able to explain the stock market in 3 words. And then we're right at, we technically haven't hit a new low, but 308, 306, or 307, 306 right here. Pretty big. Where's that one I sold, ACIW? That ended up coming down. Went up a little bit more, 20 cents higher. WDC still rocketing. And then JPM did very good. But he came down a little. Actually, he's still kind of holding. Then where's Netflix? Oh, they came down a little bit. And then you're flush in here. A lot of, I think, volatility indexes or no. A lot of weird flashes there. Google on the low now. Apple, Costco. Oof. Even Costco is pretty low still, honestly, to start off the year. We're in the recession before the recession. That's a good way to explain it. It's kind of a lot like that. 10-minute rigged. Classic. Honestly, that final 5 be hitting, though. That's big money, though, that came in here. The volume actually is pretty large. What is happening? Dude, that was a fat order there. And it wouldn't even go down on that. So get ready. This is a big level. And now it could either really flush from here, or I would give it 5 more minutes. 308.04. The best play for what's happening in Mexico, I don't think there is a play. Again, it would have to be like a full-blown like war, and maybe it turns into that, but I don't think there's anything there of that nature that will call. Again, with especially we're American, man, so we don't give a shit about anything except the jobs report, sadly. That will be your biggest global news, and not too many people understand it, but that's tomorrow. So maybe afterwards, depending on what happens, but other than that, that's it. Bullish Mexican precious metals this year. I'm just bullish on Mexico in general. I like them. Mexico, any other, I mean, Brazil still too, but Mexico, good guy. UNH on the low now. Some healthcare drops. Everything's down solidly. $8:05. What time? 3 more minutes. Yeah, UNH healthcare is actually clapped. They're worse than financial, but even financials are down 1%. Everything is solid 1% right now, and then 1.5 on the NASDAQ, but like every industry. And then you have tech down 2, utilities down 2, real estate down 2. Yeah, they arrested El Chapo's son, and then there's beef. Bro, big 5 minutes is not even 5 minutes. Bro, these orders, bro, what? 2,000 contracts? And then, bro, that's 5,000 contracts right there. That was a lot of money right there. I don't know if y'all see that right there, but that is very, very big. It's very interesting how it's moving here. That's big volume there. You just had a lot of money trade right there. 63 million. That was like multiple segments of it. The final 5. So I'll give it like what? Another minute? 1 more minute till the final. But look, if it comes down now, I don't mean there's people buying at this level and people selling at this level. I mean, obviously there's somebody meeting on both sides, but that was big. That was bigger than even the Russia stuff there in the morning. Selling to open. Could be. I mean, somebody bought it or somebody sold it. You know what I'm saying? It's like, but it's just this sheer volume of it, of people trading hands at that level. And again, this is a huge, huge support level right around. I mean, there's a reason why we've tested it like what? 1, 2, 3, 4, 5, 6, 7 times in a day. I was trying to do something with that. I don't know what happened. 10 seconds till the final 5. The orders are being placed. Everybody's lining up on their marks. We've got a big order coming in on the left side. They're going out. They're taking it low, but it looks like they're clearing their orders. It's coming back up for the final 5 right there. Right on the dot. The final 5 looks to be breaking away over there. They're going for that big red line over there. They're getting into the red zone. It looks like they want to take a stab at it. Up, he's slowing down though a little bit. They made a big advance. A lot of orders coming in right behind here. They're up. Now you're coming right back down. They're not playing around here today. The offense had a chance, but the defense, they're still playing. The defense are still playing them right there. That's amazing. Oh, my goodness. Look at that pop. Final 5. Holy crap. Sorry. I've been watching too much Ted Lasso. See, Nigel can just show up whenever you want. That's a new one. It's like a mix between Nigel and a football reporter. Honestly, shout out to Ted Lasso. I call soccer football now. Honestly, I feel really superior. I see why they do that. I feel smarter. You know what I'm saying? I feel like, I really feel like, yeah, I don't know. Don't let him. Football is life. Danny Rojas, man. I love him. He's literally one of my favorites. I loved football is life. Let's go. Hey, I feel like that's me in the stock market, bro. That's it. I love it. I love it. Stock market is life. It's live, actually. Danny Rojas. Danny Rojas. It's great. It's great. All right, ladies and gentlemen, we're making our final approach. As we make our final approach, if you guys are holding on to any bags, please stow them in the overhead bins above or firmly beneath your seats, or be coming out through the aisles with the trash bag if you like to dispose of those bags. But as we make this final approach, we're going to be landing here into the second link terminal. Second link terminal in the description. That's going to be your nightly watch list and main channel layover around 4 p.m. Pacific time, and then we're going to be taking off promptly around 6 a.m. or actually 5:15 due to the non-farm payrolls out of sunny San Diego, California. So we make this final approach into San Diego International Airport. It's about 55 degrees. Rain is off and on. Not too bad, but hopefully the market will be a little bit better tomorrow. We are no longer under COVID guidelines, but we do ask that you exit one row at a time and drop a GG on your way out. As always, we appreciate you guys' business. If you're interested in your Cole Rapid Awards program card, please flag down their flight attendant, and we'll get you that as soon as possible. As always, thank you for flying with the coat, and hopefully have a wonderful evening. Let's go, baby. The final 5 didn't disappoint. You got big data tomorrow, right in the morning. We are going to be live. A lot could change, and it's the beginning of the year, and then CPI next week. But you got to bring it home, Chattadonia. Please start moving towards the exits. Please start finalizing your plays, and I hope you're ready and don't get trapped coming into tomorrow, baby. But 1 minute! Go, 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 go. Ladies and gentlemen, boys and girls, that is the day. You don't have much time. You better speak now or forever hold your peace. You got to bring it home. If you can't trade your asset or vehicle of investment of choice, you better get out of it now, or you better decide to go long. You will have a little bit of wiggle room tomorrow with the futures and shares, but you got to bring it home, and you have less than 20 seconds remaining. Oh, man, what a day. You did the dancing queen with a little bit of the Bullard bash. Oh, my gosh. 10 seconds remaining, baby. 10 seconds. Bring it home, Chattadonia. 6, 5, 4, 3, 2, 1. Ding 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 ding. Oh, let's go, Chad. Are you kidding me? We did it. We made it. Are you kidding me? Chattadonia, let's go. You know what you need to do. You made it 7 hours. I need that GG. Let's go. It don't matter if you made money or lost money. I know you learned something. I know you in the game. I know you're ready for tomorrow. You played your heart out. That's what I'm talking about. Good game, baby. Shout out all the people who contributed. Shout out all the members, the non-members, the stream alerts. We love you. All my laggers, all my lurkers, all my lovers. Why you being so shy? Why you being so shy? How you gonna make it this far and end up being so shy? Let's go, baby.
Look like a homeless, ain't got me no job, but my car got some home. Teach your ass not to judge.
Let's go, baby. I see you too, Switch. I see you too, baby. Let's go. That's how you start off the year. You still in the game. Tomorrow's gonna be crazy. Good game, dog. Let's go. Amen. Amen. Thank you for being positive and respectful. Good game, baby. Thank you for staying in the game. Good game, baby. Yeah, you kept that mentality in the right place. Good game, baby. Let's go. Amen. All the members, good game. Non-members, good game. Stream alerts, good game. Hey, man, y'all feel me? Wow. Oh, they gonna hit me with that one? Oh, they gonna hit me with that? We did it, we made it, baby. We did it, we made it. Stop playing with me. Trying to hit big, but it's SGDCULT. My team so different.
Off me, y'all weak. I think they speak more.
God bless you. Thank you for being here, Chad. I hope you had a wonderful day as I yell over the uncle. Hey, man, we did it. We made it, bro. We did it. We made it.
Trying to hit big, but it's SGDCULT. My team so different. Off me, y'all weak. I think they speak more than they do.
Hey, man, don't get me too hyped, bro. Don't get me too hyped. Chattadonia, that is the day. God bless you. I hope you know you're appreciated. I hope you know I love you. And for real, man, if you even made it here, 1.8 thousand, y'all really in the game. Let's go. Oh, God bless you. It's going to be fun tomorrow. I better see you here tomorrow. Remember, we will be early, okay? I'm going to be early just for you. Otherwise, I'll trade pre-market and enjoy my poop. Okay, for real. I could do that just as easily. But I know y'all locked and loaded. And I know you in the game like me. So let's go. You know, because I'm thankful for y'all. And I'm glad you're here, man. And honestly, I could tell you thank you every day. But I hope the hard work that we put in shows it, okay? Yeah, it's time to sleep fast. But God bless you. Y'all didn't have to like the video. So I love y'all. I'm going to tell you how thankful I am. But honestly, I just thought of something. Is like, why should I tell you how thankful I am right now when I could just tell you about these links? And I could tell you about the first link for the stream alerts, the boot camp, and the free reel. Y'all should go check the text messages. I want to flex it, but I don't want to flex it. But like, bro, have you seen the last 6 months of those long-term alerts? You know what I'm saying? We got clapped a little bit in the beginning, but I was like, damn, son, where'd you find this one? But listen, before I tell you thank you and how much I love you, before I tell you to go check out the watch list and check out the merch, man, and God bless you if you have supported. And shout out to all the members, baby. And, you know, follow me on Instagram. I could tell you all of that. You know what I could tell you all of it. But what's the point of me telling you that and then getting into a PHILO when I could get into the PHILO and then thank you afterwards? Oh, y'all don't feel me. So, Chad, let me go grab a water. I love y'all. Fill out that prayer request wall. But for real, thank you if you're going to be here. I might have to tell you afterwards, but I got something for you, okay? So run it real quick. Hold on. Let me get a little bit of a break, baby. Let's run it. Game time.
I'm just trying to taste some, so let me taste. I'm just trying to eat some, so let me eat. I woke up in beast mode, they still asleep. Told them hit they free throws and back on D. I could hold the L, bro, that's on me. Told them take the game slow, keep the pace. Looking at the table, my enemies don't know where I came from. I'm like E.T. Money ain't the motive, but it's service motivating. You ain't a hoe with love complaining and it's celebrating. You sell a home, you know I'd love to have a conversation. We was buying cribs before you knew about inflation. You ain't gotta give me credit, boy, the banks give me a lot of that. I meant it when I said it, we gon' take it all and give it back. I learned a couple lessons, the wisdom that came from all the bad. I learned the repetitions, I put that shit on my dad. My money ain't getting lag, I wanted could get it now, but I cannot force the hand. I buy that shit when it's there, your homie just look around. We did it, I say a prayer, we bit that shit from the ground. And the foundation they saying, y'all ain't feel it though. Nah, but we ain't need them though. I ain't being cocky, I just won't look in the mirror, bro. Doing more than talking, boy, the empire empirical. Every time I sign a dotted, boy, it still feel like I'm just trying to taste some, so let me speak. I'm just trying to eat some, so let me eat. I woke up in beast mode, they still asleep. Told them hit their free throws and back on D. I could hold the L, bro, that's on me. Told them take the game slow, keep the pace. Looking at the table, my enemies don't know where I came from. I'm like E.T. running. Market's gonna crash, but I could kick another lesson. Till the curve uninverted and I don't talk recession. Till the dollar was stronger, then I ain't really stressing. But the fact it won't crash it until the Fed admitted 15 on 50, boy, the kid already seen this shit. Only way to get tricked off bullshit is to believe in it. 2022, like 92, you should go read this shit. Japan and how they move might really make you think they lead this shit. Inflation, hot money, boy, it sound like today. I'm not playing, it ain't funny, even the fix was raised race. Both the problem and solution started with a central bank. Call it what you want, but that one cost a decade.
Free throws, baby. Defense. Outlet. Let me tell you, I just had an east side, so let me eat. I woke up in beast mode. As you better wake up tomorrow. You better wake up tomorrow. You know that. You better wake up tomorrow. Bright and early. You know I'm going to be waking up trying to get a poop out there. You better wake up, Chad. Oh, man. Oh, man. Man. I woke up in beast mode. Man. Chad. Are you kidding me? Are you ready? Are you ready? You feeling good? Yeah, it's PHILO time, bro. It's PHILO time. I got something for you. You know, and I guess technically this would be our first PHILO of the year. I've been slipping them in there, but I haven't had the time to just sit here and talk to y'all for a second. I've been slipping it in naturally because, you know, if you think about it, a lot of people's questions have been leading to the PHILO. So I don't think that's a coincidence. I don't know. Call it what you want. Call it what you want, but that one cost a decade. Oh, man. But I'm really glad with this PHILO, actually. I think this is a perfect PHILO to start with for the year, honestly. You know, if there ever was going to be a PHILO and a PHILO to start off the year, man, I love this one. I love it because I heard this the other day, and I was like, wow, that was like, damn, son. It was a good one. And I think you'll like this. It's very simple. It's not anything crazy. It's not anything too deep. And I'll tell you what the theme is. Are you ready, man? And I love it because I hope I could drill this point into your head And I hope that you've seen it by both example, and I hope that you've been around it and you've heard it enough where you actually like get into this. WWE is expressing willingness to explore sale. That's not the PHILO, but that just came out. Okay, but it's simple, Chad. I think we even ended the year a little bit with this. Okay? It's very simple. Chad, be thankful. Oh, amen. Oh, amen. Stop. Y'all feel me. That's just the appetizer. But for real, I hope this could be a good reminder. Okay? And now let me explain why. This might change your life right here. Because I heard this and this, man, I can't shake this thought. It actually stays with me a lot because I'm like, wow, this is actually wild. But I want you to understand, like, you ever hear like how people say like they worship God and right, like I worship the Lord, and people say I'm worshiping. Some people think it's like, you know, singing church songs, right? You know what I'm saying? And how some people, they like, I worship God, right? Right? You've heard that before. Well, let me tell you this one. I'm totally like, we're going to go 180 on this right now. So like, you could worship God and all that, right? But I just hope you understand this one little fact. Are you ready? Complaining is like worshiping the devil. Wow. So you see how we switched it up there? That's why I hope you're thankful. And that's why I hope you don't give in to any of the other thoughts, because legitimately, like just how like people singing to God, that's worship, right? And guess what? Being thankful is like worshiping, but I want to show you the other side. That do you realize like what pretty much the simple thing is, complaining to the devil is like worship to God. So like being thankful is like worshiping to God, right? But complaining is like worshiping to the devil. Oh, y'all don't feel me. Oh, I think you feel me. I know somebody feel me in there. I hope that hit you like it hit me. Because I was like, whoa, I never really thought about it like that. Yeah, I low-key be complaining a lot. Well, watch out for it. Because that, in a weird way, that's like, think about it. That's a different energy. That's a different spirit, bro. That's like, it's worshiping. Think about it. When you're out there complaining, here's the best part. Because like it even says it in the book. It says, enter his courts with thanksgiving, not complaining. Yikes. Yeah, complaining is a very weird energy. I never really looked at it like that. We've talked about complaining. You know, uncles even said it many times, you know. Don't be around complaining. You know, you don't complain. You know, like complaining is just like, it's a different type of thing, but I've never really looked at it as devil worship. Like, I just hope you want to, like, God, like, you could take it into God if you want, but I'm just saying, the devil wants to hear you complain. Yikes. I'll say that again. The devil wants to hear you complain. He wants you to think about the things you complain about. He wants you to put your mind on that. And so you get so caught up in complaining that you cannot create, or that you can't find any avenue to be thankful for. That's why thankfulness is so annoying. You see, that's why you never notice why some people don't like that attitude, because if you think about it, even if, I'm not saying things don't happen where you want to complain. You don't think I want to complain about things. You don't think I complain. I do complain. And that's a problem. But like, you got to think about it, because if you chose the opposite and are thankful about things, it's just a different way and a different path. Like, for real, where it's hard to get caught up in wasting your time if you're not complaining. It's way easier to be productive when you're thankful. It's way easier to wake up and drive and to start doing what you ever need to do while being thankful versus complaining. Have you ever noticed how hard it is to do things after complaining? I don't know if y'all feel me. Or I'm not in the mood. Why aren't you in the mood? What were you just complaining about? Oh, man. It's a very different attitude. So, Chad, I think it's a good way to start off this year. Just telling y'all, just a reminder of why being thankful is so important. But more so to remind you why complaining could be so dangerous. and putting your energy towards that, I hope you realize that the thing or the being or whatever you believe in, the thing trying to stop you from getting to where you should be and to live up to that full potential that you have, the thing trying to stop you, whatever invisible hand or invisible force you believe in, it wants you to complain. Oh, man. So, Chad, I hope you enjoy that. I got another PHILO. I could mix it in, but I want it to be simple. You know what I'm saying? And I hope this is something, if maybe you're looking for a New Year's resolution, man, maybe it could be not to complain. And I just hope you feel me on it, because it's not like I'm saying you don't have anything to complain about. And I hope you could be humble enough, and be real enough to realize every person in here has something we could complain about. We are all on so many different parts of the spectrum. All of us have different lives. So I'm not here to say you can't complain. But also I'm at the same time, I hope you realize everybody in here has their own valid reason to complain. I'm just here to tell you it's not going to help. Not going to help yourself. And the thing to stop you from your goals and to get where you need to go, it will be complaining. And that is just a way to get your mental energy focused on the wrong thing, my friends. So I think coming into this year, focusing a little less on what you're complaining about. The reason why we bring up thankfulness is because that's an easy alternative. Anytime you want to complain, maybe think about what you're thankful for. But just keep that in mind, that the complaining is not one of those things you need in your backpack along the mission. We all have something we could complain about, and all it will do is weigh you down as you are trying to move forward on your path that you have in front of you, my friend. You know, richest man in Babylon, it's like the budget. And all these things you want to put in your backpack. You're on, every single one of us is on a journey. So whatever you're putting in your backpack, the question is, will that help you along your journey or not? And unfortunately, complaining is only going to weigh you down. And then guess what? You're going to be like, it's too hard. It's too heavy. Okay, well, let's take out some complaining and see what happens. So, Chad, I hope you're ready. I hope you're blessed. And I hope you take that one to the bank. But that is your philosophy, ladies and gentlemen. Amen, bro. Amen. I noticed the other day, bro, too. I always be clapping. I told you. I don't know. There's like an energy and vibe behind the clap, bro. And I have a really extremely loud clap. It's very weird. I didn't notice till I was out in public, but then I didn't notice like on the real estate thing, because like, you know how like they called you up for the speaking, and you know how like people like you know, like if you like, oh, so and so is going to the stage, and like people like clap. I never realized how weird I am, because like, bro, straight up, like I would clap for myself. I never realized that. Like, if you ever gave me an intro and told me to come up on stage or come up for something, I'm going to be like I'll be clapping. No, it's crazy. It's crazy. Everyone looked at you. They looked at me with amazement. But no, I realized, because I heard everybody clapping, and then I started clapping. It was at like my nephew's little like Christmas thing, and I started clapping, and I could hear my clap above every other clap. And I was like, wait a minute. I was like, y'all don't clap that loud. Then I was like, how come y'all ain't clapping? I thought they were giving a half-ass effort. And then I realized maybe it's just me. And then I said, wow, that's crazy. And I said, hey, man, let's go. I got force behind it, bro. I got force behind it. But, Chad, that is your PHILO. And, again, thank you for even listening. And for real, I hope it helps, man. And I hope we could have a great attitude coming into this next year. And, like, seriously, yo, Chad, for real, though, I hope things were proven to you last year, both good and bad. But I hope you realize you're here for a reason. So let's go. Be thankful about it. And you've already made it through a very difficult year, bro. And you keep on the armor because you have the tools. And sometimes feeling like you don't have enough, bro, that's the best thing you could have. Don't forget that PHILO I told you into it, bro. Sometimes some of y'all got to realize the weakness is a very powerful strength, bro. I don't know if y'all feel me on that. So like y'all better wake up right now and just get into it, man, and let's go, man. And I hope you could take a moment to be thankful that you're here and thankful that you're alive and that you know what you know. You know what I'm saying? But don't worry about the future. Don't fret, my friend. You have the tools, I believe. Man, I hope they feel me, Chad. I know you feel me. So let's go, man. But that's the PHILO. Thank you for being here, man. Now go read the books, all of it, Richest Man Babylon, all that. But like, we need post-PHILO song. Run it. Let's go.
Yeah.
I've been liking this one.
Got a color, got a put. I can make the money both ways. Always. I can buy the whole chain, go away. Got a lot of love and throwing no shit. No games, small change. I just made my own band. Probably trading stats where you still at the snoring. Morning, scoring. I'm just bringing more in. Hissing the DeLorean, sourcing. You could throw your own in. Drop it like a ball when you holding. I'm shorting. Skinny motherfucker, but I'm eating. Seeking, scheming. I get paid for sleeping, dreaming. Hating for no reason, you a demon. Leeching, heating. Wishing you could be me. I told you I'ma do this, don't forget this shit a marathon. You make a move but stay in the same place, or West a Peloton. Make 100 off a phone call, now that's a telethon. Benjamin's, Jefferson, YOLO to a ghetto spread. Yeah, you know I've been there. Who's been like a Trinidad? I'm moving like a president, can kill me like a Kennedy. I'm trying to be a better me, but they just keep on tempting me. Release the demon, set him free, he come back, bring me 50 G's. Nowadays it's hella smoke, it game like I'm from Babylon. My capital got stamina, I wrap it up in lemon. Talking in new blabbering, but I'm not understanding, bro. You hating and complaining, but you still watching the channel, bro. I do this for the real ones, but the hate is still involved. I just closed another building, I'ma give it to my bros. It just took a little patience and it took a little hope. Yeah, the faith is never wasted if you reaching for a goal. Do this for the real ones, but the hate is still involved. I just closed another building, I'ma give it to my bros. It just took a little patience and it took a little hope. Yeah, the faith is never wasted if you reaching for a goal.
Lost a lot of shit, but I guess that's part the plan. Chattadonia.
It's a code, baby.
Treat this like my first. One more.
Treat this like my first.
I just want to hear the hook.
Treat this like my last. Anything could work.
Can happen slow or fast.
Smoking on that hope. I'ma need an ounce of that.
Our back was on the ropes, but we kept on bouncing back.
Treat this like my first. Treat this like my last. Anything could work.
Oh yeah.
Can happen slow or fast.
Oh yeah.
Smoking on that hope. I'ma need an ounce of that.
Our back was on the ropes, but we kept on bouncing back.
Treat this like my first.
Yeah.
Treat this like my last. Anything could work. Can happen slow or fast. Smoking on that hope. I'ma need an ounce of that. Our back was on the ropes, but we kept on bouncing back. Shout out to my rhymes. They help me do this right.
Wow. Chad, that's it. Don't let me go too crazy. I just start, we start vibing with it. We start going crazy, you know what I'm saying? That's it, man. It's just... So let's go, bro. Let's go. I'm not going to tell you it's your year. I'm not. That's just, I refuse to. I ain't never, that's it. I refuse to ever be a part of the group who's always like, this our year. No, man. What's going to happen is going to happen. You better be prepared for everything, man. But in the process, that complaining ain't going to get you anywhere. So let's go, man. Let's stick to it. Let's work hard. Keep working. There is always a reward for hard work. And that consistency will always pay you. But you got to pay yourself first. You know what I'm saying? Oh, amen. You got a chance. And that's all you ever need. That's all you ever need. You know that? That's it. We got a chance. That's it. We got an opportunity. If the wind is blowing, bro, that you got a chance, and that's all you need right there. I don't know if you feel me on that, man. All you need is a chance. That's all I'm looking for. Just give me a chance. That's all I need. So let's go, baby. You got big data tomorrow, and then next week, and then earnings and everything. So, Chad, I love you. Go read the books, Richest Man of Babylon, Proverbs, New Living Translation, and The Strangest Secret in the World. And don't ever forget why we're here and why we keep going and why we would be thankful rather than complaining and why that faith, hope, and love ain't ever going out of style, baby. Why? Finger to the sky, baby. To God be the glory and through the grace of God alone. Amen. Amen. Nah. Let's go. Let's go. Chance card. Amen. Amen, man. Chance card, bro. Just give me a chance. Just give me one spin. Wheel of Fortune. I don't even know. Prices, or just let me get a chance, bro. That's all you need, bro. That's all you need. I'm telling you, flip the switch, wake up and drive and realize all you need is a chance. You don't need anything. Just all you need is this is your chance. You get a chance. That's all you need. I don't know why I'm getting so hyped up off that. I don't even know how you letting me give a PHILO and getting hyped off of that on the back end like that, you know? So let's go, Chad. I love you. You have a wonderful, beautiful, glorious day. But I'm going to get going here now, okay? So it's been a good day. It's been a fun one. I'll see you bright and early in the morning. Better wake up early a little bit. Inshallah. God willing, bro. God willing. Amen. Amen. But that's it. I'll see you, okay? But I'm out. Peace out. Yeah, have a good day. You know how to end your day right here, but you can't stay here, ladies and gentlemen. You spent the whole day tuned in to 101.5 The Coke, and if your mama raised you well, you could clearly tell. You got a big day tomorrow for non-farms. Make sure you get that sleep. Make sure you drink that water, and make sure you always thankful, baby. It's been a good one, and we're gonna catch you later. Enjoy your day and enjoy your evening.